Happy New Year, investors. Scott Carson, the Note Guy here, and I am so excited about what 2026 has to offer us. Really believe it's going to be a year of profitability that we've never seen before. So many deals coming across our desk and across our email from banks, lenders, hedge funds. 2025 was a very productive and profitable year, but we truly believe that this new year is going to be unprecedented, unlike what we've seen since going back to 2014, 2015. And as a way for you, if you're brand new to real estate investing, brand new to note investing, it's one of your big things is that you want to buy your first note or take your note investing to a whole different level. We're doing an amazing recap for the next couple days here of our top 50 episodes, the best of episodes, interviews from the Note Closer Show podcast. We'll be running all day today, all day tomorrow, and all day on Sunday. That's January 2nd to the 4th. You can tune in live here. Hopefully, you're going to either catch us live on our YouTube channel or live on our social media or LinkedIn. However you're doing, please feel free to comment, ask questions, things like that. We will be monitoring the live stream. But yes, you've got over 36 hours of us going back and sharing the top episodes, top interviews, what you guys watched, what you guys loved, downloaded, commented, watched. We're going to bring back the best of the best, and we've got a long 12-hour day each day to help you tap in and learn from it. And yes, it'll stay up. You can watch us on the replays in our YouTube channel, stuff like that. But if you really want to get rock and rolling, here's the best of the best. Instead of you having to go and try to figure it out and piece it together yourselves, we put it all together in one spot for you. And we want to first of all say thank you again for helping to make our podcast the #1 podcast for note investors. That's right. The Note Closer Show, we've been beyond 1 million downloads for the year. We're coming up on our over 1,000th episode. I think I released 1,055 was our most recent episode we released on New Year's Eve. Got so much great content there, so many great speakers, and I want to say thank you from the bottom of my heart, helping to make us the #1 podcast for note investors out there, bar none, no questions asked, based on the downloads, episodes, and the length of the show, going now to our 9th year. It's hard to believe that, but thank you again for making it an amazing show. And yes, we will continue to release amazing content, live streams, webinars, deal breakdowns, case studies, great interviews in 2026. And we're really excited about what the new year has to offer. Yes, we'll be doing deal breakdowns on Note Night in America podcast that we've had around for a long time. Those will again be live on Monday nights and see how those go for you guys. But we will keep delivering 2 to 3 brand new episodes each week for you to take it to the next level. And if podcasting is not your thing, what's fine. We know a lot of you watch our episodes online on our #1 YouTube channel at weclosenotes.tv. Make sure you go over there and subscribe. Lots of great stuff there, short videos, long form content. Our webinars are live streamed there for you. Our coaching calls there for you. So make sure you subscribe to weclosenotes.tv. And once again, thank you for helping to make that the #1 YouTube channel for note investors. Just under 10,000 subscribers. We exceeded over 1.4 million. We'll hit 1.5 million here in January as far as number of viewers on there. Absolutely just blown away that you guys love what we do. And we will keep on producing great content for you as long as you keep on watching. So make sure you subscribe. WeCloseNotes.tv, the #1 YouTube channel if you're into note investing, performing, non-performing, whatever you might like. But if you're looking to get your feet wet this year and you really want to dive into it, we do have an opportunity for you guys to dive into it. We have an upcoming workshop. That's right, here in Austin, Texas, in the Q1 of 2026. That's right. Usually we do it online, but this year we're going to start off our first class of the year. It's going to be live and in person here in Austin, Texas, my hometown here, February 27th, 28th, and March 1st. It's a Friday, Saturday, Sunday here in Austin, Texas, north side of Austin. We'll have a lot of fun with some barbecue, fellowship, and dive into distressed deals to help you get a bigger piece of the profit pie in the new year for you. We'll show you how to raise all the capital that you need. We'll show you how to find deals. You don't need a new spreadsheet or a new formula or a new app. You got to go find deals, and that's what it comes down to. Starts off with them. There's nobody better at showing you how to find deals, raise capital, and put those deals together than yours truly, the Note Guy. So to RSVP your seat, you need to go to notebuyingfordummies.com or go to our website, weclosenotes.com, and sign up there. But notebuyingfordummies.com will take you to the direct page for the class. Get signed up there. We're limiting this to 50 people. We're below 40 seats available yet for you. Love for you guys to fill it up and get a great discount on the seat. I think prices are still 50 cents off on the dollar. So get RSVP'd. Ticket price is good for you plus a partner spouse. So come on in. We look forward to seeing you in Austin, Texas, February 27th through March 1st. Come stay. Fly out Sunday evening, not Sunday morning, Sunday evening, so you don't miss out on anything. But we have a great time there for you. But really excited about this recap for the year. You've got a great ton of videos today. We've got 20 videos on day one for you guys to take advantage of. And it's going to be a long but very productive day for you to sit there, listen, learn, and take your real estate note investing to a whole nother level. So thank you again for helping to make us the #1 spot for your education and learning needs when it comes to note investing and distressed debt. And once again, this recap is a labor of love for you guys to take advantage of all the great information, the great content, and just absolutely so proud and thankful for each and every one of you that are watching or listening to our show and podcast. So without further ado, let's dive into the best of 2025 recap and go out, take some action, and we'll see you at the top, everybody. Bye. Good morning, good afternoon, and good evening, investors. This is Scott Carson, and I'm excited for this episode. In this episode, if you're an existing and seasoned real estate investor, this episode might be a little repetitive for you. But I know as we roll into Q4 of this year, 2025, and we roll into 2026, one of the big things people start doing is looking at what they want to accomplish for next year. Or they start looking at what did they put down as resolutions or goals for 2025 and realize that they didn't hit them. Well, I'm always a big, huge fan of turning my new year into a 14-month year versus just a 12-month year. What do I mean by that? Well, I start planning in October of what I want to accomplish in the next year so that over November and December, while it might be slower in other cases, you might travel a little bit. You got Christmas, you got Halloween, you got Thanksgiving kind of all rolling in the new year. It's hard to get a lot of momentum going, but at least you can start doing some simple things so that 2026 becomes a much more successful year for you. And there are basically 5 things that I'm a big, huge fan of that you need to start doing so that you're prepared for January and February. Because what happens? Most people put off things till January, February, and they're already behind the 8 ball. January and February, you're going to see a lot of people want to do some things. And it's kind of like people going to the gym. It's packed January 2nd, and it's vacant by February 1st. You know what I mean? New Year's Day is kind of busy. Valentine's Day, people are already sloughing off for the most part. And I don't want you to do this because these are 5 things that everybody has to do. And from somebody who's worked with so many, thousands and thousands of real estate investors across the country through our podcast, and then also going out and working with hundreds of investors in their local markets, not just in the Texas market, but across the country. There are some really basic things to do, but you have to put them in place. And instead of waiting to the last minute, start doing it now for you, okay? Now, what am I going to talk about? Let's share my screen here so you guys can kind of see what I'm talking about. We can go from there, all right? This is not rocket science stuff, but these are things that are very important for you to do, okay? Now, I'm talking to you like you're a brand new investor, okay? Like you're a 5-year-old. Well, 5-year-olds are probably doing this, but let's just say an 18-year-old then because you're legally doing it. The first thing you got to do is you got to go get an LLC, all right? Yes, people say, well, can I use my self-directed IRA? Yeah. Can I use a land trust to buy? Yeah. But let's just be smart here, okay? Let's just quit trying to be the cheapest and the biggest know-it-all. Go get you an LLC. An LLC is pretty easy here in the state of Texas and costs you about $300 registering the name on the Secretary of State and going to get you a tax ID number from the IRS website. Obviously, if you're investing in Texas from outside other states, it's good to have a local Texas LLC. Maybe it's cheaper to do an LLC in Mississippi or South Carolina. If you're in California, you're looking to invest in Texas, guess what? You're going to pay an $800 filing fee to be co-named on an LLC anywhere. So that's what your fair weather tax is for living in California. The best thing is if you're living here, go get you an LLC, create a tax ID number, go open your checking account, savings account, those things. Those are exciting things to do. And those are much more important than going down and just filing like a doing business as. Doing business as gives you no asset protection. Yes, it's going to be like 20 bucks to do your local appraisal county recorder's office, record that, but go create your LLC. It's the first step of doing business. It adds value to you. You got a separate LLC. It's a little bit of asset protection. We can talk about that in a later episode. The next thing you need to do, go open yourself a self-directed IRA. Now, we're going to have an IRA expert on talking about the different options for opening a self-directed IRA, whether you do a regular traditional, a Roth, an ESA, opening an HSA, a solo 401k, a SEP, or doing like a checkbook access, a checkbook or self-directed IRA LLC is another option for you too. But going and opening a self-directed IRA, put $100 in there, get it started. It's so important for you to do because you can start using that. It will help you eliminate some other things and also start building a little bit of a nest egg for your retirement. And there's some great things that you can do with your self-directed IRA. Doesn't need to be a lot of money. For most of you guys that are working a regular JOB, to start your Roth IRA. If you're below what that income level is, start your Roth IRA so you have something to start putting assets into if you want to use the money in your IRA for a rollover, or just have it to start doing some things. Because you don't have to have a lot of money in your self-directed IRA. You can start doing some options and wholesaling and other things like that, or small note balances. There's a lot of things to use with small balances in your IRA. You might as well put it to work for you. So go open it up. Okay. Now, depending on where you're located. Now, if you're living in a major city, it's pretty easy to find a local real estate investment club or real estate investing association. Okay. The ways that there are two different ways. You can always go to National RIA, National RIA, that's REIA, nationalria.com, and see if there's a National RIA group in your local market. Okay. Now, here in Texas, we've got National RIAs are in San Antonio, Houston. I think there's one in Dallas as well. To take a look at it. But the ones in Houston and San Antonio are run by the same guy, and that's fine. You got Ray Sasser, I believe, is the guy that runs that for both of those groups. Or it's the one in San Antonio is called Alamo RIA versus the Houston RIA, but it's the Alamo RIA there. Join your local RIA group. Now go attend. Most of the time, it's not going to cost you the first time to visit. I would get out and start talking to people now. They're going to meet like once a month. There are probably, if you're in a bigger city, you're going to have multiple opportunities in different RIAs that work. But go out there, mark your calendar, go out and network on a Wednesday, a Thursday night, a Tuesday night. Maybe they meet on a Saturday morning. Go join your local RIA because that's going to come in very, very handy for points 4 and points 5. Don't be a stranger. Most of these RIAs will have members, and you can find out what's working in your market, but also how to put your team together. Now, I know many of you got in real estate because you don't want to work with people, you're tired of your JOB, but you're going to need a team of professionals no matter what you end up doing. Not that it's going to cost you anything to put a team together, but really you need to first and foremost, you need to find a real estate agent, all right, a realtor that works with real estate investors. And most people will know somebody that works well at the local RIA. Hey, I'm looking for a real estate investor agent to help me pulling comps, submitting contracts, stuff like that here local. And that's if you're investing in your local market. Okay. If you're investing out of state or out of your market, it might make sense for you to drive or fly to that market to attend a RIA club to start putting your team together. I mean, you can do it virtually. There's nothing wrong with that, picking up a phone call on Google and other things. But go to your local RIA and start connecting with people. Now, also, if you can't find anything on the national RIA, you can go to meetup.com. Meetup.com, put your city in. It's free to log in. Put your city and then type in real estate, and there's a little spot for what you're looking for. So real estate, it'll pull up a whole bunch of different groups and then pick on groups, not events, but groups, and then start looking at the bigger groups and see if they're still meeting or when they meet, okay? But when you go to the meetup group or go to the RIA club, start talking to people. Who's a good realtor you can use? Who's the local hard money lenders? Who's a good investment-friendly title company? Who do you guys use for closings? Is there a mobile notary? And then start looking also for other vendors like painters and handymen, contractors, plumbers, electricians, roofers, local hard money lenders who are lending money on fix and flips. Yeah, we do a lot with notes, but there are still also ways to fund deals through hard money lending. It's not using your own, okay? And ultimately, start looking and talking to other people who are potentially private money investors to fund you deals. I can't tell you how amazing it is to talk to people who have no clue about raising private capital. I was on a podcast yesterday with a guy out of Denver who's a realtor up there, and I was asking, he was moving, he's selling off his traditional rentals to move into the multifamily space. And I was like, oh, is that working well in your neighborhood? He goes, well, I don't know. I'm like, what do you mean you don't know? You're selling all your stuff to get off into it. Well, I'm looking for like 100 units in different parts of the country, not necessarily in Denver area. It's like, okay, that's fine. And he goes, I'm starting a fund. I'm like, that's great. By starting a fund, you're looking to raise capital. How are you marketing for capital? Well, I haven't gotten around for that yet. Well, you don't need to put a fund together to raise private capital. It's kind of like putting the cart before the horse. When you're starting off as a new real estate investor, you want to start talking to people about what you're doing. Find out, number 5, what's working in your market. Actually, if you want to stay in your local market, what actually is working? Is it wholesaling? Is it fix and flipping? Is it small balance apartments? Is it wholetailing? Is it Airbnb? Every market's completely different. Okay. And one thing we're going to be doing, obviously, is bringing on people in different markets out there for what's working, like we've always done before. All right. With our other podcasts, we've done that, seen in different markets and stuff like that. But if you're in the Texas market, yeah, we're going to try to bring on a local experts in for the whole how to invest series or how to invest in real estate series for you. And we're actually going to do one thing better for you. We're actually going to spend some time going through the bigger markets: Austin, San Antonio, Corpus, Houston, Dallas, and Fort Worth, and show you how to find private investors at your local county, the appraisal districts, the recorder's office. Texas is very friendly, and it's a great place to invest. We'll show you how to find those people and what to say to them, how to reach out to them to help you, because that's one of the big questions I literally get from people all the time. People want to get into wholesale and real estate, but they don't, or wholesale and notes, but they don't want to own anything because, and I ask them, why don't you want to own anything? Well, I don't have the money, or I don't have the credit. I don't have the financing. Okay, that's fine. Do you know about hard money lending to buy property? Well, do you know about that? Do you know about DSCR loans? We'll talk about an expert about that. I'm excited. We've lined up the head honcho over at Longhorn Investments, who lends across the state of Texas, to be on the podcast here. Or I want to do subject to deals. Okay, great. We'll talk. We actually got Alan Shesker, who's an attorney out of Austin, who really is educating people how to do subject to deals right in the Texas market. So we'll have him on. But find out what's working in your market. Talk to other people. Who's closing on what. Don't be a wallflower. Go talk to the president. Introduce yourself. Say, hey, I'm a new I'm a new real estate investor or note investor. Who here in this group should I talk to? Who should I sit next to? Who's doing deals that I can talk to? Because the reason you want to start going out in November, December, it's going to obviously get a little smaller. People are missing out for travel and vacations. But then January, February, and March, those are the busiest. That's when more people show up to real estate investing clubs than any other time in the country. It's also the easiest to raise capital because people show up with the intention of doing something. But do they usually end up doing something? No, they don't. About 90% of people don't do. So you, the 10% that I'm talking to is listening to this, are obviously doing something, right? So it's an opportunity for you to show up, to network, and get rocking and rolling. Now, there's other things that you want to do marketing-wise. Once you create an LLC, you want to go and update your socials, your social media like LinkedIn and Facebook about what you're doing. You probably going to want to identify after you go to your team. You could really put together like a one-page flyer. Who's on your team? What are you doing? Who are you using? Okay. And who's on your team is going to vary depending on what kind of strategy you target. If you're targeting notes, you're probably going to add a servicing company. If you're targeting fix and flippers, you're going to want to target basically who your lender is in a lot of cases, stuff like that. But that's the most important thing is start realizing these things. Creating an LLC could take you a day or a couple, maybe an hour once you get on the Secretary of State's website, making sure that the name's available and filling out paperwork, paying your fee, and then going from there. Open a self-directed IRA. You can go to any self-directed IRA company out there, and that would take about a day or two to get the account open, and then to fund it would take a couple of days, okay? Join your local RIA club. That's going to take you literally going to meetup.com or the National RIA Club and looking to see what's open, and then marking it on your calendar at 10. Show up. Trust me, people. Take some business cards. That's one thing you can create. Business cards? Who does that anymore? The real serious people still do business cards, okay? Of course, you can always put your LinkedIn QR code on your phone. I do that at different events when people don't have business cards or stuff like that. If I run out of them, like, hey, let's scan this, and we can connect on LinkedIn or Facebook, however you want to do that. Do you need a website? Yeah, you need to have a website, but you don't necessarily need a website right now. You can use a one-page landing page. You can get a free landing page if you sign up for like MailChimp as a CRM tool. And what's a CRM tool is a customer resource management tool. I like REI Black Book. We'll have Damon Ramey from Black Book REI on here. Is probably the best CRM for new real estate investors. We'll have him on here again for you. Talk about that. But those are little things you don't have to worry about right now. These are the big 5 things. The other stuff you can do is you fill in. A website's pretty easy. A logo's pretty easy to do. You don't have to spend thousands of dollars. Like the city of Austin's just spent like literally over $500,000 coming up with a logo that's a shitty logo. I could have created something just like that in Canva for like $100. Okay, so Canva's pretty easy to start looking at things, picking up colors, all that stuff that you'd like to have your logo. Pretty simple to create. You know, guys, just start adding things to your schedule to look professional. And yes, you'll need a website. You'll need to start probably creating some content about what you're doing and what you're talking about. And that's either for like an executive summary you create or like a YouTube video. But let's keep it simple here. Create an LLC. Go open a self-directed IRA and put $100, $200 in it. Okay. Join your local RIA. Okay. That may be 15 to 20 bucks a month to show up at an event. Okay. Put your team together, and your team consists, again, realtors, title, a closer, and a real estate attorney there locally that can help you with foreclosing or documents, or helping putting agreements together, okay? And then your vendors, painters, electricians, plumbers, roofing, okay? Probably even some, you may find some folks or companies that do all that stuff. And then also looking at and connecting with other investors in your area, your DSCR lenders, if that's something, DSCRM lenders, if you're doing that, like I said, your hard money lenders, saying your private investors, but building a network of investors to talk to. And as you go and connect with people, you grab business cards, start putting that into a database and start talking to people. Hey, let's meet for coffee or meet for over Zoom or meet for breakfast someday. One of the greatest things I always loved doing when I would go out on the road early on, when I first started working with investors 20 years ago, is when we'd start putting a team together. We'd go to a local RIA club. I would go out and spend 4 to 5 days with somebody in their market, okay? And the first thing that we would do is, okay, let's plan this one when your local RIA meets. And then we would meet with a title rep, a hard money lender, and then try to talk to a realtor or two, all in the same time frame to put a team together, to somebody to reach out to help them, okay? And then also, who else is on your team? Your coach, the person you're relying on. Maybe you want to throw me on your team there to help you out as well with questions. As always, you can book a phone call at talkwithscottcarson.com. I'm always glad to help you. And start that networking, start getting the word out to your database of what you're doing and what you want to do. It's a New Year's resolution. Hey, I want to start diving into real estate. It's one big thing. I want to start being a real estate investor. I want to be a landlord. I want to be a note investor. I want to be Airbnb. There's so many different activities out there, but it's up to you to find out what's working in your market or the markets that you want to focus on. Here in Austin, Texas, a lot of folks, I'm not going to buy in Austin, expensive, so I'm going to San Antonio. Oh, San Antonio is not working so well. I'm going to go to Houston, or I'm going to go to Corpus Christi, or I'm going to go to DFW. Doesn't matter. Identify what's working in your market. Make the choice to show up to your local RIA or local RIA in your market. Maybe you need to fly. Maybe you need to drive 2 or 3 hours. It's going to be well worth an investment of your time. Find out what events are going on. Many of your local RIAs are going to have end-of-year Christmas parties or vendor nights that you can learn from and connect with and put a whole team together, lead sources, foreclosure leads, whatever it might be, all together in one spot in just a few hours. All right. So those are the things that you need to do. If you've got these things, great. You're off rock and rolling. Now let's go find what's working in your market and then start that marketing to work it out. And I'm excited. We're going to have some different folks on. Like I talked about earlier, we're going to have Alan Shesker on to talk about subject to deals. We're going to have Micah Nichols, is my buddy from Probate Leads, U.S. Leads List. We're going to have the guys from Foreclosure Listing Service here, or the Roddy List, coming back on, Jack Zagunis, to talk about that. We're going to have Arnie Aberson talk about tax liens. And then we've also got a bunch of other folks, local professionals, to share what's going on in their market that's working for you. Okay. So like I said, if you have any questions, you want to talk real estate, figure out things, feel free to reach me at talkwithscottcarson.com. That's talkwithscottcarson.com. We are here to help you take advantage of what's going on. And make sure, guys, too, that you go and follow me on LinkedIn. And, I'm just the one Scott Carson there on LinkedIn. We're starting to see a lot more distressed debt, a lot more stressed deals out there. And if you're looking for stuff in your markets and stuff like that, reach out to me. Let me know what markets you're looking. We might just have some deals for you that you can dive into. So go take some action, and we'll see you at the top, everybody. Bye. Get going. Like I said, turn 2026 into a 14-month year, and you'll be a lot more successful by just taking these little steps to get done before the first of the year, because you never know what's going to fall on your lap come December. Because December, we see a lot of deals that get reduced and offered up at prices that you probably wouldn't see the rest of the year because they want to get it closed before the end of the year. So get started, go put this stuff together, and we'll see you at the top, everybody. Bye. Hey, real estate investors. So you want to dive into the world of note investing, but don't currently have the funds to sign up for an expensive class or a workshop or one-on-one coaching. Well, then you definitely want to check out the biggest bang for your buck in the note world, and that's our WCN membership. It get you an all-you-can-learn access to our class workshop replays, tapes, weekly coaching calls. For $97 a month, it's the biggest bang in the note industry because you get access weekly with me. You can book one-on-one phone calls with me. As we get different tapes in, we'll share them with our members after our one-on-one coaching students get access to us. We share a variety of tools, like I said, replays to the previous workshop, special discount codes to other events that you can take advantage of to help you get more bang out of your dollar every month. We've been investing in notes for over 20 years, and one of my biggest passions is helping note investors, big and small, get started buying notes. Yes, I got started years ago with no money, no savings, and no list. And I love helping people close on their first deal, get their first private funding partner to help them fund more deals and help them both make above average returns. If you're looking for somebody to help you take your note investing from 0 to 60 and want to get started, my WCN membership is a great place to get started. Like I said, we upload lists to it, video training, coaching calls for $97 a month. What can go wrong? The only thing we ask is you hang around for 6 months, and then if you don't like it, you can cancel. But check it out at noteumbrella.com. That's noteumbrella.com. That's our WCN membership. Get looking at assets today. Start putting your fingers on the trigger to pull the trigger on some note deals here before too long. Yes, anybody can buy notes. I don't care your age, your savings, what race, color, whatever it is. Note investing is all about what action you take, and the first action you should take is signing up for our monthly membership at $97 a month. That's noteumbrella.com. You can also access it by going to weekclosenotes.com and checking on the monthly membership. But we are here to help you. Scott Carson, the Note Guy. We look forward to seeing you at the top. Hey, good morning, good afternoon, and good evening, everybody. Hey, welcome to this episode of the Note Closure Show. This is a special episode that I believe everybody and their dog, friends, neighbors, family members, to-be friends, business colleagues, this is one of the required classes, required special episodes that everybody should watch. If you want to have an episode that has a six-figure improvement into your bottom line financially, credit-wise, fundability-wise, then this is the episode that you want. If you're looking to get you lines of credit for your business entities so you can go buy more notes, buy more real estate, or lend more money on private lending side, or you want to save more money when it comes to buying a house, buying a car, negotiating things that you put on credit, then this is the episode for you. So we are honored to have our good buddy Merrill Chandler from getfundable.com join us here today. Merrill is the Messiah, the Neo, the guy that can walk on water when it comes to helping you with the credit and get your business and personal credit. No, this is not, we'll help talk about credit repair. No, we're not going to talk about going out and getting a Dun & Bradstreet number. We're going to talk about specific things because you guys have to realize there's over 300 credit myths out there that are falsehoods when it comes to buying, funding, getting credit in 2025. There's a lot of people out there talk about things that are not truthful anymore. And the only guy that I know who goes above and beyond is our next guest here, Merrill Chandler. So he's a good buddy. We've known each other for, 15 years now. and just
Oh,
honored to have him on here. What's going on, Merrill? How you doing today?
I'm so excited to be here, Scott. Thank you so much for having me again, and the timeliness of us meeting, because there is so much going on regularly among lenders. FICO shifts in policy that we need to stay up to date, right? The lenders are evolving, FICO's evolving. If we don't evolve, we're left behind, and that's what today is all about.
Amen to that. Amen to that, definitely. Because like I said, I've learned so much from over the years. It saved me when I bought vehicles. It saved us when we got our house refinanced. It saved us when we got business lines of credit, when we got our credit card limits increased. It's just been a huge asset, not only just to me, but I know you've helped people put together, hundreds of thousands, if not seven figures in business funding credit that they can use for a
Yes.
variety of different reasons. That's just phenomenal out there. So I'm going to shut up. I'm going to let you get rocking and rolling. I know you've got a presentation. We don't want to take 4 hours of people's lives just talk about how amazing you are. Let's just go ahead and show them how freaking awesome you are. All right. Here's
Awesome.
the
Well,
new F word,
yeah,
fundable.
fundable. All right. So thank you again. Amazing opportunity to be here, and I'm going to share my screen, and we're going to get to this and there it is, and here it is. All right. So everybody can see the big welcome.
Yes,
All
they
right.
can. Good.
Welcome, you guys. I'm glad to have you here. The intention today is to discuss the 5 steps of the funding approval path. Period. Simple, elegant, and this is not hard. It's just we need to know how the rules work. Think of it as a game of Tetris. A little bit of practice, a little bit of clarity, and you can master the game of Tetris, right? That's all we're going to be discussing in lenders' underwriting criteria, the approval guidelines. We're going to make it simple so that we can all understand. And there are areas in which we get stuck. We're going to discuss every one of those areas and what to do about it. So, first of all, are you a real estate investor, but you don't have access to the cheapest money out there, right? Are you stuck because you don't know how to get the lowest cost funds, or you don't believe you'll qualify because you've either been denied before or you don't have the documentation you believe you need to be successful and get the approval, right? Well, you are not alone. Our community of thousands of people have just sat in the very chairs that you're sitting in now. Some were worried, some were annoyed, some stressed, some even pissed off because they didn't have the money that would help them grow their real estate, grow their businesses, right? Now, not only just grow their businesses, but is it too much to ask for better credit card limit increases, best car loan and rates possible, even the ability to afford a better home on lower costs, right? Like you, everyone in my community wanted to get the credit, the financing, and the funding that would propel their lives forward. So, do you want me to help you get these personal business credit financing and funding approvals just like I did for them, and without spending tons of time and money and effort? All of this so you can get financially unstuck and move to the next level of funding opportunities. What if I could say that many of you, maybe most of you, could get this done in the next 120 days? Would you want me to help you do that? All right. Here's why. Formulas equal success, especially successful. So let me tell you a little bit about me and how I got unstuck. I sat in the very chairs you're sitting in, frustrated by the very things, the lack of capital, right? So I'm going to share what I'm sharing with you today. I've personally acquired $2.462 million in business credit financing and funding, and using this exact process that I'm going to be sharing with you. And I've helped my community get over 300 million in approvals, 300 million in these very financing, funding, and credit approvals. Now, you might be asking yourself, how is it possible? How could we be in 2025 and you didn't know all of this already? Well, I'll tell you how I did it, and I'm going to reveal you the very details in just a minute. But first, let me ask you a question. Very important question. Have you ever met an underwriter in the wild? Yeah, those mythical creatures, right? Like leprechauns with their pot of gold. The pot of gold is a funding approval. What if you could sit down with an underwriter who would tell you exactly what to do to get approvals for multiple unsecured stated income business lines of credit? $100,000 business lines of credit. If you had that chance to sit down with them, would you? Well, I actually got to do just that. So there I was. I'm at a business conference sitting at dinner after a day of trainings, right? A gentleman comes up and sits at our table, and he was listening to those of us who were already there talk about our day, what we did for business, etc. He joined the conversation and introduced himself as Will Lansing, the CEO of FICO. Now, you may think of FICO as your 3-digit score, just like I did, right? FICO credit score. But that is the least of it. FICO software is used in over 90% of every single lending decision, both personal and business. Their software is what lenders use to approve you. The score is separate. Making sense? Their software drives the approval process. So there I am, sitting with the man, and he says, my clients are lenders, and I'm very interested in anything that would make more credit-worthy borrowers for my clients, right? Now I'm sitting here going, pick me, pick me. He asked, the first thing he said was, are you credit repair? I come to find out FICO hates credit repair. So I told him that we optimize borrower profiles, both personal and business, that we were not credit repair. And then he says, well, if you're interested, I could arrange for you to meet with our credit score development teams, both the personal credit and the business credit scores. So you can ask them any question you want. I can't guarantee you they'll be able to answer without kind of giving away the secret sauce, but I'll let you ask any question you wish. Now, I'm kicking my partner under the table because this is insane, you guys. This is the most, and to this day, this is the most powerful personal business interaction of my professional life. It was going to be an awesome opportunity for my community of borrowers to get validated what we've been doing for years, right? And so soon thereafter, we met with the personal and business and lender development teams. If you look in this, in the graphic that you see there, Dave was with SBSS, that's his business scoring. Joanne was the lender underwriting liaison. She's the woman who marries the lender, the Chases and the Wells and the PNCs with FICO software for underwriting purposes. The NDA police was there to make sure that they didn't give away the secret sauce. Julie and Janice were the personal business team, the personal credit score development team. And on the far left, in a separate meeting, the chief scientist, Ethan Dornhelm, who I'll be quoting here in a little while. This was insane, you guys. In short, we were able to sit down and ask over 100 questions to validate some of our credit assumptions. Now, they totally made fun of a few things, and they validated amazing amounts of our tech, right? What we learned and confirmed in those meetings became the foundation of what we're talking about tonight. Now, I've been collaborating with them for for 8 years, and been working specifically with individuals there for 6 of those 8 years. Now, why is this important? Well, I'm the only borrower representative with this kind of access, and that means my community, which includes you now, have access to this inside intel on how to get approved. That very question I asked, would you sit down with an underwriter and ask, what do I need to get approved? We did, and that's what we're talking about tonight. All right, so I'll let one of the FICO team members speak for themselves. This is Glenn, and Glenn said, Merrill Chandler knows more about how to use the FICO score than most FICO employees do. That's awesome. That's a flex, but I'm going to take it. FICO provides analytics and creates a score, but Merrill shows borrowers and business owners how to apply the FICO metrics in their financial lives. Merrill's approach is far distinctive and far more impactful than the myriad of credit and funding services and personal financial websites. Guys, I just met with him 10 days ago on our most recent collaboration on how to work with small business owners, chambers of commerce, etc. Right? So, now, that's not all. Will Lansing assigned us a FICO liaison, David Smith. And this, take a look at what's in yellow there. 20 years of experience assisting banks and financial institutions improve their originations processes. That's his job. He's the key account partner and the small business segment leader. I'm telling you that you can trust this, not because I'm telling you, but because this training comes from the credit approval source. It is not from me. But I've been honored to now call a David Smith my friend. Me and my community, we meet every Tuesday on our Credit Solutions Q&A calls, free to you to join. And he will attend regularly, and we tell people how to protect their credit so that they don't step on the funding landmines that are going to ruin them in the future, and they didn't even know about it. It's free to join, but he attends and he coaches my community on straight from FICO. But that it's not just about me. Senior FICO Director of Integrated Learning, Teresa Henry, even trained my partner and who is over my advisor team, and trained my advisor team to be better fundability advisors. Come on, you guys, you have to admit, this is amazing. We didn't just attend some conference and take some pictures with important industry people. Since FICO is not a borrower education company, they have empowered us to train personal and business borrowers to get approved, period. And as a result, not only does everybody win, but you win. And it's not just about theories and ideas. We have reviews from our awesome community that literally tells you where you sit right now, more and more and more testimonials of the proof that this succeeds. Now, that's all fine and dandy, right? Are you ready to take this to the next level and learn how to make it work for you? By the end of this training, you will know for yourself what it takes to get approved at the lowest cost, most versatile business credit lines. And my promise to you in this training is that, like everyone in my community before you, you will learn the simple steps to get from where you are now to getting approved for personal and business credit, financing, and funding that's going to help you reach your financial goals. So we took everything that we learned from FICO, all their high-tech risk management tech speak, and we created what we call the 5-step funding approval path. Simple, clear, accurate. And the funding approval formula is just that clear. It's simple and easy way to get impossibly wicked cheap personal and business credit financing approvals, regardless of the obstacles you believe are in your way. I tell you right now, some of it is just misrepresentation, and you have been led to believe something is true when it's not. And learning it will be to your benefit. Those obstacles do not have to be in your way, and we can get rid of the uncertainty, stress, and anxiety that comes with credit. You fill out an application, and we're all on pins and needles wondering. Our approval rate, you'll hear this from David Smith, our approval rate is 93%. First time out of the gate, first funding banks, 93% approval rate. And this is so you don't have to spend time, money, or already have credit. So only one thing makes all of this possible. Whatever your financial goal is, you have to have an approval-ready borrower profile. That's what you have to have. And this one thing that you see on your screen right now makes it possible. The problem is that our financial world is based on credit. So without it, you are stuck without the ability to improve your quality of life, especially as fast as you would like to improve it. Without it, you're stuck without the stability and comfort that we all crave for us and our loved ones. And if lenders don't trust you, you can't get the resources that are going to improve the lives of the ones you love, right? And you're not going to get them into the schools you want, the vacations, the quality of life, the new home, the automobiles, the opportunities to have a high quality of life, because all of the big ticket items require credit. And you can have the highest credit approvals with the lowest possible costs of interest and fees, right? So there are 5 obstacles that keep you stuck, and every single borrower I've ever met is stuck in one of these. So we're going to go through all 5 of them so you can see kind of where you are and what to do about it. If you overcome any one or all of these obstacles that are in your way, you have exactly what it takes to get what you want. So, obstacle number 1, you have a bad credit profile. You got late pays, delinquencies, charge-offs, collections, liens, judgments, bankruptcies. You got something on your profile that went delinquent, and that sends a message to future lenders that you are not ready for more opportunities, right? So that's obstacle number 1. Some of you have good credit, right? I mean, no delinquencies, but you have consumer borrower behaviors, high balances, too many inquiries, low quality accounts, you're too young of a credit profile, right? So and low value accounts, right? So so even though you might have good credit, quote unquote, you don't have optimized credit. You're not using the borrower behaviors the way that you need. So here's what I'm going to go off. I'm going to go off book here for a second, you guys, because this is really important. So bottom line is, let's walk through this process. Number 1. Your credit score has never, ever, ever, ever gotten you approved for anything, ever. That is the single largest myth that is promulgated throughout the entire financial marketplace. Your score has never gotten you approved. But let's go through exactly what has gotten you approved, okay? So we're going to go here, and so we're going to draw a red line right down here, okay? And this line, let's make sure you can see it. Perfect. This line is what we call a denial threshold. And I'm going to stop my share just for a second so that they can get a really good,
Awesome,
a really good thing on this. Let's go to boom. Okay. So we're going to start right here. Denial threshold. That means, and let's call it 720. It's not always 720, you guys. It's not always 720, but let's just call it 720 right now. That means any score below that line, you don't get credit offers in the mail for a particular bank that uses 720 as their denial threshold. You don't get invited. You don't get any marketing. If your score for that credit bureau that they're using, because you might have a bureau that's higher and a bureau that's lower score, there's 3 of them. Whatever score they're using, let's call it Experian. If your Experian score is under that line, you're not even invited into the Coliseum. Not even invited. Okay. But let's say you're above. I don't care if you're 721 or 821. If you're above, then all of a sudden, this is the inhabitants of borrower behaviors. There are 40 of them times the preceding 24 months. You guys, that is underwriting. Your score is not underwriting. Whatever your score, after you get past that, then that's when they throw you into that FICO evaluation software, the FICO approval software, to see. They're going to measure all 40 borrower behaviors over the preceding 24 months. This is what gets you approved, not your score. So let's say, boom, we got approved, right? Then and only then do they bring in the FICO score again, and whether you have a 721 or an 821, this is what determines how much money you get. 2,000, 20,000, 200,000. Your score is only used after you're approved. Are we getting this, you guys? Do we get this?
This is why folks that have paid cash for everything, that have great credit scores, don't get approved for things in a timely fashion or in a great fashion.
There's no borrower behaviors to measure with multiple revolving accounts, credit cards, multiple installment loans, home loans or auto loans or student loans. Everybody thinks, oh yeah, I got a 720. I'm going to get approved. No, that just gets you in the game. You might be sitting on the bench in the credit game. Okay, the funding game. We measure these. You either get denied or approved, and then the score kicks in, and it's called a risk score. FICO is a risk score. What are they risking? The dollars, you guys. They're risking how much money to give you after you're approved. All right. So I just had to go off book there, Scott, because that is the number one most horrible thing, and it gives a context for obstacle. Let's go back to obstacle 2. I'm going to share my screen again. Okay. Share 3. So obstacle 2 now makes sense. If you have consumer borrower behaviors, you don't have bad credit, you don't have delinquencies or collections, but you are not a trustworthy borrower because of your high balances, too many inquiries, all the things, right? Too many department stores, blah, blah, blah. So that's where so many people who have good credit, no delinquencies, still are unfundable because they're measuring your 40 borrower behaviors over the preceding 24 months, and they're throwing out your application. The obstacle number 3, your business data and identity are confusing. So banks don't trust if they don't know exactly who you are. You're too risky. And so we're going to address how to fix that. But there are 21 fact-checking databases, you guys. When you hit a submit button on business credit lines, credit cards, there are 21 fact-checking databases. All those data points have to be in alignment. It's simple, it's easy to fix, it's just meticulous, it's very detailed. Now, obstacle number 4. Some people have a great business, very few, but some people have a great business. But your banking partnerships have been established, but you don't have a relationship with influential bankers, right? No banking partnerships. What do I mean by a partnership? Well, let's break this down. You can either be a partner or you can be prey to the banks. How do you know what you are? How do you know if you're a partner, or how do you know if you're prey? Prey is high interest rates and low approvals. When I say low approvals, I'm talking anything from here to $20,000, $30,000. Those are low approvals. And you're at 20, 26% interest. A partner is prime plus 1% and 50, 100,000, 200, 250,000 in approvals. Okay. That's when you know you're a partner. So the obstacle is not having a relationship where they know you as a partner and completely addressable. All right. And then obstacle number 5, haphazard use of bank account balances and deposits. Lenders track how valuable you are by how much money you have in the bank in one account. I have clients come to me and they're like, I don't know why I can't get a dime from this bank that I've been at forever. And then I look at the schematic of how they're doing their banking, and they've got 5 bank accounts. All of them have a middling amount of traffic, but that you're not triggering the what's called the baseline balance or the traffic metrics. Traffic is deposits in, deposits in, and money out. Deposits in, money out. Baseline balance is what is the amount that your balance never goes below. When you don't have those right things, lenders don't care about you. Don't care about you one bit. Those are the 5 obstacles. Fortunately, the funding approval path is the perfect solution. It's the best, fastest, and cheapest way we've discovered to get approved for high-value credit cards from top-tier banks with bonus points that you've never even heard of because you're a highly desirable borrower. Auto loans. I can show you, I even have examples. I can show you people who have saved $8,000 on the financing of one automobile because of the way they use their credit intelligently. Home loans get the best possible rates, the best terms, and the fewest closing costs. Business credit cards. You want to leverage the business credit cards because how many of the listeners we have here, how many of you are using your personal cards to rehab, to spend money on business, but you're using your personal cards, and as a result, those balances go up and your fundability and your reputation goes down. We want to split, put business on business cards and let those business cards not be reported to your personal. Here's another freebie for you. Again, a bait and switch. Capital One, one of the biggest credit card marketers out there. They market the Capital One Spark card as a business credit card, but every month the balances report to your personal profile. So you think you're being a good businessman, a good businesswoman, and you're using your Spark card. Same with Discover It, by the way. Stay away from the Discover IT card. Reports to your personal. And so you think you're being a good business person and you're charging it up, holding balances, and it's crushing the soul of your personal profile. And your personal profile is the engine for all of your business, business credit. 100% of it. And so business credit cards are vital to this process. And then, of course, who doesn't want multiple $100,000 business lines of credit? Prime plus 1%, unsecured, stated income, no doc. That's what you get when you are a partner with these banks, right? And then finally, real estate rentals, property loans, being able to finance a tranche of notes, anything that you can that you want funding for, a bank is going to vet you to see if you are a credible and fundable borrower. And if you don't have all those boxes checked, they're going to turn you away at the door. All right. Now, I'm going to reveal the details to you in a minute. But first, you should understand why this works so well. So let's break it down. The funding approval formula, 5-step process. And let's take a look. First of all, we're going to minimize the negative effects of bad credit, right? We're going to minimize the negative effects. Number 2, we're going to align your borrower behaviors with the lender approval guidelines that's been given to us by FICO. Third, we're going to optimize your business data and identity so it checks off all those boxes when it comes to filing an application so that you get approved because your business data is dependable, it's trustworthy, and they can lend to exactly who they know exactly who they're lending to. Then we want to establish profitable banking partnerships. And then finally, unlock the approvals using the lender, balance, and deposit formulas. Those are the five, that's the 5-step process. Again, simple, easy, just meticulous. Once you're there, credit, financing, and funding approvals are ready for you. So now you see why the 5-step funding approval path is the best way to get the credit, financing, and funding that you want. And let me show you how people just like you got the same approvals that you will get, and many of them within 120 days. All right. So let's take a look. Robert, super successful fix and flip investor, but Robert was stuck because of his credit, right? The quality of his credit prevented him from getting the credit lines and loans. So he had to keep using hard money, using private money to fund his deals. He was spending, no joke, over $80,000 per year in hard money points and interest. And he didn't even know how to use, big investor, didn't know how to use that hard money going through his accounts to trigger positive approvals for his credit lines. Now, maybe you know someone like this, someone who's using hard money because they don't know how to fix their problems, right? Well, when he saw a presentation just like this, he was curious on how to prove the situation. So he says, Merrill, I haven't got a lot of time. Does that sound familiar? I haven't got a lot of time, but we put him through all 5 steps. Minimize the negative effects of his credit profile, align the 40 borrower behaviors with the lender guidelines. We optimized all of his business data and identity with the 21 fact-checking databases. We established the profitable bank partnerships with proven $100,000 credit lines. Some of you guys are going to banks. You've been in relationships with banks that will never, ever give you a credit line. And you don't even know it. And you just open it up because for whatever reason. So we just helped him pick the right, what we call funding banks that have access to these $100,000 credit lines. We unlocked the approvals using the lender, balance, and deposit formulas. Now, this is what he has to say in his own words. Credit score has gone up. Hang on just a second. I forgot in the share. We're going to do this again. In the share, I need to share the audio. There we go. Here we go. And share the screen. Number 3.
Since starting with the program, my personal credit score has gone up over 150 points. One of the things that I was absolutely astonished by was how easy it was when I walked into the bank and just asked for a sizable line of credit, and it was the easiest application to fill out, and it was the least amount of hassle and interrogation. I provided absolutely no documentation, and I was able to 2 or 3 days later get, a confirmation that they had approved the lines of credit for both of them.
4 months later.
I could not believe it, Merrill. I couldn't believe it. I'm sitting there. The guy pops up on the computer as he's, entering the data. And he's like, you qualify for a $20,000 line of credit card, a business credit card. I said, yeah, you know what? Let's do it. He said, there's no credit pulls. There's no way.
No inquiry.
Yeah, let's do that. Then he goes a little bit further. They're saying that you qualify for up to $100,000 line of credit. Would you like to do that? Yes. Yes, I do. Next thing you know, $50,000 they approved. That's awesome. That day that they pulled the credit, they use Experian. My Experian credit score that day was 848. There it is. It was like perfect.
Okay. The thing we need to understand here, you guys, is that credit lines, he got up front, he got $50,000 of $100,000 approval. The line is $100,000. But lenders, as depending on how long you have been building a relationship with them, lenders treat credit lines like they do construction loans. They give you a certain disbursement. You go put up the foundation and the framing. They want to make sure you're not going off to Vegas and putting it all on red, right? So that is how, and then slowly charge it up, pay it off, charge it up, pay it off. You get access to all $100,000. So just remember that. I'm always talking about $100,000 lines, and then there's an upfront. So after implementing the 5 steps, just quick review. Score went up 150 points within 6 months. $100,000 business line of credit, 50 upfront. The same day, a second bank, $100,000, 50 up front. And 4 months later, a third bank, a $20,000 business card and another $100,000, 50 up front, for a total of $150,000 right now, and another 150 that he would be being able to have additional disbursements over the course of the next 6 to 12 months. Plus, we reduced his fix and flip costs over $20,000 per year. I'm not saying don't use hard money or private money. I'm saying have a stash of cash that you can use that is the cheapest money possible, and build so you can backfill with these credit lines. And cutting edge, if you're continuing to grow, use hard money. But I'm saying the cheapest money out there comes with no docs and no security. It required no taxes, no financials, no income verification, no inquiry, because of when they pull up the information, what that report says, what his credit profile says, didn't require an inquiry, you guys. It's true. All right. Now, Teresa was stuck because her borrower behaviors were out of sync with lender approval guidelines. She was commingling funds by using her personal credit cards for business expenses, just like I shared a moment ago. Her personal credit showed high utilization because of her business balances, and she didn't know how lenders were evaluating her credit. Her applications for every credit line, she had done 4 credit line applications over the previous 3 years. Every one of them got denied. And she was discouraged because her cash flow couldn't cover her growth. She needed these lines to be able to continue to grow her business. Well, we put her through those 5 steps. Don't need to repeat them. We put them through all 5 steps. It's a formula, you guys.
I did.
And here's what she said.
You said to do just a couple of things, and my score went up 30 points right away. And so within 6 months, my score went up over 100, and I was already in the 700s. So my score's nearly perfect now. And they all line up, and I was able to achieve, a $500,000 unsecured line of credit my first time out of the gate with my first bank. So that really put me in a position to change the game that I'm executing to change my retirement strategy. And in fact, I actually used the line of credit recently for the first time, so it put me into $1 million asset that I would not have been able to secure. And in fact, the bank, I was putting all the documentation together, and they called me and said, okay, we're done. And I said, don't you want the paperwork? And they said, no, your credit score is fine. In fact, it's unusually fine, so we're just going to give it to you. We don't need any more paper, and it'll be an unsecured line of credit. So $500,000 later.
You guys, $500,000 in her first approval. She is a note investor, and that asset was a tranche of notes. She took down that $1 million asset to fortify her retirement plans. No taxes, no financial. She brought financials just in case, but they didn't need it. And where she misspoke is it wasn't her credit score that was fine. It was her profile was so dialed in, she was bulletproof. And we built that bulletproof profile with her, just like we would do with you. So $500,000 within 6 months, and she got all 500 up front. No taxes, no financials, no income verification, etc. So next, Aisha and Derek were stuck because their business data was literally all over the map. This is crazy. She was in the armed forces stationed in Delaware. He was in North Carolina. Their real estate business was in Atlanta, and their funding entity was in Wyoming and was a restricted business. They had funds scattered between 3 different states, 4 different banks, and they repeatedly denied business, even credit cards they were denied, and didn't know why. And so they were both stuck in their W-2 jobs because they couldn't get any traction. Know anybody that could leave W-2 if they could get traction and get some resources to invest? Well, we put them through the 5 steps, same 5 steps, put them through the 5 steps. And after implementing, within 180 days, they were approved for a $580,000 unsecured real estate business credit line. 30 days later, the second target bank approved $200,000 unsecured bank credit card credit line combo. No taxes, no financials, no income verification, no docs. And both of them, shortly thereafter, were able to leave their W-2 jobs to start leveraging their funds full-time. All right. Now, Jason was stuck because his banking relationships kept him off his funding approval list. None of his credit cards were with his business bank. He carried business balances like Teresa on his personal credit card. He had low value consumer credit profile. He was a guy who wanted to save, $20, so he'd sign up for a department store card to shave off a few bucks, right? So he had a ton of consumer credit on his profile, which downgrades the viability, makes you a consumer instead of a strategic borrower. His operating account kept going below zero because of how he was doing his cash flow management. Tons of business, hundreds of thousands of dollars each quarter in business, but because of the way he managed it, it was going below zero. Bad juju to your hosting bank. His credit score was over 800 and his business revenues were awesome, but he was still getting denied. Put him through that 5-step process. Amazing results. After implementing those 5 steps, within 90 days, he was approved for a $100,000 unsecured credit line and got all $100K up front. 60 days later, that same credit line was increased to $300K. That's a 300% increase. 180 days later, the credit line was increased to $450. Same one. Second target bank approved a $150 commercial property credit line. So he had a commercial property and gave him another credit line, and a third bank approved $2.5 million retreat lodge on 624 acres. Here's what's crazy, you guys. Well, it's not crazy when you play the game, right? No taxes, no financials, no income verification, no inquiries, and no doc, because your financial reputation will speak for itself. He built a $500,000 production studio and his business doubled within 12 months. He actually optimizes other medical practices. Doctors come in, he trains them on his system and sends them out into the world. Straight genius. Another client who I call a dear friend. Now, Michael was stuck because he was carrying too much debt on his personal profile. He had 8 Fannie Freddie loans. Yes, you're allowed 10, but guess what? Even 8 was crushing his personal profile. His score was in the mid 600s, and the use of his balances and deposits weren't triggering any interest on the bank. The bank didn't care about him because of the way the cash was going through his accounts. All of his businesses had restricted business codes, and no one reached out to him for any kind of credit products because he was untouchable. 5-step process. You guys getting this? 5-step process. Ran him through it, and after he implemented it, the first target funding bank approved a $500,000 unsecured pledge credit line. 6 months later, they increased that credit line to $1 million, and 12 months later increased it to $2 million. Same credit line. He just proved that he knew how to use that credit line. And just like I said about getting the 50 of the 100, well, when he got the 500, he used the credit line according to our formula, and they literally doubled it. And then they literally doubled it again. Guys, no taxes, no financials, no income verification, and no doc. He's the only client to exceed my 2.462 million. He's got 3,600,000 in credit lines. Whew. Amazing, right?
Craziness.
Here's what's awesome, you guys. This process works for anyone who implements the 5 steps. The timetable may vary based on what you have to do, but it works. I have clients who literally have 800 plus credit scores and that are fundable, have been approved, and they still have derogatory accounts on their profile. When you operate from the idea of borrower behaviors, there are 30 borrower behaviors to counteract negative credit without removing a single negative account. I guess this would be a great time. I know of which I speak. Why? Because I co-founded Lexington Credit Repair Law Firm, the largest credit repair law firm in the world. In 1992, I co-founded and found out that you can't, within a few years, I found out you cannot repair your way to fundability, to getting approved. And so that started me on my journey, which I am now leading the charge to make sure that you have the tools, the strategies to get the credit approved, or the credit approvals that are going to move the needle of your life. So some people want to have high value credit cards, low cost financing, all the consumer big ticket purchases. They want the best deals possible. You get that. This process works to deliver that. Some people are unfundable. They might have a brand new profile. You might be wanting to get your teenagers up to fundable status. This process works to build their financial credibility, right? If you're recovering from financial devastation, we can rebuild a profile based on FICO principles, FICO funding approval principles. And best of all, when you implement the business strategies, it already includes all those personal strategies. This works for new real estate investors, experienced investors that's using any of the real estate strategies. Note buyers, multifamily, fixed flip, buy and hold, wholesalers, starting a business without needing credit card stacking, you guys, and expanding and capitalizing your business. So bottom line is it works for anyone who does the 5 steps. Recap. I shared examples of 5 people just like you and their results. I could share literally dozens and dozens and dozens more, over 150, that together we have built 300 million in credit financing and funding approvals. All you need, minimize the effects of negative credit profile. It is never too late. Align your borrower behaviors with lender approval guidelines, optimize your business data and identity, establish profitable banking relationships, the right ones at banks that will give you $100,000, and unlock the approvals using lender balance and deposit formulas. So if you're stuck because you don't know how to get the lowest cost credit, or you don't believe you'll qualify, and you want me to help you get those personal and business credit, financing, and funding approvals without spending a ton of time, money, and effort. If this sounds interesting to you, I have trainings and software between $97 and $997, and I have group coaching of $5,000, $10,000, and $25,000, depending on the speed, your qualifications, and how big you want to play. So the only thing you have to do is schedule a discovery call with me. I will be doing it personally. And so take a screen there, schedulewithmerrill.com, or take a shot with your camera, and then select your contact. All you have to do is click on Scott Carson, and you are ready to go. That's it.
Awesome. Great stuff. Very easy, guys. I highly encourage you to pick up the phone, schedule a call with Merrill there, because he will definitely take the time to walk you through what you need, what you don't need, how to really help you build that journey, build that path, get through those 5 steps to fundability out there. Merrill, if somebody's motivated, they're following through all your things, where do you start seeing changes the most out of that 5? Is it the cleaning up the different addresses and name changes? I know that was a surprise for me when I saw that I had like 35 different addresses.
Truly. Well, what we have found is that let's go to the discussion mode here. What we have found is that it's cumulative. Some people who have less than perfect credit, absolutely everything else they need to work on as well. But if you have good credit but bad borrower behaviors, you need to work on the final 4, right? And then if you've got good borrower behaviors, the final 3. So there is movement in every single one of these areas. So we're cleaning up what we call your personal borrower identity, right? Where there are thresholds of balances that you can keep or you shouldn't keep, but there are 5. Everybody says, "Oh, make it 30%." No, 30% isn't going to get you an approval. It might get you carrying a 30% balance might not even get you a credit limit increase because it's too much carrying on that card. So there are and those training programs, we go through all 40 borrower behaviors because there are it's too much to name. Your business might have the wrong the business codes, and so you're tagged, you didn't even know it when you filled out the name on if your name has real estate, properties, property management, any of those names, that's a huge red flag, and you get tagged, and now you're in a restricted business, and lenders won't even look at you when you're opening up your checking account. You are red flagged. It's insane. But when this is one of those things, right? We've all heard that story that says the entire conveyor belt system broke down, and the guy's like, "Bring somebody in. We're losing millions of dollars." And a guy walks in 10 minutes later, it's up and going again. He gives a bill for $10,000, right? They're like, "You were here for 15 minutes." And it said, "I know exactly what broke and how to fix it quickly." That's what this system is knowing what needs to happen on your particular profile.
Is there anything that people should put together before scheduling a call with you?
Great. Well, when you go to schedulewithmerrill.com, the instructions tell you to get a My FICO credit report. Now, and some of you are going to hear this and you're going to ignore me. Please listen. We don't use Credit Karma. Credit Karma uses fake scores. There's not a lender under the sun that approves you using Credit Karma, what's called Vantage scores. They don't use it. If a lender's not using it, I don't use it. Then someone will say, "Hey, I want Experian. I got an Experian." Well, you're wasting your money if you're paying for monitoring with Experian, because even though it's a FICO score, it's a soft pull, what's called a review score. No lender uses that score to approve you or put in the approval process. You need myfico.com. That myfico.com literally has 31 lender scores. It's no hard pull. You're going to get all 3 mortgage scores. You're going to get you're going to get 9 auto scores. You're going to get 9 unsecured credit scores. So I need a myfico.com. You want to know the truth about your situation? Then let's look up the truth.
And the great thing about it, guys, it will surprise you. You look at it, you will be surprised by things on there. I know I was. I know everybody that I've talked to who've gone through this have been surprised because things pop up there that were affecting them, not in a positive way, but a negative way. Like I mentioned, there's like 25, 30 different addresses from different properties that we've flipped, the different times that I've moved. I have 4 or 5 different iterations of my name that works
and that makes
you.
you unfundable because this is, you guys, these are computers. They're not looking at your driver's license going, yeah, that matches, so it doesn't matter what the name is. They're looking at names. And if there's Merrill Chandler, Merrill R. Chandler, Merrill Ray Chandler, that's 3 different people that they've got to suss out and see. So we help you consolidate all of that, just like we did with you, Scott.
Yeah, it's a huge thing. It's one of the most valuable things you'll know. And here's the thing. I guess a lot of us have felt bad because we had bad things happen in our past, judgment, late pay, stop paying on things, collections. Listen, if you went through the 2008 financial crisis, guess what? Congratulations. You're human. If you went through the COVID crisis and had things happen, guess what? You're human.
You're human.
It doesn't make you a bad person. It doesn't make you a bad person at all. But the beautiful thing about this is now if you want to go and move and advance and get on with your life and move in a positive direction, you got to know where everything is at. And that's what this call is all about, is booking a call with Merrill, him to look at things, look at where you're at, and giving you a true reality check of where you're at, where you can go to. It's not a sales pitch. It's literally designed to help you understand things. And then if you want Get Fundable to help you, Merrill and his team, they're the best.
I want to address that. He's right. This is not a sales call, you guys. If you don't get it, you would suck as a client, right? If you get it, then you're going to prosper and you're going to win in this process. I don't have to sell it. I don't have to close you. You're like, here's what it does. This is what it costs. And I gave you, I just gave you all the windows and all the things. We just need to find out what you qualify for and what meets your time requirements. And do you want hundreds of thousands or do you want millions?
Yeah, we all want hundreds of thousands. We all want millions, and especially in this world with what's going on right now, the opportunities that are available.
We want millions and millions of dollars.
Now, the great thing here is, Merrill, you are also a real estate investor too.
Absolutely.
You do real estate. That's one thing I don't remember you saying. I know you've said on other things, but you're also an active real estate investor, not only in real estate, but you've also in the hard money private lending side of things too. You're leveraging your stuff to make things happen. So you have not somebody who's just focused on, you're somebody who understands, works with our students, walks the walk, besides just talking it. And 99% of the people out there just talk it, he walks it. All right.
Yeah. And I would love to have back the arm and the leg that I gave hard money investors, but at 2.4, and I'm not done, guys. I just had my most recent credit limit increases up another $110,000 in my own personals. So I have to update that. 2.462 is now 2.572. Yeah. So, but because it's addictive. Approvals, guys, talk about a dopamine hit. Yes. Forget doom scrolling, get an approval, and you're going to be like, I want more. I want more.
Good stuff out there. Good stuff. So once again, that link is what again? You had it up there for a second.
Yeah.
So it's schedule with
Merrill.com. And then just select Scott.
Yep.
Schedule with Merrill.com.
Well, it pops up the next. I just looked at it, so it pops up and you put the discovery call with the not the solutions call, but a discovery call.
Discovery call. Select, like it said, select the discovery call, and that will get you in front of me. You and I will partner on this and figure out what, if anything, you want to do together.
There you go. Perfect. Great stuff. Awesome stuff as always, Merrill. Thank you so much. Thank you
Thank
for
you.
your continued passion about what's going on. I know you posted something about Chase business cards last week
Yep.
as well, which is a surprise. And it definitely, I figured out on our side too. They did the same thing to us as well. So
Right.
working on that there. Thank you so much. I mean, just
This is cutting edge.
cutting
Stay
edge,
with us, you guys.
up to the date. We are filming this as of March 2025. This is not March of 2024, not March of 2020. You know, there's a lot of fakos out there getting
A
on
lot
the
of
right
fakos.
side out there with the legitimate guy, started at Lexington, just absolutely just a million miles a minute. And somebody who's helped so many people of our students go out there and take some action. Go get signed up, book that call with Merrill. You will not regret it.
No.
And then we'll see you on your journey to the top. Thank you so much, Merrill.
Thanks, man.
Hey, real estate investors, this is Scott Carson. I'm known across the country as a note guy. For the past 20 years, I've been buying distressed assets, primarily non-performing notes on residential and commercial properties. And if you've ever wanted to learn how to dive in to start buying non-performing notes from banks, hedge funds, or other investors like yourself, then there's no greater place than to get the nuts and bolts, the A to Z, the 1 through 99 place to get started. It is our virtual note buying workshop. We've been teaching this class since 2010 on how to find, fund, flip non-performing notes, how to get banks to call you with deals that you can cherry pick. And no, you don't need millions. No, you don't need a lot of experience to start looking at non-performing notes. We get the lists of notes from banks, hedge funds on a regular basis, not one or two or three or four, but hundreds of deals that we can evaluate and cherry pick. Whether we're looking for performing notes or non-performing notes that we can get reperforming, or non-performing notes you can foreclose and take back, whatever your niche or whatever you would like to focus on, we can help make it happen at the virtual note buying workshop. It's a 3-day class. Our next one is April 18th to the 20th. It's actually online live via Zoom. You get signed up by going to notebuyingfordummies.com. That's notebuyingfordummies.com. Day one is all about how to find these assets. How do you find asset managers? How do you find lists of people to reach out to that you don't have to spend thousands of dollars on postcards or letters that you waste money on? We don't do that. Day two is all about raising capital and marketing and how to create a business that feeds itself, that you can do part-time, 10 hours a week, 5 hours a week, depending on what your focus is. We'll show you a game plan to achieve deal flow coming in on autopilot versus you having to send a ton of money. And also, we'll show you how to raise capital like nobody else does. And then day three is all about the flip. How do we structure deals? How do we evaluate a tape to find the deals from the duds? All right. We'll show you what vendors to use. We'll give you a 200+ page manual, contracts, sample forms, all the stuff that you need to be a lean, mean note buying machine when you get wrapped up. Now, yes, this is live April 18th through the 20th online via Zoom. Get signed up today. We'll send you the replays of the previous online workshop so you can start learning, start evaluating material, and get rock and rolling. And if for some reason you don't like our class, we have 100% money back guarantee involved with it. At the end of the first day, you don't like what we talk about, you don't think it's impactful, just let me know. We'll refund back your tuition, no questions asked. We don't want your money. We want you to become a note buyer. We want you to become a lien lord, all right? Like I said, if you're tired of dealing with toilets, tenants, and trash outs, you don't want to deal with renters, then becoming a note investor is the path for you. Everybody evolves into a note investor at some point, but there are plenty of opportunities out there. There are millions of non-performing notes that you can cherry pick. No, it's not all junk. It can be small value all the way up to $1 million homes or $1 million apartments for you. So much opportunity is taking place right now in the chaotic market that we see. And who's going to come out on top? Note investors will. So take the time, get signed up today, April 18th to 20th. Go to notebuyingfordummies.com or go to our website, weclosenotes.com, and sign up for the virtual workshop there. As always, get signed up today. We run discounts all the time. The cost of tuition is you plus your partner or spouse. So get signed up today at notebuyingfordummies.com, and we'll see you at the top. Hey, real estate note investors, this is Scott Carson, the note guy, and I've been an active real estate investor for over 20 years. And for the past 15 years, me and my students have relied on one company to help protect our assets and also help to create our LLCs and different entities and business formations and our asset protection to make sure that we're protected and aren't violating the corporate veil. What company is that? That's Laughlin and Associates here. They're out of Reno, Nevada. huge fan of what they do and the customer service that they provide, not only me, but to my students, not only across the country, but across the world, especially for those looking to start businesses here in the United States, whether you're from Mexico, Canada, overseas. One company you want to reach out to is Laughlin and Associates. Aaron Young has owned this company for quite a few years. Laughlin has been around for over 50 years, and it's really the #1 place for you to set up your LLCs through the Nevada LLCs or Wyoming or Delaware Limited Trust. They're just an amazing company to not only create your LLCs, but also follow up with the regular bookkeeping that you need to make sure that that corporate veil surrounds your business and keeps you safe from ne'er-do-wellers. All right. And like I said, I have been a huge fan of them. We've used them for every LLC, every entity we use, and they do just an amazing job in answering questions and helping to set up also our future, our estate, our Rockefeller plan, our asset protection plan, not only now, but as we evolve and grow more wealth and more assets. Laughlin Associates is always there to help answer our questions and help structure the things to keep our assets safe. Don't you want to keep everything you've worked for, whether it's your business, your real estate, your investment, safe and sound from the folks out there trying to take you down a notch? Well, make sure you talk to the team over at Laughlin Associates. You can schedule a free phone call at 1-800-648-0966. That's 1-800-648-0966. Tell them that Scott Carson sent you, and they'll take good care of you. Or check them out at laughlinusa.com. That's laughlinusa.com. Trust me, that's one phone call, one meeting you will never regret. Good morning, good afternoon, and good evening, everybody. Hey, welcome to this episode of the Note Closer Show. And today is a very special day. I'm so excited. I can't deny it. I get so excited about the success of students, people that take our classes or sign up for our one-on-one coaching, who go out and close their first deal. And there is so much confidence and just positive energy that comes from closing your first ever deal, no matter what it is, whether you're selling tiddlywinks or wholesaling a property or getting your first funding source. There's no better excitement than seeing somebody, hey, I actually closed on a deal and I can do it. It's like that Rob Schneider guy from Waterboy. You can do it, you know? And today we've got a very special case. This is on a deal, one of our newer coaching students. He's been around since November, worked through a couple scenarios, made a bunch of offers and some stuff, good stuff, some bad stuff. Actually, not a lot of offers. I think probably about maybe 10 to 12 in total, but he closed his first deal in under 90 days. And this is a 28% ROI is what he's going to see in the first couple of years on this deal. And the great thing is he used his self-directed IRA to fund the transaction. So it's all going to be tax-free. All right. So I wanted to share this case study with you because I know a lot of people are, oh, you can't find deals, you can't find notes. And the truth is you can if you know where to look. If you're a coaching student, I'm going to feed you deals for us to work through and find you a deal that's going to make sense for you. This one is, well, it's not, he's not going to retire on this one note. It's not a bad way to kick things off on your note investing career. So let's get into this information. We'll give you the nitty-gritty behind it and kind of go through what would have been plan B or plan C if this doesn't stay performing. Now, it is a non-performing note. That's the great thing to think about it, but he bought it and the borrower is basically getting back on track almost immediately, okay? So it's not the greatest of properties. It's in northern Florida, Mayo, Florida, to be precise. That's a picture off of the exterior BPO. And so it is owner-occupied. The borrower's lived in there for quite a few years. It's in a roughly about a 15-year mortgage. The borrower has lived in the property a little longer than that, but they refinanced a few years back and unfortunately fell on hard times and haven't paid in the last year or two, okay? BPO value, $70,000. That's an exterior BPO. It is owner-occupied, power's on, taxes are paid in full. Legal balance is $58,000. They're about 12 months behind. So part of that legal balance of 58 is the $9,000 that they haven't paid. Now their monthly P&I payment is $792 a month. I think it's $792.84. We just rounded it up just for the heck of it. So $792 is the P&I payment. They're a year behind. Okay. So well, how do we find this list? The list came from one of our hedge funds that sent us lists on a regular basis. Over 300 notes that we could cherry pick from. we worked with him to identify 5 or 6 after going through the deals. We wanted to focus on something that's occupied that he could potentially get reperforming, because he works still full-time. He doesn't want something that he has to really do a lot of work with. And while performing is great, this non-performing one seemed to make sense. So he made an offer on this one with a couple others. What attracted to this is that, well, it's in Florida and does have a little bit longer foreclosure time. The lender had started the legal process, had just started it. So it's still looking at, a 9 to 12 month process to do that. Well, the borrower filed bankruptcy, Chapter 13, we found out. We get the collateral file in from the offer being accepted. We'll talk about what we offered in a second here. And they were already basically had submitted a bankruptcy plan through the bankruptcy courts, okay? And if you don't know what a BK Chapter 13 is basically the borrower, when they file BK Chapter 13, they have to fill out their disclosures. It's like a 9-page form, which is like the best due diligence you can find, because it's going to break down what they have in assets, what they have in expenses. And they have to submit a plan that basically in a BK Chapter 13 gets them caught up basically within 5 years. It's like a 5-year mod. Well, that's exactly what happened with this borrower. Is the borrower submitted a payment plan of paying $150 a month extra on top of their monthly payment plan. If they do that over 60 months, they would pay the $9,000 off, besides paying the $792 per month. So the lender had actually just accepted the payment plan in the bankruptcy course. So why they still agreed to sell this note, I don't know, but it's a win-win, total win-win. All right. So our student made an offer at $35,000. Actually, I told him to make an offer at 30, and they countered back at 35. I said the number still makes sense there. So basically, he's picking this note up at 50% of the fair market value, or right at 60% of the legal balance of the $58,000 and some change. Okay. Now he's using a self-directed IRA. He had an IRA set up. Every IRA is self-directed, but he had it with like a traditional investment firm. So we got him to open up his self-directed IRA with American IRA. Team over there did a really good job getting it open fast. The money got transferred relatively quickly, and he funded with his IRA. All right. Now he started, like I said, 90 days ago. Like the first week of November was when he first started. We had to make offers in the first 30 days. Obviously, the holidays dragged some stuff out. There was a form or two missing that we needed to get the seller to sign, that the IRA company would approve. That took about an extra week too. But anyway, it got all approved, and he funded on Monday on this deal. Now, he works full-time as a CPA as well. So he doesn't want something that's going to be 20, 30, 40 hours. He wants something that he can get to, work 5, 10 hours a week, and work to replace his income, or work to add more money to his bottom line. And if you're making a $792 a month payment plus $150, that's a pretty good return on investment. So let's go through that. So $792, existing P&I payment plus the $150 from the BK, that comes to a total of $942 P&I. Taxes are paid. I think there's insurance that the borrowers have. If not, he'll have his servicing company put forced place on it, and the borrower will reimburse him for that. Okay, so it's a pretty good payment. All right, so if you take the $942 in total, all right, and multiply it times 12 months, it comes to $11,304 in gross cash. I figured $1,500 in servicing costs would be kind of high, but we still put that in there just so we can figure that out. Because if it's a non-performing note, it's probably going to be $95 a month based on his servicer. He's using Allied as a servicing company. They get back on track, make a few months of payments, it'll drop down to like 35. But we just went ahead and put that in there just for the heck of it. Okay, so if you take that $1,500 servicing cost off of the $11,000, that equals to $9,800 coming in the first 12 months. Divide that by his cost, his purchase price of $35,000. That's a 28% cash and cash return for the first 5 years. If the borrower follows through and makes those payments, obviously they make double payments, it'll be a higher ROI, but making a minimum of $150 is a good deal for him in the first 5 years. Okay. Now, after 5 years, what happens then is that they'll stop making that extra $150 a month payment. They'll just be making their normal $792. You take $792 times 12 months, that's $9,504. If they paid on time for 5 years, it's now performing. So we're only going to deduct roughly $300 in servicing costs for the years, because it's basically $25 a month for a performing note. And so that's your servicing cost. So that basically he nets $9,204 in year 6 beyond. $9,204 divided by his $35,000 purchase price is a 26% ROI in year 6 plus. Now, is the borrower going to refinance? They might refinance. Who knows what happens? They get back on track. They didn't have a lot of outstanding debt. They didn't make much money, but they didn't have a lot of credit card debt and other things on there. So this is a plan that they can afford. Okay. Now, what happens if they can't afford and stop paying? Well, that's still a win-win for our student. So if they stop paying, then guess what? The BK is defaulted and gets kicked out of the BK court. He can restart the foreclosure process, start from where the existing lender left off. He turns around and sells it at the foreclosure. Now, you can always offer cash or keys to the bar. He'd give him like, I'm going to figure in budgeting $5K in foreclosure costs. Well, he could go to the bar and say, listen, you're going to get foreclosed on. You don't have that much equity. You owe 58's worth 70. Let me give you $5,000 to walk. He could do cash for keys and it'd be a good deal, right? That would speed it up a lot faster. But if he sells it at the foreclosure auction just for the legal balance, and that's what the LB stands for, not linebacker. If he sells it at the auction for 58, what's owed, because there is some equity, and we imagine that maybe it appreciates in value a little bit in 12 to 24 months. But let's just keep it that. So 58K minus the 35, and what he paid for the note would be a net of 23. A gross profit of that. Now, let's take the 5,000 of foreclosure costs off of that. Okay, and that's foreclosure costs is going to include some servicing costs in there too. Okay, so he's going to net 18,000 if he had to sell at the foreclosure auction because he's into it now for 40. So 18K profit divided by the 35 plus the 5 in foreclosure. That's 40,000 costs. That's a 45% ROI if he has to foreclose in basically a year. Now we're going to know in the next 90 days really if the borrower can stay on track or not. The next 90 days are the most important to get done. And he should get his first payment actually in the next 2 weeks. He closed on Monday. Servicing will probably take 2 weeks, so he'll get his first check probably by Valentine's Day. What a great way to fall in love with a note business, get a check in on Valentine's Day, right? Or the 15th, something like that. So now if it doesn't sell at foreclosure, then he's got to go through the process of evicting the borrowers and then turn around and selling the property as an REO or do a deed in lieu, like we talked about beforehand. Cash for keys to avoid the foreclosure is what I would recommend ahead of time. But anyway, so if he sells it as an REO, we're not going to figure out any increased value. I mean, who knows what that's going to take. I will say offsetting that. If it's owner-occupied, you know it's probably going to need paint and carpet. The exterior didn't look too bad. There's some landscaping and stuff like that. So the bar's got some pride of ownership. They're not going to, I don't think they're sitting there as a hoarder. But let's just say fair market value is 70. We're going to take $7,000 or 10% off of whatever the value is in closing costs and commissions to realtors, title fees, stuff like that. If he's going to sell it as an REO, listed on the MLS and sell, means he's going to net roughly around $63,000 net. If you take off the purchase price of 35 plus the 5,000 to foreclose, remember we don't have any rehab costs in here yet. That means he's going to $23,000 net profit. $23,000 profit divided by 40K purchase price and cost, it comes to a 57.5% ROI if it happens in 1 year. Now, if it takes 2 years, that's still 28.75 ROI. Pretty good in your IRA, right? Especially not your traditional, which is tax deferred. But since you use this as a Roth IRA, it's complete tax-free growth. You won't have to pay a dollar, a dime on this profit as long as he keeps it in his IRA and doesn't do something stupid to violate that, okay? And that's why you have a servicing company. That's a third party who's going to handle the borrower outreach, the communication. He's going to hire an attorney to foreclose. Now, he's in Portland, Oregon. This property is all the way across the country in Florida. We have teams there in Florida that can help if he does need a rehab. But this has got a new metal roof on the property. The property actually looks in pretty good shape, not a lot of deferred maintenance, which is phenomenal because he's not actually owning the property. He's literally becoming the bank and doing it, all right? Start to finish on this, it didn't take 90 days. It probably took about 30 days. Actually about 45 days now that I think about it. Because they originally wanted him to fund about December 27th. Well, they hadn't finished, the seller hadn't finished sending collateral files. Of course, Christmas delayed things by about a week. And then, yeah, I'd say really, truly start to finish is about 30 days on closing on this thing. From the time that it was got everything in on a timely basis and then going to the funding side. It took about a week. There was actually about a week and a half error delaying things because the self-directed IRA company just getting a couple documents. And then the lender wouldn't give a drafted assignment of mortgage, so we had to help create one real fast. Not a big deal. But the great thing about this is it's with a self-directed IRA. This is a Roth IRA. He's using professionals to do this. He does not have to go out and fix the property, deal with tenants, toilets, trash outs. It's all basically, if the borrower pays on time, it's a passive investing. If they don't pay on time, it's not passive, but he hires professionals to do all the heavy lifting. And yes, you guys can do this too. If you're listening to this, you're watching this video, and you've got money sitting in your IRAs or money sitting on the sidelines, yes, it would be great if you had millions of dollars. If you had millions of dollars, you can go buy a whole lot more. But guess what? Our student still works full-time, lives in Portland, Oregon. He started as a one-on-one coaching student, I said back in November 5th is when he got signed up, and he closed on his first deal. It's putting in $900 a month into his pocket, okay? On the other offers and the 5 or 6 offers he offered at the same time as this one, he canceled 4 through the due diligence. Actually, 2 he canceled because values came back lower than expected or they weren't in good condition. The other 2 was canceled by the hedge fund because they could not find the collateral fathers, missing documents they could not proof up. So they canceled it because there's no way we're going to buy a note that we have to foreclose on that we can't foreclose on. And so this was closed on Monday, January 27th, as I said yesterday. And I was so excited when he texted me, he closed on it, and he's just doing a phenomenal job. So if you want to learn how to do this kind of stuff, guys, I'm glad to help you. We have our upcoming workshop February 14th, 15th, and 16th here in Austin, Texas. We don't do a lot of live workshops. We used to do a lot of them, but we're doing back to doing 1 or twice a year. This is the first one in over a year. If you go to notebuyingfordummies.com, you can still get a discounted ticket. Normal full price is $1,500 for you plus a spouse. As I record this, there is still a discount code to drop it down by 30% for you before February arrives. So you can get in for $1,000. Come spend 3 days with me. It's a Friday, Saturday, Sunday here in Austin, Texas. We're on the north side of Austin, not the craziness of downtown. What are we going to cover? Well, day 1, it's all about finding deals. We'll tell you how we find these types of deals, who we talk to, what do we say, what we don't say, how to get these deals from banks, hedge funds, foreclosure lists, all that good stuff. Day 2 is about raising money, all right, and putting deals together. Even if you don't have your own money, we'll show you how to raise money, how to tap into a river of private money from self-directed IRAs and other people. Day 3 is all about the flip or the exit strategy size and making money, putting your deals together, structuring the deals, due diligence to evaluate tapes that come in, what's the deals from the duds, and how to find a great deal that can, A, make you good money, but B, if you don't have any of your own money to fund the deal, it makes a great return for not only you, but your funding partners as well. So get signed up. Go to notebuyingfordummies.com. We offer our no BS, 100% money back guarantee. If at the end of day 1, you sit through my class and you're like, Scott, I don't like you, I think you're blowing smoke, no problem. Just let me know. We'll refund back the tuition. No questions asked. And you can go your merry way. Get signed up. You'll also be able to attend the virtual workshop that we're hosting later in April or May at no additional cost. That's included as well for you. And of course, if you decide that you want to sign up for our one-on-one coaching later on, we do apply what you paid for the workshop towards that cost of coaching. So notebuyingfordummies.com. Get signed up. Shoot me a message. You can always book a call with me at talkwithscottcarson.com. That'll get you straight to my calendar, talkwithscottcarson.com. Glad to answer your questions, anything you have, and we're here to help you take your real estate investing to the next level. So hopefully we'll see you here in Austin in just under 3 weeks, but go out, take some action, and go make. Good morning, good afternoon, and good evening, real estate investors. Scott Carson here for another episode of the podcast, and I think you guys are going to get a lot of value out of this special episode. How do I know that? Well, based on what you listen to and what you tell me and the questions you guys ask, I do read my email. I do read the comments. And a few episodes ago, can't be specific, we talked about the 5 things that all real estate and note investors need to do before the end of the year, if not by the first of the year. And one of the most biggest comments about that, I would say, most amount of comments we got about that is how do we set up a self-directed account, or how do we make our self-directed account work faster for us in getting things done? Because it's all about speed, especially come the end of the year, closing on something before the end of the year, the end of the holidays, and taking maybe your money is sitting in your 401k or an old 401k or old IRA and putting it to work for you smarter and not make it harder for you to use. Well, this episode is all about making it easy for you and putting tools in place so that you can take advantage of the different opportunities that we see at the end of the year and help you close deals faster. Now, what am I talking about? We're going to dive into the details of self-directed IRA LLCs, having Checkbook asks, and I brought in an expert in this whole industry to be able to ask your questions about this. Now, this guy, he is a rock star at what he does. He is a self-directed retirement specialist, and he works with Safeguard Advisors. For the past 4 years, he's helped investors gain greater control of their retirement funds through self-directed plans that allow for alternative investments like real estate, private lending, crypto, startups, and more. His focus on making the self-directed process easy to understand and accessible for anyone looking to diversify and build long-term wealth. Who am I talking about? Well, we're talking about the big honcho, the big enchilada, Mr. Nick Sahagan, joining us today from Safeguard out there. What's going on, Nick? How you
I
doing today,
love
buddy?
it. Great to be here, Scott. I appreciate that. All things I've never been called in my life, but I sure do appreciate it.
You ever been called the big enchilada? Well, you're
The
not
big
from
enchilada,
Texas.
that's a first one for me. But I appreciate it. Making me feel real good about myself here.
Well, we want to make sure that you feel good because you're doing good things for people out there.
I
And
appreciate that.
it's funny, you reached out to me a few months back. We got to
Yeah.
talk about IRAs, stuff like that. And then I was like, I either missed the email, didn't get email went somewhere and I didn't see it, and you fall back, which I'm thankful for, because I was like, we had such a great phone call talking about different things that you guys are doing. And I was very excited to get you on the show. And now I think it was delayed for a reason, so as to get to the fourth quarter here to help folks
Yeah.
out there. You know what I mean?
I mean, this is crunch time. Yeah. This is really, like you said, this is the perfect time to get everything set up as you're wrapping up everything for the end of the year. This is just another one of those things to put on your checklist to make sure that you're prepared for the next year, going into, really all the strategies that you have at your disposal for building your wealth. So yeah,
Yeah,
everything happens for a reason.
It does happen for a reason, exactly. And I always look at turning my new year into a 14-month year. I start looking at October and November, and then using November, December to start putting things in place and planning and things rock and roll. And we see that. We see this at where real estate investment clubs have more people showing up first of the year to do some things. People are getting their Q4 statements on their retirement accounts. They're setting up new what we call that, indentures or endeavors for the year, New Year's resolutions. That's what I was looking for, what they want to do.
Yes.
They're tired of seeing their investments take a bit of a hit, and they want more control on controlling how their investments return for them, and dive into something besides what Charles Schwab or H.E. Edwards or any of those out there can offer for them, right?
Yeah. And I mean, that's really what we're all about. We're all about providing that education, making sure people know when you do see that end of year statement, you're like, what is my retirement money actually doing? Am I just, banking on the fact that, this line is going to go up and continue to go up for me, and then, 20 years, 30 years, whenever I retire, like what kind of control do I have in that? We just want to let people know that you do have control. You can break free from Wall Street and really start to bet on yourself, bet on what you know, the skills and the knowledge that you have, and let that do the talking. Let that make you money. Let that help you build, generational wealth and passive income.
And I think the big key is to start putting things in place before you get that January 1st statement from your credit cards and find out what Thanksgiving and Christmas cost you, right?
That's right. Yeah, you definitely have some surprises.
My credit card's at 20 some odd percent. Well, how do I get that taken care of and do some different things? Or if you're leaving jobs, or you've been laid off, like a lot of folks do, and what was it? Salesforce laid off like 4,000 people across the country. You see companies tightening up, and they've got an IRA or a 401k. Let's talk about, a lot of folks are like, well, I'm just going to roll it into my new 401k or my new IRA. I think that's a mistake for the most part, is that most people don't know that they can truly self-direct their IRA into those alternative asset classes like we talked about before, right, Nick?
Yeah, and I mean, that's really where a lot of people start to look into this option. They either change jobs or they get laid off, whatever the situation is. They come to this point where they're like, oh, I have this sum of money in my retirement account. What do I do with this? They basically want you to roll it into another solo 401k or another 401k, or they want you to take it as a distribution. And that really feels like your only options. And the more you know about self-directed, the more you know about being able to invest in alternative assets like real estate notes, like real estate in general, like crypto. Once you just learn about the tool belt that you have and the options that are out there, you can really start to make a better plan and think about how you can, like I said before, rely on yourself, stop relying on Wall Street, and take your retirement and your future wealth into your own hands. That's really what it looks like.
And your wealth in your own hands, allowing to take advantage of the different opportunities. And we know we got folks on here that are looking at distressed real estate or looking to buy rental property for the first time or something like that. And there's some specific rules that you can't do. You can't go do the work yourself. You can't go and use that fix and flip property, go staying in on the weekends or stuff like that. You can't have, what's the word? Immediate benefits. Got to be a arm's length
Right, yeah.
transaction. Because when you're creating a self-directed IRA, it's really you're creating a separate entity. It's not cloning yourself, but you're creating a whole different, let's just say, persona, right, Nick, that they can use to invest in, right?
Right. You're really creating an entity that you have direct primary authority over. In our case, it's either an LLC or a trust. We can get into what that structure looks like. Really, I think a good place to start is where I think a lot of people have heard of self-directed IRAs before. I think there's a lot of confusion between the differences between, even the different types of self-directed options that you have, because you have your traditional option with the stock market with all your conventional brokerages, and then you have your self-directed. Within self-directed, there's a couple different options that you can look at through there. One that a lot of people are aware of is something called direct custody. So direct custody is really where your custodian, the custodian that set up your IRA and your plan, is executing transactions on your behalf, and they're physically holding those assets for you. They don't set up an LLC, an additional entity, or anything like that. You essentially submit your investment request to them. You say, "Hey, Mr. Custodian, can I pretty please invest in this property over here? I see this distressed note, this non-performing note. Can I invest in this?" They have some processes to go through, some paperwork for you to fill out to do that. There's some delays and fees involved with that structure, and I mean, it really in an environment where you need to be autonomous, you need to have flexibility, control, and speed, it can really slow you down. It can really start to really be a hindrance to you even being able to use your self-directed retirement funds for what you wanted to use them for in the first place. I won't bash on it too hard because it is a great option. The
Let's
pros,
bash, Nick. Let's bash.
I
We
mean,
don't blow bullshit here. Okay. Let me tell you something. Not all self-directed IRA companies or custodians are equal. I've had stuff where equity bust, we'll just use a synonym, okay? An
sure.
AKA, what should take a 7-day transaction for funding for our students, where they've got the money sitting over there, they filled out the directional investment form, they provide all the documents.
Hmm.
In 1 week, 5 days later, where's our funds? Oh, we need another form another week. Okay, here's another form. Oh, you got a new person. I need to know the whole story again. So
Hmm.
the good thing about them is they're big. They've helped people get educated on the aspect of it. The bad thing is their service is horrible. And unfortunately, it's like that in a lot of the companies out there. You've got to submit your direction of investment forms, the documents have to be signed. And I'm going to tell you this here. I know you won't say this because you're a good guy. But almost every self-directed IRA custodian out there, when we're closing on a note deal, or one of my students is buying a note, has asked them to commit fraud to
Oh,
fund the deal because they want a copy of a signed assignment of mortgage before they release funds. Well, how is a bank going to provide a proof of funds or a transfer document when they haven't received the funds yet?
yeah. I
And
mean, the chicken, it means the chicken and the eggs. Like,
yeah, they don't
how,
understand. Like, we can't provide an assignment of mortgage or a
right.
launch because they haven't received anything yet. But you want me to fake create a fraudulent document. And that's one of my biggest pet
Mm,
peeves is the fact is like this is a bunch of bullshit. You see the contract, you've seen
yeah.
the loan sale agreement, you've seen the assignments of the other things.
How many other forms do you need me to fill out?
Yeah,
How much
exactly.
more
How many
proof do you
hoops do I
need
need
of
to
this
jump
asset? Yeah.
through? How many different people do I need to get on the phone that don't return an email in a timely fashion? That's what I love about what you guys do is you take all that out of the way, right?
Yeah. Yeah. Forget the processing delays, forget everything else. We're putting you directly in the driver's seat. I like to look at equity bust and these other direct custody options. It's more like you're calling an Uber. I mean, you're really putting your faith in their hands. You're saying, I need to get to this place. Can you please drive me there? They can look at that and be like, you want me to drive you 20 miles to this? No, I'm not going to do that for you. Or they do, and then you gotta, jump through the hoops. You gotta wait at this curb. I mean, you're waiting on them. It's their vehicle. They're going to drive you to it.
Yeah.
With checkbook control, it's really, let's get you a car. Let's hand you the keys, and you want to go there, drive there. Be careful. I mean, you're driving on the freeway. Remember the rules rules of the road. Be a safe driver. But beyond that, I mean, you know how to drive a car. Scott, you know how to drive a car. You know how to sell notes. You've been doing this for a long time now, had a lot of success doing this. Why are you having somebody else drive you around? I mean,
I love
if
that
you want to
analogy.
be more hands off, that's great. If you don't have time for it, I can see that. But if you know how to do it, and if you have the vehicle to do it, drive yourself there.
Hmm.
Take control, take the wheel, right?
Hmm. Well, and that's one thing we find, and this is a statistic that we've researched over years, stuff like that, is that we found that of the money sitting at the self-directed IRA custodians, 30 to 40% is sitting there in 0% interest-bearing accounts, not doing anything.
Mm,
Because those investors are waiting for someone to bring them a deal because they have to jump through the hoops. They can't go find something themselves that they can actually write a check to. They've got to be reliant on that. Whereas, as you just said, let's wait for somebody, let's get rid of driving Miss Daisy and put you in the
right.
driver's seat where it's easier to form these transactions and get stuff closed by writing a check and other things. But before we dive in, let's talk about maybe how it's structured a little bit differently, what is needed to get set up, and kind of talk about the mechanics of I guess, the paperwork to set this stuff up and go from there.
Yeah, so what you're looking at, and I'll pull up a visual here. I'm a visual
Okay.
learner, so it always helps for me to see things. Let me get this pulled up for
Sure.
everybody.
And if you're listening to this, you may want to jump over and watch the video. We'll put the link in the video there so you click on so you can watch it as well for you. But yeah, basically you've got the checkbook control SDIRA structure that starts off where you have an existing retirement funds, right?
Yeah, so we have this structure where it's kind of a treed structure with different layers. The very top of this structure is where you're getting this capital from, because everybody has this untapped capital in their retirement accounts that they just don't know that they can use for these alternative assets. That's where it all begins. So you have a previous employer plan, like we talked about. You have other personal brokerage IRAs that you have funds in that are just in these conventional assets. That's where it all begins. And really, it's as simple as being able to transfer or roll over those funds into a self-directed IRA. It's just like any other IRA out there. The only difference is these IRAs are set up with a custodian that allows you to invest in alternative assets. If you go to Charles Schwab, if you go to these other custodians, you're going to be hard pressed to have them help you buy a house with your retirement funds. They're just not set up for that. They don't profit from it, to be frank.
Yeah.
They're really just selling you the products on their shelves at the end of the day. So you need a custodian, you need an IRA that's set up to hold alternative assets, to be able to purchase alternative assets. That's the second part of the structure. So you're transferring funds. For those of you listening, I know you can't see this. Go over and watch the video. This is a really great visual for you to be able to grasp the concept. You're starting with existing retirement funds. Those are being transferred into the next level, the self-directed IRA. From here, you still need that vehicle, you still need that car that's going to give you the ability to drive the funds, to give you the primary authority. And that comes in with a specialized entity. So I may have mentioned this before. We set up a specialized LLC or trust, and that is the vehicle that you're driving. You are the primary authority. That means you're the manager, you're the trustee of this entity, and you have access to be able to direct funds from that entity. You're essentially a fund manager of that LLC or that trust is a good way to think about it as well. So with that specialized entity, you really just set up an LLC or a trust checking account, preferably at a bank that understands self-directed accounts so they're not running you with a bunch of questions. That's the great thing about Safeguard Advisors is we actually work with one of the nation's leading self-directed banking institutions, Solera National Bank. They've been in this industry for 10 plus years. And it's really just this place where you get to stop, set everything up, and go without having to worry about how many institutions you have to work with to get this set up. So you set up this LLC or trust checking account, as you can see here. And this is really where the rubber meets the road. This is where you start to drive. This is where things start to happen and you start to generate wealth. You have all these different investment assets that you can invest in. It's alternative assets as a broad term. Really, what that means is you can invest in anything allowable by law. Okay. A lot of the popular ones are real estate, cryptocurrency, private equity. But when it comes down to what the IRS is telling you you can or can't invest in, they're really only saying you can't invest in a handful of things. The first thing is they say that you can't invest in life insurance policies or contracts. Completely off the table. If you came looking to do self-directed IRA, life insurance policies or contract, I'm sorry, that's not what it's built for. The IRS says definitely no. The second thing is you can't invest in any subchapter S corporations. That's one that doesn't come up, doesn't apply to as many people. And then really the last big one is they don't want you investing in any collectibles. When IRAs first were allowing alternative assets, people started buying wine collections, people started buying collectible cars, and they were driving these things around. The IRS said, yeah, I don't think we want people doing that anymore. Maybe we should choke up on the leash a little bit more. So anything deemed a collectible, the IRS has a really good list of what that looks like. But anything else that doesn't meet those three criteria is on the table. So I mean, there's only three boxes here, but it's a wide spectrum, it's a wide range, it's a wide collection of assets that you can invest in.
Okay, so let's dive back in here this a little bit because I got a couple questions for you, as I'm sure they'll
Yeah,
pop up.
hit me.
Now, when you're rolling over your 401k retirement, or let's just say from Chase Bank, and
Sure.
you're moving it to a self-directed IRA, who is the where's that SDIRA at? Is that with you guys? Is it with a different bank? Is it with one of your competitors that's holding it, setting up, or you guys setting up the account? The money gets wired into that, and then it goes to Solero. How's that kind of work? You know what
Yeah,
I mean?
great question. Yeah, really good question. That will really help me help you guys see like how much of a one-stop shop this is. Let's start with what you typically face. What you typically face is you need three institutions to put this structure together. You need obviously a plan document provider who can create the specialized entity, the LLC or the trust. Because this can't just be a general purpose LLC that you set up on LegalZoom or with your friend attorney.
Or go down to the Secretary of State and get an LLC and a tax ID number?
Exactly.
Okay,
No,
yeah, okay.
it's a specialized entity that has to be set up in a specific way to be able to be owned by a retirement account. So that's the first institution you need. You need a plan document provider. Then you do need a custodian, like we talked about, who allows for self-directed IRAs to give you the access to invest in alternative assets. And thirdly, like we talked about, you need a bank to set up your LLC or your trust checking account. And heaven forbid you have to set that up at a Wells Fargo, at a Chase Bank, and you hand them an operating agreement that says that, hey, this LLC is the sole member is an IRA, and they look at that and say, excuse me, what? This is owned by an IRA. Do you need us to set you up an IRA? Let's set you up an IRA. And you say, no, I already have an IRA. So at the end of the day, you need a banking institution that understands this. So those three institutions, you've got plan document provider, you got a custodian, a self-directed custodian, and a self-directed banking institution.
Now, let me clarify something there. You said
Mhm.
something very, very important as an ex-banker. And I'll say this all day long. There's nothing wrong with banking at Wells Fargo, Bank of America, Chase, City, any out there.
No, great at what they do.
They're great at what they do, but their products, anything outside the box, most of the loan officers aren't going to be trained. And I can say this because I walked into it, being an ex-financial advisor, became a banker. I knew about IRAs and all that stuff, and most of the bankers didn't know, the checking account, difference between checking account and a savings account. All right. And then let alone say that you got to set up something with a tax ID that doesn't match up with your ID. That's going to blow them out of the water. And then it's going to lead to more problems because they don't know how to put it in their square box what they're trained for. So they're not trained. And then they also cycle through a lot of these, bankers pretty often. So getting with a relationship that understands it and that's what their focus is one of the most valuable things about this that will avoid issues. The last thing you want to do is set up something that gets bounced back because back office in Chase or City didn't like how it was structured, so they closed your account, which is seen happen many a time.
Exactly. Yeah, great point. And that's what a lot of people run into. They say, "Oh, I'll just set it up at my local bank." And I always, in my head, I'm screaming, "Please don't! Please don't go through that pain. Don't go through that process." And like I said, you have these three institutions that you need to make this structure work to be able to build this vehicle for you. Plan document provider, self-directed custodian, self-directed banking institution. We have all of that wrapped up in one setup process, in one setup price, and really one institution. So Solera Bank, they're, as I said before, they are expert self-directed banking institution, but they're also a self-directed IRA custodian. So they check those two boxes. We take care of all of the plan document provider side of things. So we set up the LLC, we set up the trust. That includes everything. We create the plan documents. We file with the Secretary of State. We take care of all the upfront costs that are associated with setting up the LLC. So it's really you fill out your safeguard application, and we take you all the way from the top of this list to the bottom of this list. So, and for those of you that can't see the visual here,
that's you basically one-stop shop for 3 entities that you need there, which is
exactly.
Good. So it's all
Exactly.
in-house, they're controlling with it. And just because you may live in a state Solera Bank's not in, you have online access, and you get what? You get access via a debit card, checking account.
Yeah. All the capabilities that you have with a bank account, sending wires, having people send and pull funds via ACH transactions, writing a check, having a debit card that you can use and utilize. It's all those same capabilities that you have now with just your retirement funds.
Well, I like it because it's at a different bank that you would be, so there's less chance of you commingling funds, moving. Oh, I got to move money over, or a bank pulling money out of your IRA account as an overdraft by mistake. I've seen that happen before. That's not a good
Exactly.
thing.
Yeah. And I've seen that too. I've had people come to me and they say, I just want to be able to access those funds. And I say, no, you don't, because the moment you touch those dollar bills, Uncle Sam is going to be very unhappy. He's going to be right there saying, hey, what are you doing with that money in your hand? That's retirement funds. You're not supposed to be holding that. So it is good. It is nice to have this. It's an online bank, so we serve customers nationwide, about 30,000 customers self-directing
Wow.
their retirement funds, all from their online accounts at arm's length, so it keeps it nice and compliant. You're not going to make the mistake of pulling out retirement funds and handling those personally, which is a prohibited transaction. Again, a really great solution, a solution that makes it so you're not finding one institution that provides the LLC and trust checking account, or setting up the entity, and they say, great, you got this set up. You paid us your fee. Go find yourself a custodian. Oh, great, you found yourself a custodian. Yeah, you'll probably want to find a bank account to be able to direct those funds. Oh, we don't do that. We have this list of providers that you can go with, but that's up to you.
Yeah.
So it really takes all of that mess out of it.
Mm-hmm. And that's the great thing, is it's basically right then. If you're to pull money out of your 401k, or even doing a rollover, all the major banks will take 6 weeks to send you a check, not an ACH or wire. They will take their time sending you a rollover check. I've seen it done many a time, which would drag it. And if you've got to wait 6 weeks for your money on a rollover, that's no good. Let's just say
Yeah.
it's not good.
No.
Now, before we dive into kind of prohibited transactions, you talked about the 3 big things: no collectibles, no life insurance policies, and then what was the third thing?
Subchapter S corporations.
That was it. Subchapter S corporations. Exactly. You can use your self-directed funds to partner with a lot of people, or to buy outrightly. Who are the folks you can't? I know you got a chart over here. That's why let's talk about where you can't send the money to, as far as lending money to or borrowing money from for a transaction.
Yeah, let's talk a little bit about prohibited transactions as well, because you're on the road. You need to understand the rules of the road. Really, what you're looking at is a prohibited transaction occurs when you interact, or I mean, the whole list is right there. I'm not going to read the PowerPoint to you guys. It's not where I'm here, but you can see this. It's really when you are performing any transactions with a disqualified person. It's things like selling things to a prohibited disqualified person, exchanging or leasing things with a prohibited or disqualified person, lending money, just all these things. Really, the big thing that keeps on coming up here in the IRC, in the Internal Revenue Code, is with a disqualified person. So it's super important, if you're a self-directed IRA investor with checkbook control, to understand who these disqualified persons are, who your IRA can partner with, and how you can go about this in a compliant way. Again, because you're driving the car, you don't want to get into a wreck. It will blow up your entire vehicle and your entire IRA. So when we're looking at disqualified person, the biggest thing I hear is that they're like, oh, disqualified persons. It's just my family. And I'm like, yeah, kind of. Not exactly. A lot of people don't realize that you have family. You have a lot of people in your circle of trust that you can actually work with. what I tell people is it's really just the direct family line, straight up and down the family tree, as you can see here. So you are definitely a disqualified person, you and your spouse. Um, you are not able to transact with the IRA directly, and that it extends up the family tree, what they call your lineal ascendants in the IRC in the fancy terminology, and your lineal descendants. So that extends, as you can see, if you can't, it extends to your grandparents, parents, and below you on the family tree, it extends to your grandchildren, your children, if they have spouses, anything like that. But what a lot of people don't realize is that if you move more horizontally on the family tree, as you can see here, all these family members in green, you have aunts and uncles, you have cousins, brothers, sisters, nieces, nephews that all can partner with and transact with your IRA without any problems or any questions from Uncle Sam or the IRS.
Now, let me ask you a question. If you're buying a piece of property and you've got 50% of it in your IRA and your wife has 50%, you can partner on buying an asset together as long as the profits are split up 50-50. You can't borrow that 50% from your wife where you fund the whole thing in your IRA, correct?
Yeah, here's an important caveat. Let's talk about that. Technically speaking, it's not advisable. And just for everybody out there, we're all just talking about this for educational purposes.
Right.
I'm not a tax or legal advisor in any way, but let's talk about this important caveat. You can technically partner with a disqualified person on your IRA. What you do set yourself up for is some situations that can happen where you put yourself in a big pickle, in a
Mhm.
really bad spot. For example, uh, let's say that me and my spouse buy a property 50-50, like you said, right? Okay. We have those funds split. We get a tenant in our property. They start paying revenue or income to your self-directed IRA. Let's say that tenant pays 100% of that rent check to you. You're not supposed to get 100%. You're only supposed to get 50%. So now you're in a situation where the only way to rectify that, the only way to fix that is by sending the other 50% to who? A disqualified person to your plan. So you really back yourself into a corner where you have to create a prohibited transaction just to fix the mistake of somebody sending you a check for 100% of the rent.
But you're also, let's talk another thing. The expenses are also supposed to be split evenly. If
Exactly.
somebody doesn't have money in their account, they've got to go put more money into it. And if you've exceeded your annual contribution amounts, you're stuck, Chuck. You violated it as well, right?
Yeah. And something that people will do to get around this, I'm not saying this is what you have to do. This is what I have seen
You're
people
not giving
do.
legal advice. Let's just put
Again,
it
yeah,
there.
I really got to stamp that on my forehead because that's really important. What I have seen a lot of people do to kind of get around that and to be more cautious when they're investing with these disqualified persons is they'll set up an entity that is owned by their IRA LLC. So kind of like another level to that structure where the ownership in that entity is split in the same value of the equity that you have in the asset. So with this entity, it would be split 50-50, just like the property with me and my wife. And essentially the tenant is paying this LLC that's owned by your IRA LLC. And then you from there can distribute the funds, in a way that makes sense and is compliant, right?
Much that, and that's the big compliant aspect of that. It's because we see this because when we're researching for private capital, we'll target IRA investors by just typing in IRA company names, and you'll see 40%, 20%, 30%, 10%, like 3, 4 people,
Yeah.
different names, same last name, but different names in one ownership. I was like, man, that's got to be complicated. They're open themselves up to a whole lot of issues.
Yeah. Imagine telling a tenant, okay, you've got to pay 10% of the rent to me. You got to pay 30% of the rent to my buddy Al here. You got to pay the other thing. I mean, so there are ways around it. Generally not advisable to partner with a disqualified person. Things you can do, like we talked about, but at the end of the day, it's best just to be safe. There are other people that you trust, that you know, who can partner
Mhm.
with you without having to do all these crazy workarounds. And yeah, best to be safe. Another thing, I don't think I touched on it for the people who can't see it here. Um, all of these people in red, all these people who are disqualified, if they own some type of entity, some type of business with equity exceeding 50% or more, that entity is by extension, that business is by extension a disqualified person or a disqualified entity. So
Yeah, so you
another
can't
thing to
borrow
keep in mind.
can't borrow money from your dad's business. your
Right.
kid's business, that kind of stuff. It just doesn't work that way.
And you'd be surprised that comes up. People are like, "Oh, it's not my dad. It's this business." I'm like,
yeah,
"That your dad owns, right?" And they're like, "Well, yeah." I'm like, "Well,
yeah, you're
disqualified. So I'm sorry."
exactly disqualified. The IRS can void the whole transaction, and you pay penalties on everything and lose your whole self-directed account
Yeah.
status. We don't want that.
Hmm. Exactly.
Now
Yeah.
this is so basically vertical. No good for your parents, grandparents, your kids, their kids, your spouse. You can do with your kids, your nieces, your nephews, your wife's, the in-laws. That's okay to do that with stuff like that.
Right.
So there are some people get around it. Let's talk about transaction fees and costs and stuff like that, because this is the one of the thing I think most people think about one thing, and that's like, what's it cost to set me up, and then what's my management fees and stuff like that. Let's dive into that a
Exactly.
little bit there, Nick.
Yeah, so when you're looking at the self-directed IRA setup and you're kind of pairing it up against your other option, which is direct custody, um, on the direct custody side of things, like you said, you're looking at transactional fees, really at every step of them processing something for you, them moving money for you, and it can get expensive. And you're also looking on top of all those processing fees, you're also looking at the fees associated with just sending the money. So if they're sending a wire, you're going to be paying the wire fee, all those associated banking fees, those are still there. Um, and on top of that, with all these self-directed IRA accounts, you're going to be paying some type of IRA maintenance fee, which is the fee for the custodian to be able to file important tax documents to the IRS at the end of the day. We can get into the weeds if you want to, but at the end of the day, they're filing things or on your behalf to the IRS so that they know that your IRA is worth so much. They know that you've distributed so much from it. Um, and
And
they
that's
and they charge a fee for that.
they charge a fee. Usually, I don't know, it varies like
It
1% or
varies.
more. Varies.
Well, I mean, it can vary even between if custodians are charging it based on your asset value or
Yeah.
if they're charging just a flat rate. With a lot of these bigger custodians, especially with direct custody where they are holding those assets, you better believe they want a pretty chunk of that asset that you
Oh,
have.
well, yeah, because that's made up money. So if
Yeah.
I invested 50 grand in a $100,000 note, what you have to do is by April 15th, send in a statement showing the value of the asset, right?
Mm-hmm.
And if the value of the asset is 100 grand, even though you haven't received that 50 grand difference, you're going to pay a management fee on that because that's the asset value in the IRA.
Right. So a lot of people will charge based on your assets. So I mean, if you start to accumulate a lot of wealth, it can get a lot more expensive to manage this IRA. The nice thing about Solera Bank that I really like and I appreciate, even just looking at it from a consumer standpoint, is it is a flat rate no matter what. So you're paying $200 annually, for the lifetime of your plan. It's listed at 199, but I mean,
It's just around
I
it. Just
honestly
be,
hate saying that
yeah,
because
yeah, yeah.
I feel like we all know that trick by now. Like
Well,
nobody's
if
being
it was
fooled by that anymore.
197, that's the trick to make it sound like it's a
There
whole lot
you
cheaper.
go.
But
The
so
$197.
$200 annual fee. What's it cost to set
$200
up?
annual fee. What you're
What's
looking at for the setup is you're looking at 1075 just right out the box. And a lot of people look at that and they're like, "Ooh, that's expensive." Or they look at other institutions who are just setting up the LLC for it and they say, "Oh, this is a lot cheaper over here." But you got to remember with this one-stop shop, you're getting the entire package, and it also does include your first year's IRA maintenance fee. So you're paying the first year's IRA maintenance fee up front.
That's
You're
$200.
paying for the entity, you're paying for the custodial setup, you're paying for the bank account setup as well with this, expert institution in Solera National Bank in the self-directed industry. So you really have to look at it holistically from what you're getting. The nice thing too, for any of your listeners, we really do want to make it as accessible for you as possible. We do have a great promotion for Note Closer Show listeners only. So you get your exclusive discount code. I believe it's NCS
NCS.
100, NCS
NCS 100.
100.
Yep.
So any of you looking to set this up at the end of the year, you can get your discount and really just get things started for a lower barrier of entry than anybody else would really be able
So once
to actually
again,
try now.
let's recalculate that again.
Love it.
So basically, if they use the code, no matter where they're listening to this or watching it, whether it's on the Note Closer Show, Note Night in America, or any of the How to Invest in Texas Real Estate stuff, it's
Mhm.
normally 1075 to set up the bank account, the first year of maintenance fees, and the IRA, LLC, or trust creation too.
The IRA or LLC trust creation too. Yep, all bundled together. And
No
any
matter
fees, no matter where you file. I know that some LLC filing fees are more expensive than others. People will honestly ask me, they say, why don't you make that more expensive than the trust? And I mean, the answer at the end of the day is we don't want that to be the driving force in your decision of whether a trust is better for you or whether an LLC is better for
Right.
you. At the end of the day, let's remove cost. What are you more comfortable with, a trust or an LLC? What do you need more, a trust or an LLC?
Now, are you going to see any wire fees, transaction fees along the way if I'm writing a check out of my account to fund a deal or put up an earnest money for a property or anything like that?
So if you're writing a check, you're not going to see any fees. If you're using a debit card, you'll have to apply for it. So they're processed to apply for a debit card, but there's no fees associated with the debit card. On the banking side of things, there's no required minimum balance for the account. You're not going to be penalized for having $0 in there. There's no maintenance fee on the account besides the IRA maintenance fee that we already discussed. And really the only thing that you would be paying for is a wire fee. But there are ways around that. Like I said, you could write the check, you have your debit card, ACH is free. So if you want to just do an ACH transfer, you can work your way around the wire fee. And the wire fees are really not that bad at Solera National Bank. You're typically, I think you're looking at $30 outgoing, $15 incoming, pretty typical
pretty
of wire
common,
fees.
yeah.
But again, if you don't want to pay those, then work your way around it. Use your debit card, write a check or send the funds ACH.
Let me ask you a question. So we talked about rollovers and stuff.
Mhm.
How difficult is for folks to submit in their annual contributions to if they wanted to put, was it 7 grand into their Roth IRA? That's a Checkbook has LLC access. Do they send in a
Yeah.
check? Do they send a wire in? How do they do that?
Yeah, you're working directly with the IRA transfers team at Solera National Bank. They're phenomenal. Before I was in this space, I actually worked at customer support at Solera National Bank. I relied on them heavily to help me with all my clients there. I can't praise them enough. They're absolutely phenomenal. So yeah, you'll essentially fill out an online form. It's not a form that you have to print off and send back to the custodian. It's an online form you fill out. You let them know exactly how you want to contribute those funds. You say, hey, I want to send this in as a check. I don't need it very fast, or I want to send this in as a wire. I need this now. And yeah, you take care of all those contributions directly through your custodian, Solera National Bank. And again, they're phenomenal, the IRA transfers team. And when you're looking at funds that you're transferring or rolling over, I just want to make a important distinction. A lot of people will associate that $7,000 limit, the $8,000 limit, depending on how old you are, with the rollover itself. They'll say, now what's my limit for, transferring funds over from my 401k or from my other IRA? And the answer is there is none. That only applies to contributions to the plan, meaning new money, personal money that you have that you say, this personal money that's not tied up in any qualified plan, I want to put my money into the IRA. That's where the IRA says, hey, you can't just put, $100,000 in here and expect us not to turn our nose up at it. That's where those contribution limits come into place. So if you have $250,000 sitting in your 401k from a career of working and grinding and doing what you do, that entire balance can go over into a self-directed IRA and you can put it to work yourself. Doesn't have to be the entire thing. It can be a partial transfer, but I just want people to understand that you're not limited in that same way to get funds into the plan.
Yeah, most of the 401ks that companies now allow you to do a withdrawal or transfer over of a partial. Now they're not going to do any type of matching, allow that to go rolling over. But usually, whatever you've inputted in, they'll usually allow you some sort of amount to roll it into a self-directed account or do a transfer in kind, so that you can start putting it to work in some cases. Talk with your HR, depend on where you're at to talk with them fully, because Nick and his whole team are going to know what your company does or offers, to talk with them about that opportunity for you. Now, could they roll over 50K and the fees be taken out of the 50K that they're rolling over?
No, and that's a big thing that we actually like to avoid. It's a lot cleaner and it speeds up the process quite a bit if you're just paying for those upfront fees with personal funds instead of going through the whole process of reimbursing yourself through the IRA and going through that hassle. Industry standard, honestly, really is to pay IRA setup fees with personal funds. And like we were talking about before, it's that chicken and the egg. Like the IRS says, hey, you can't, spend your personal funds on, IRA things. And you're like, okay, but my IRA is not set up yet and I got to get it set up. How do I do that? So industry standard has really become, you're paying those setup fees with personal funds. And really anything else from there on out, you're just making sure that you're paying any expenses with your IRA funds.
Mm-hmm. Well, for those of you guys that look into wholesale and stuff like that, this is the speed aspect of things I want to get into, and the lack of fees. If you start figuring in rush fees, wire transfer fees, document fees for them to double check everything is okay, that deal can cost you versus being able to go to your local title company, drop off $1,000, $2,000 earnest money dollar check from your safeguard account there for you, your self-directed IRA, LLC, or trust, whatever it is, however you're label it, to get that deal put in place versus, okay, I'm going to wait for Quest to take 2-3 days to
Right.
48 hours to approve the document, approve the wholesaling contract. Then they'll issue a check that gets through a wire that gets another day. Look, cash talks, bullshit walks. Let's just put it there, right? Okay.
Like
and the reason I harp so much on this, when Nick reached out to me months ago, and the first thing I asked him, what's it going to cost to set this up? I was blown away because most of the time we've seen people it cost $1,500, $2,000, $2,500 to set something up like this for you guys to have that quick and access. And then unless you're going to be doing a transaction or two once or twice a year, it wouldn't make sense. But this is that point where, if you're using it once or twice a year for deals, get things, that the speed of access helps you versus the other way around. If it was somebody else, it's going to kill the deal. You know what I mean? And then you're lost. Then you're paying money for fees that drags out, stuff like that. And then there's issues. Like I said, your bank, Solera's not going to ask for you to proof up on an assignment of mortgage to show ownership before you wire the funds.
No. Yeah. Again, they're not, and again, they're a passive custodian. They're not even holding the asset. So every year to fulfill the fair market value reporting, they'll say, hey, how much is your IRA LLC worth? So they can report that to the IRS, but beyond that, they're not going to say, hey, actually, before you purchase that, we're going to need to see some paperwork and really qualify this investment before you make it. No, you're in the car, you're driving.
You're responsible for your actions.
You drove by Solera at 70 miles an hour.
Yeah, but that's one thing we want to bring up too, is that it's your responsibility. I would keep clean records. You definitely want to make sure that if you're purchasing a contract or put it down, it's named in the name of your checkbook, IRA, or trust account. Therefore, that makes you want to make sure all the documents are accurate. Just the money you're spending out and being able to track that and provide proof of that with receipts and things like that. You don't want to be using your IRA to go take your buddies to lunch somewhere. Yeah, that's not a good thing.
Definitely. If you're just setting up a self-directed IRA to game the system, it's probably not a good idea. Probably just don't go through the process.
Let's don't do that. Now, end of the year when it comes to taxes and stuff like that, does this trust IRA need to file a tax return as well? Or no?
That's a great question. Yeah. So when you're looking at, and when we get that question all the time, even with current clients, the way this is set up is the trust and the LLC are both set up as a pass-through entity where all the tax liability flows through to the IRA, which we all understand, I think, is a tax-sheltered environment. So depending on what type of IRA you have set up, you're avoiding filing taxes for your LLC or the trust, and all those funds that are growing within your IRA are either growing tax-free or tax-deferred, again, depending on if you set up a traditional IRA or a Roth IRA.
And then you also got to worry about EBITDA too, if you're kind of operating it as a business a little bit too.
True.
Right?
Yeah. So let's talk about that for a little bit too. So one thing that does come into play, if the IRS sees the investments that you are working within your IRA as you operating a business, there's something that comes into play called UBIT, unrelated business income tax, which basically means that, and I guess really the big reason for this to come into play is the IRS doesn't want you to run a cookie shop in your IRA and have an advantage over all the other cookie shops out there and just absolutely destroy the market, right? So with that, they have a tax on that income that you make from any business activity within the IRA to kind of level the playing field at the end of the day.
So if you did buy a business with your IRA, you're going to be paying taxes on that money in a lot of cases, whether it's deferred or paid for with the Roth funds where it's already tax-free, or traditional rollover or 401k rollover where it's tax deferred, depending on the type of self-directed or type of account. If it was self-directed, if it was a Roth IRA, Roth 401k, all these numbers are going to get me speaking wrong here. It would be tax-free, but if it's just a traditional 401k, it's tax deferred, so you pay taxes on the money that pulls out based on your tax bracket at the time.
Yeah, and again, the big thing there is are you operating a business out of your IRA? You could purchase a business and not be doing any operations,
Yeah.
and you maybe you sell that. I don't know what that really looks like, but
Yeah.
at the end of the day, what they're looking for is, are you running a business, or do you have business income coming through your self-directed IRA?
Now, how long does it take to get one of these set up if they are interested in listening to this? How soon can they be rock and rolling?
Yeah. If you're listening now, you want to get set up and you're trying to plan things out, the biggest thing I see is people don't give themselves enough time to have the structure in place. So, like we talked about, the best thing to do is just have it for when you do identify that deal. What you're looking at for setup is typically like a week for the entire process just to get the structure in place. But again, you got to remember, we're not talking about just creating an entity, an LLC or a trust. We're talking about creating the LLC, creating the trust, creating and opening the custodial IRA, and also creating and opening the checking account as well. But we can take, again, like I said, we take care of that at the fastest in the industry when you put all that together. As long as you're on the ball and you're signing things that we need you to sign, that can be opened in a week. And then you're really just counting on the custodian who's holding your existing retirement funds to move things over to your self-directed IRA in a timely manner. And if they offer wire, that can be a 2-day transaction. So
Mhm.
at the end of the day, I would give yourself a week and a half, 2 weeks at most, to be able to get this set up if you have some type of deal on the horizon that you can foresee this being a good plug and play option for.
Yeah, well, make sure you check with you if your money's coming from a traditional bank. And again, sometimes it takes longer than 2 weeks for them to
Exactly.
roll
Yeah.
the money over.
If they
Just
have to send a check and you have to wait for that check to come in snail
yeah.
mail, that's the really unfortunate thing. We just have no control over that.
hmm
Yeah.
If they have questions, how easy is it to get a hold of somebody on customer service or talk with them?
Yeah, on the Solera banking side of things, super easy to get a hold of customer support. You can pull up the website and they have a chat bubble down at the bottom. You click on that. It's not like you're talking to an AI. You're actually talking to a live agent. They can transfer you from there to, a FaceTime call. They can actually put you on the phone from there. They can walk you through, your online banking and take over your screen, show you around. So they have really great customer service capabilities. If you have any question on the plan document side of things, which is what we do at Safeguard Advisors, you have my QR code right here. You can always scan my code, put some time on my calendar, and I'm always available. That's really what I do. Is the education doesn't stop once you set up the account. There's you know there's things that you'll learn just as you go. I've heard this with a lot of the different aspects of alternative asset investing, people in real estate, people in crypto. You're not going to know everything before you jump in the water. You have to learn as you swim in a lot of cases, but be
Yeah,
prepared.
it just takes some time, guys, but I will tell you this, it's easy to set up. It's easy to get rock and roll. It's gonna take about a week, maybe two, but having that powder, that dry powder ready to act on a deal, end of the year, first of the year, doing something. It's all about velocity capital, and velocity capital going
Mhm.
out to secure the deal is faster than waiting for permission. Oh, I didn't dot a T, didn't cross an I. I'm waiting for something to come in. You can make this happen a whole lot faster. And if
Exactly.
you got questions about paperwork, pick up the phone. Hey, how does this need to be labeled? How does this need to be signed? That's one question I wanted to ask you, since a lot of the delay for things is waiting on a company, people run to is waiting on somebody to sign a document on behalf of the IRA. They can still sign on behalf of the IRA and the LLC as either a managing member, or is it or how do they
Yeah.
label it?
Yeah, great question. So let's look at a real working example. So you purchase a property. That's the easiest example really to look at. And that property is not owned by you. It's not even really owned directly by your IRA. It's owned by your IRA LLC. So what's on the title? It's the name of your LLC, or it's the name of your trust. When you're signing on behalf, you're really just signing according to, we'll go back to that example that we had. You're signing as the manager of the LLC, or you're signing as the trustee of the trust. Again, you're the primary authority. You have signing authority for that entity. So as long as you're signing as the manager, the trustee, that primary authority, yeah, you're the one that puts the John Hancock down and gets the thing moving.
Awesome. What's the best way for folks to connect with you, Nick, to get this ball rolling for them?
Yeah, if you're looking to get started, we've got actually a special link just for Note Closing Show listeners and your community at We Close Notes, a dedicated link that will go directly to my calendar. So yeah, knock off 15 minutes on my calendar. I'm always happy to talk to people. happily go over the 15 minutes you have additional questions. But yeah, schedule some time on the calendar. Really, it all begins with a phone call and with the questions that you have and getting those answers and getting comfortable with the idea.
Yeah, exactly. If you've got one already, this is something you should definitely look at. Speed of capital, speed will get deals done, and let's save you $100 off it by using the discount code NCS100 as well. That's
Absolutely.
capital NCS100, save you an extra $100 and help you get rock and rolling and make the next year, the new year, your most productive and profitable year out there for you. All
There
right.
you go.
Nick, thank you so much for taking time in your busy schedule to come on here, guy.
My pleasure. Always a pleasure to talk to you, Scott. Thanks for having me on. Really appreciate it.
Yes, sir. Well, that's Nick, the big enchilada.
The big
Sahagan,
enchilada.
everybody.
That's me. Put it on my LinkedIn.
There you go. Good stuff there for you. Well, go out, guys. Pick up, use the link in the description there. Book a phone call with Nick, ask some questions, get the ball rolling. Like if you got like $2,000 or $1,000, it may not make sense for you on that to do that. But if you've got 5, 6, 7,000 or more, it's definitely gonna make more sense for you to act quickly, especially on those smaller deals where a lot of people want to do it. And that's the great thing about having access. It's all about having the right tool and the right strategy to make things happen. This is a strategy for you. And good morning, good afternoon, and good evening, everybody. Hey, welcome to this episode of Money Mondays on the Note Closer Show. Hope you are doing well. Hope you had a great weekend. It is Monday here. This will be actually the last meeting of 2024 for our Money Mondays with our WCN crew. Take the next couple of weeks off for the holidays and to revamp and go through some things, kind of a slower time for a lot of folks. We'll be busy working on closing some notes along with a few of our coaching students who made some offers last week. I got some stuff approved. Excited about people getting some new bids submitted in and approved for the first time. So really excited for folks like Phil and Cal and Sterling, especially Sterling, who's got a few of his 4 or 5 deals accepted or counted that we'll be working through later today with him and closing on his first couple deals. But I've had a lot of people sending me note tapes the last couple days, actually really the last 2 weeks. I'm not talked about this topic of wholesaling notes. A lot of people aren't trying to buy, they're trying to flip them. And I'm starting to see a lot of comments in some of the Facebook groups of people trying to sell or wholesale notes that they have. And I thought I would go through these 13 things that you need to ask yourself, 13 questions. Because when I ask like the first question or two, people don't have an answer and it never leads to the other option. So this is something, if you're thinking about wholesaling notes, okay, there are some mistakes you can make. And we had to basically help correct one of our coaching students who's trying to wholesale a little low value note. Hey, it's the first deal. I get it, totally understand it, but it wasn't a deal to begin with, and it was just a waste of time to make an offer on it if I'd have known that he was trying to flip it or wholesale it, because it really didn't hold a lot of mustard. Like maybe a total difference of $1,000. And part of it is educating your buyers. So I've been buying and selling notes for about 20 years, ladies and gentlemen. I've wholesaled a bunch of stuff, still will wholesale stuff occasionally. But when somebody sends me a tape and they don't have answers to these questions, or they're not asking themselves this, you're just going to waste your time. If you get a tape in and you don't know what it is, throwing it against the wall or blasting it out or trying to get somebody to look at it is just a waste of time if you don't have the questions answered. So you want to write these questions down as we'll go through it. Now, I didn't put a slideshow together. I just kind of wrote it down here in a Word doc, and we'll dive into them individually, okay? But look, wholesaling is not a bad thing. First and foremost, if you're wholesaling, the thing to keep in mind is you got to understand exactly what you have, okay? If you don't know what you have, you need to learn to understand what you have. That's why our class upcoming in February, yes, I'll plug in our upcoming 3-day workshop, February 14th, 15th, 16th here in Austin, Texas. Get signed up at notebuyingfordummies.com. We'll put the link in the description. But those are going to be some of the great ways for you to walk away. If you come to a class for 3 days, you're going to understand the note business, how to buy, sell, find, fund, and flip notes, whether it's flipping for your own portfolio or flipping the wholesale. The thing to keep in mind, ladies and gentlemen, is you got to know what you have. If you don't know what you have, you're just wasting your time. If you're just trying to listen to podcast episodes and YouTube videos, hey, that's great. I get being on a tight budget, but it's not going to help you succeed in the long run. Okay. And I'm not bad-mouthing anybody at all. Don't think that for a second. I'm doing this episode so that you guys can learn how to do things effectively. All right. That's the thing. If you can't make it to the 3-day class, sign up just for the WCN membership at $97 a month. There's some great stuff in there. There's even a whole class on wholesaling notes just in the WCN Crew base camp. All right. That alone is worth the $97 a month for you to make it happen. Okay. All right. Let's dive into these things. It's one of the most important. Now, the most important thing, all right, is when somebody sends you a tape, you have to ask them, what is the pricing? What's the price for these assets? What are you trying to get? All right. If you don't know pricing, and I had a guy reach out to me, hey, I got 5 notes in New York State. Even though it's New York State, I'm like, okay, what's the pricing? He couldn't tell me. Well, that's the first thing. If you don't know pricing points on this, if you can't tell by the spreadsheet that it's performing or non-performing, then it's a waste of your time. If somebody just sends you a PDF, that's not an effective way. Then it's not a deal. A PDF is a bunch of crap. Okay. There's also somebody out there, a few folks that they're sending out like these Word docs with like 20 lines of information about the asset. Oh, you buy this $4 million note for $3 million. They don't give you the address. They give you all the pros. This looks like it's a realtor trying to sell a newly originated note or some high-end. Those are a waste of time. Okay. Do not send me that. Okay. But first, number one is know the pricing of the deal. If you can't, now, even if they tell you highest and best, great. That's something, then nothing. If they can't tell you what the price is, if it's performing paper, what do you want for? Well, we want par. Okay, well, that doesn't make any sense. At least it's pricing. Okay, we want 95 cents on the dollar for performing paper. Okay, that's it's a seller, but at least no money for you to make in wholesaling. Okay, only if you're buying with your own funds would that make any sense if the rates are good. So that's the thing. Okay, know the pricing is number one. If you don't know the pricing, don't blast it out to people. Don't call people up, because that's the first question I'm going to ask you is, what's the price of these assets? If you don't know it, I'm not going to waste my time. It's also too on in here is make sure if you get a tape in, a spreadsheet in, it's all the information, not just partial information by partial. A lot of brokers out there will to send out what's called a sanitized tape. That's where they remove the addresses. Well, if I can't know the address of the property, how am I going to effectively bid it? I don't trust your BPO value you have on the tape, okay, on the spreadsheet. I need to know the full address to do my own due diligence. Like, I'll give you an example. We made an offer this past week, and they have their updated value on it. Well, I asked them because I didn't like the value. It's a rural asset. I said, can you send me your BPO? Well, they sent me their BPO. First, they sent me the wrong BPO, hoping that I would miss that. I'm like, okay, this is the BPO for a different asset. Oh, my apology. So then they send me what they call what's an AVM, an automated valuation model, which is a Zillow value, basically. Well, I know that value when it sends me the AVM, it only has like a confidence score of 74%. So I don't trust their value. I know I'm going to have to order a BPO for myself to get true full value. And if the value comes back differently, which I 100% expect it to, I'm going to go back to them and say, listen, you valued this at 149 because of an AVM. My BPO that I paid for is much more accurate than your $147,000 AVM. My value at 95 makes more sense. All right. And that's funds that are selling, hundreds of assets. That makes sense to order AVMs, not or full BPOs. They're hoping somebody won't do their due diligence. Okay. So make sure, A, you know the price, and B, all the information is on that spreadsheet. Okay. And that leads me to number 2. Who is in control of the deal? Now, if you get this list from somebody, the second question asked besides pricing is how many people have seen this? Okay. How many people have seen this? Now, if you got a spreadsheet from somebody who sanitized, well, you're not in control of the deal. That broker is in control of the deal. And he may not even be in control of that deal. He may have gotten it from somebody else. If you got the tape from a friend of a friend of a friend, don't waste your time trying to flip it, because you really don't control the deal. Now, if you get a tape in, and I'm going to use Sterling as an example. Sterling, we got a tape in. Sterling made 6 offers on it, 6 or 7 offers. He got 3 or 4 accepted. The minute he says accept on those 3 or 4, he is now in control of that deal. Yes, the seller still holds it, but he's in control. Now he can actually wholesale them, and he has a price. He knows the rest of the numbers on it. He is in control of the deal because he's basically going under contract. If you're not under contract, you really don't control the deal. If you have a spreadsheet with sanitized information, you don't control the deal. If you got the spreadsheet from a friend of a friend of a friend, you don't control the deal. Okay? So who's in control of the deal? You want to be in control of the deal. Part of the reason why we make 40, 50 offers is that we control more assets because our bids are more likely to get accepted. Something's get accepted, and we can control the assets. So either buy it for our own portfolio, wholesale it, or go the route. Okay? And that's kind of falls in line. Are you direct to the seller or another broker, joker, dealer? That's the question number 3. Who's in control? You want to control that deal. Are you direct to the seller or another broker, joker? Now, I say broker and joker broker independently. A broker, there are brokers I work with. There are brokers on Wall Street that I work with. There's a broker out of Florida that I work with. There's a couple other brokers that I deal with that send me lists that they get from banks, hedge funds, things like that. If they're selling on behalf of that seller, I'm completely fine. I don't care if they're making a commission on it, as long as my price makes sense. Okay. Now, for the joker broker who's just sending on a spreadsheet or a sanitized spreadsheet or a PDF, that's a joker broker. Don't waste your time. You're not direct to the seller. Okay. If you start getting like, oh, the price is 65 plus 3. Well, that's a broker. That's not a joker broker. But it really doesn't make sense to pay 68 cents of the dollar for non-performing stuff that's underwater. Okay. So are you direct to the seller? Ask yourself, am I direct to the seller or a true broker, or is this a joker broker? That's the thing. I mean, that goes in line with a little bit who's in control of the deal, but you have to ask yourself that question. Otherwise, it's not worth the time. If somebody wants to get you on a conference call to talk with their seller's rep, that's a waste of time. Don't do that. Let's get on a conference call and talk with my partner. And then, of course, if you get on a conference call, it's always somebody's removed. Oh, it's my partner's friend. You're never direct to the seller, so don't waste your time. And that's the reason I ask it, because you will waste your time trying to get on conference calls. Oh, so-and-so's got a tape. Well, so-and-so doesn't control the tape. They got it from a friend of a friend of a friend. That's not worth your time. Sorry, guys, because by the time you get to do all this due diligence, you're not direct to the seller. They could have sold it to somebody else or pulled it, okay? Or a tape could be marketed that's not supposed to be marketed. I've had that happen before, too. One guy a few months ago sent me his tape of this huge tape of stuff across the country, and he had sanitized it. Well, I knew that it was a list of reverse mortgages because I could look at it and see that $1 payment. And then I saw Austin, Texas, and I looked at the zip code of Austin, Texas, and I pulled up another tape I got from a hedge fund that I deal with. And besides the address, I could tell, oh, wait a second, the unpaid balance on this matches up with this other unpaid balance. Same zip code, same asset. I said, you're marketing so-and-so's tape, which I don't need. I don't want to waste my time. I'm already directing them. Okay. Now, number 4 is one of the most important things. And I know that when you're brand new, you may not know this. Okay. You may not know what number 4 is. What makes this a deal? All right. What makes this note deal or this property? What makes it a deal? Are you getting it at a big discount so that if you buy it and get it reperforming, especially in the note business, it'd be good yield? If you're going through foreclosure, is there a big chunk of profit? What makes this a deal? Not for you, the seller, but for you who you're flipping it to. Yeah, it's great if you make 2-3 points on the deal, but if that 2 or 3 points eliminates it from being a positive profit margin on the back end, then it's not good. Years ago, I was teaching, we had a lady by the name of Liz Bruner. And Liz is still around. I think she travels the country in an RV or stuff like that. But Liz and her fiance, her husband at the time, they got a note in that they're trying to sell. And they're trying to sell it at 65% of the value of the property. I'm like, okay, that's not so bad. But and they wanted what it was, they wanted $8,000 in commission on a wholesale. Well, that's $8,000 caused it to go from 65% to like 72%. I'm like, you can't do that. And somebody's not going to buy it at 72. They would buy it at 68. So you can still make like $4,000 on the deal. But if you try to sell it at what you fully want to make in commission, you're going to reduce your pool of buyers. And that's what happened. They didn't sell it at all. So they made 100% of nothing versus 50% of something. So know what makes this a deal. Is it going to be a good property for somebody there? If they foreclose, is there enough of a profit margin between what you're buying the note and either the value of the property or the legal balance? If you foreclose, it'd be enough. Okay. If it's, is it a good yield? All right. There was somebody who was trying to sell a note in one of the Facebook groups, and they're trying to sell it for above the balance of the note. They're trying, so I think that, let's just say the balance was 150. Well, they're trying to sell it for 160. Well, the legal balance was 150. And they're like, you're foreclosing the one, it'd be a good yield if it gets reperformed. Yeah, but you're literally going through the foreclosure process. That tells you it's not going to be a good, and so if somebody's going to pay 160 for the right to collect 150, even though a house is worth 300, it makes no sense, because if it gets sold at auction, you're going to lose 10 grand, and people don't understand that. So what makes it a deal? If it gets reperforming, will it be a good yield to somebody? And we're talking about a good yield, probably if they're a real estate investor, minimum 8%. If they're an activist, they probably want to make 10 to 12%. All right. Now, if you're using your own funds to buy the deal, does it make sense? If you're going to use your own funds, does it make sense to buy this deal? If it doesn't make sense, then you're going to have a hard time flipping it. Okay. And I kind of call this common sense underwriting. Just look through the deal. Hey, if they start paying on time, again, is it a good yield? If they bring 4 months to the table, if they're more than 4 months behind, is it a good yield for the first year? If we have to foreclose, is there a chunk of profit between what we're paying for the note and either the full payoff amount or the value of the property, whichever is less? Does that make sense? Is it in a state that's got a faster foreclosure process that can offset a smaller amount but can still be a good yield, ROI, versus something like New York, New Jersey, which takes 2 to 3 years to foreclose? And where are they in that process? Is this going to be a 90-day thing or a 9-month process? Okay. Those are important things to keep in mind when you're looking at it. Okay. What makes this a deal? You need to know that and tell people that, not just slap it against a wall. Hey, take a look at it, because now you're just not only wasting your time, you're wasting somebody else's time. And I get it, you're trying to make something happen. I get it. But taking the time to understand what you have, we'll go there. So what are the profit margins? That kind of calls in what makes this a deal. Knowing the profit margin is most valuable. Hey, you're going to make 60 grand on a foreclosure. You're going to make $400 a month. That's going to be a 20% cash and cash return. Those are things. Now, the next thing. So first one we talked about, let's go back to the questions. You know the price of the deal, who's in control of the deal. Are you direct to the seller or another broker or joker broker? What makes this deal? What are the profit margins of this deal? Okay. Is it cash flow? Is it equity if it sells? Is it a big chunk if it forecloses or you get a cash for keys? Knowing those margins are good. Now, what are the pros and cons of the deal? Pros, it's in a fast foreclosure state like Texas. Con, it's in a long foreclosure process like New York. Okay. Pros, it's occupied and the borrower has made some payments. Cons, it's vacant and nobody's made any payments for 2 years or 3 years. Okay. Pros, it looks like there's hardly any back taxes. Those cons, there's 6 to 7 grand in back taxes, or it's going to a tax foreclosure. All right. Those are the things that keep in. Pros, it's got a clean file. Cons, we don't have hardly anything of a collateral file. There's no servicing. Pros, it's with a servicer. Cons, no servicer. Okay. So you need to know the pros and cons of the deals. Okay. Now, the thing is, if you're wholesaling, you have to look at how are you going to make a profit. Okay. How are you going to make a profit? And I bring this up because we had a student who basically, he had a buddy who was looking for stuff in Ohio. He had an Ohio note on a tape. The balance was only like $8,500 or $9,500 on the legal balance. He bid 7 grand, I guess, on behalf of his investor, submitted the bid to me. The bid came back at 8,500. I'm like, it makes no sense in Ohio because it's about a 9-month foreclosure process to pay 8 grand for a $9,500 note. The house is in good shape. It's occupied. You're gonna get outbid at the auction, so you're only gonna be able to collect 9 grand. And I went to him. I said, "Hey, are you using your own funds?" He goes, "Oh no, we have an investor." I'm like, "Okay, this makes 0 sense for an investor, because even if your bid was made at 7 grand, even if the fund approved it at 7 grand, how are you going to make any money? That's worth your time. Oh, I'll charge the guy 7 grand, or I'll pay him 8 grand. That makes no sense. Either you have an uneducated buyer who thinks they're getting the property, which is a waste of your time. Okay, if you're flipping notes or trying to sell notes, you have to make sure that the end buyer understands it's a note, not a property. That will save you a lot of time from running around like a chicken with your head cut off trying to explain to it, and they won't understand it, and they'll drag you out. Then you'll lose face when they don't close, and now you're stuck with a note under contract, or you can't close because you don't have the funds yourself. Okay, So understand, how are you going to make a profit? Is it going to be a flat percentage, a 1 point or half a point on a performing note, or a flat fee, $500? We had a student, Gail, a few years back, who was trying to flip performing notes and only charging $100 in profits. And I was like, Gail, that is not worth your time to be you're doing all this marketing to make $100. And if something happens, the FedEx fees or other fees involved with having to return this, if they don't pay through, is not worth your time. Okay. So if you're not going to make at least a $500 fee wholesaling, or $1,000, whatever it might be, don't waste your time doing it. If there's no profit margin for your end buyer, there sure as hell is zero end profit for you. Okay. I'm not bashing anybody, but quit wasting your time. This is part of why in our spreadsheets, one of the things we do is we get rid of low balance notes. Unless you're going to buy with your own funds and you want to put your IRA to work, that's a different story. But don't try wholesaling those deals to somebody else. Okay. It makes zero sense. It's a lot of time wasted. Don't do it, because it's just going to be a pain in the ass. You're going to waste all your time not making money. If you're going to work, take the challenge and sell a higher asset. It's a higher valued asset. It's going to have more borrowers, or more, not borrowers, more people looking for that stuff. Okay. It also gives you the opportunity to make a little bit higher profit margin. 1 point on $7,000 is $70. 1 point on 70,000 is 700. Capiche? All right. So when you think about this, how are you going to make a profit? Then you also have to ask yourself, do you have a buyer's list? Now, a buyer's list is not social media. A buyer's list is not LinkedIn profile. A buyer's list is a bona fide email list of contacts. Okay. An email list. All right. Now, if you don't have an email list, then you need to get off your ass and go out and network. It means going to the local real estate club, going to networking events, going to an REI expo or something like that. And it does mean you still post to social media, but you start asking people for their email. Okay. Or you start going on LinkedIn as you're connecting with people, you start asking them for your email so that you can share with them, because social media is not an effective way to wholesale deals. All right. If you have an email list, I don't care if it's 500 people or 100 people, that's much more valuable than a Facebook group. Because we all know that Facebook limits the amount of people who see your stuff. It may be 1 to 5% total of your friends or contacts on there. A Facebook group might get a little bit higher percentage, but it still limits it. There's stuff I see that gets posted 3 days later. I'm like, I didn't see that 3 days ago. What the hell happened? So an email list, and preferably a cell phone list too, where you can text message blast people, hey, I got a deal. Those are the two most valuable pieces of real estate in your whole real estate journey, is your email list and knowing what they're buying, okay, and their cell phone list. And that takes me to the next question. What question is this? 1, 2, 3, 4, 5, 6, 7, 8. So buyer's list email. Number 9, how are you going to market the deal? All right. An email is the first thing you should send out. Yes, to your buyer's list. Okay. A text message blast is also effective. Okay. But that's not the only way to market. Now, you also got to be careful how you market if you're trying to wholesale. You don't want to be like Elaine, one of my past students, who got a list off of contacting asset managers on LinkedIn. She got a list sent to her. What did she do? She turned around and blasted one of the assets with the same photo that the seller was marketing the asset for. Well, he caught it and blacklisted her. He was like, you don't own this. And her words were like, I'm trying to sell this note and make money. You know, look, I get it. If you don't have capital, you have to use things. But taking a picture of the property and knowing where you got the deal from. If the seller is on LinkedIn, you probably don't want to send it to him where he's on LinkedIn. Or you may want to go block him or for a little bit. All right. Posting in Facebook posts, LinkedIn groups. Here's the thing. You want to mass market your deal if you are in control of it. If you're not in control of it, don't mass market it. All right. Now you can market things when you're starting off. Like, hey, I'm working on a deal. I'm working on a deal. But it's different in the wording to saying, hey, I got a note for sale. Okay. I'm working on a deal in here. That's going to start getting people to pay attention to you. You got to start doing that. If you have no list, no email list, no contacts, no social media following, you have to start doing that to get the word out. Octopus CRM, one of the great ways to find real estate investors or note investors or specific people in your state with job titles or whatever. That's an effective way to start building a following. LinkedIn is posting on LinkedIn is important. Facebook groups are better than just your Facebook. Okay. Video. I get a lot of people off of TikTok, people off of Twitter. You never know where people are going to catch you. So if you're trying to be a fisherman, you would drag a net. You would have a cast net, right? If you're trying to harvest shrimp or harvest fish, fishermen use a net most of the time, right? Unless it's illegal. Like tuna fishers, they have to use the single line. And that's very expensive to do, right? They hit or miss. But you want to literally post these deals and market things everywhere that you, hey, I have a deal. I've got, and you can tweak it up so it's different. Hey, I got a listing of 50 non-performing notes. If somebody's marketing a list of, like, say, 85 notes and 35 are performing and 50 are non-performing, hey, that's actually 2 postings you could do. A list of 35, a list of 49. Pick a couple of interesting properties off it and post a picture. Those are things that are going to help you. And yes, posting to LinkedIn and daily is one of the most important things you can do because very few people, only 3% of people post to LinkedIn daily. So post their daily about something. It will help you. And I'm talking daily, Monday through Sunday. Okay? 7 days a week. And posting multiple times. You post one thing and share a different deal and then share a different deal. But you may need to repost. If you send an email blast out to your buyers list, you're probably only going to get 20, 30% open rate the first time, especially the smallest. Resend it out to them. Okay? Rinse and repeat. If you're trying to get something done, get it done. Now, if you have your own capital, that's great. Use these deals as an opportunity to raise more capital. Even if you're trying to wholesale, use these deals to help you raise more capital for a thing. Because that's the thing. When you start thinking about that, who are the best buyers for these deals? That's the next question. Who's the best buyers? Where are the best buyers at? It's kind of 10 and 11 kind of go together. Who are the best buyers for these deals? Now, some of these people have been posting deals in Facebook groups like, oh, hey, you can buy these new notes at 8%. Okay, if it's 3-year balloons, those are great for a passive investor who wants to make 8% in their IRA. Okay, that's not bad, but they're not ideal for your turnkey investors or your more aggressive investors. More aggressive investors are people investing for all want to make at least probably 10 to 12%. If they're active and they're doing fix and flip, they don't mind being active. So they want a little higher percentage. If they're more passive, then you can get away with a little bit lower interest rate. But you have to understand who is your buyer for this and where are these buyers at. If their buyers are looking for passive investors, then you may want to get on and start marketing to IRA investors. Okay. You may want to be marketing to cash flow investors. All right. And going to where those buyers are at. All right. Where are those buyers at? Are they at your RIA clubs? Are they at with your self-directed IRA companies? You can get on and do a webinar too, or talk about deals, or go find those groups and post those groups. Posting to like real estate investors in Houston, which is a big group of like 200,000 people, may not be an effective thing because you're gonna get a lot of tire kickers who think they're buying the property versus the note. Versus say like the Note Nation. We know there's note investors on there, active and passive. That would be much more effective to post there. Okay. Now, question 12 is important. What is the timing of the deal? Now, timing of the deal stands, when does the seller want to close by? When do you need to sell these notes by? When are bids due by? So if they send a tape out to you, when are deals due by? Well, deals are due by Tuesday. Well, it doesn't give you a lot of time, right? Today's Monday. They're due by tomorrow. You better be bidding for yourself or better dive into it and find a sweet deal, okay? But what's that? How long are they going to have? Do we need to go to contract immediately, or how long are we going to have for due diligence? Or on this tape that you're marketing, when do you want to fund or close by? Okay. And they say, well, we need to close, especially right now. We need to close by December 27th. Okay. So that gives you 18 days with probably 3 days out of it because of Christmas. That means it gives you 15 days for due diligence and funding. That's really hard when you're flipping the notes. Okay. So if you're going to flip it and just try to blast against the wall and you don't have any due diligence pulled, no values, you don't know that information, it's going to be really hard for you to do at the end of the year. But if you are diving into this stuff and you understand the due diligence and you're doing some initial research on the front end, and you can provide that information to your funding, to the person buying the deal, that will help speed things up for you. Okay. Some people want to fund stuff themselves and they'll turn around and flip it a week or two later to get their money back and a profit. That's also something you could do. If it makes sense for you to flip it, great. A lot of funds, when they get a tape in, they buy a new list of assets, they will work for 30 to 90 days working with the homeowners, trying to get them to come to the table and reperform. And if they get them reperforming, that's a good thing. They'll pull them off the block. But after 90 days, then they're going to try to sell these notes at a 10, 15% markup. So if they can make 15% in a quarter, that's a 60% cash and cash return. That's pretty good for them. Okay. If you buy it at 40 and then you flip it for 50 and make 10 grand in 90 days, well, that's like you made 100% cash and cash return when you annualize it all that. So that's something to keep in mind. It makes sense, but you want to make sure it's a deal. Still going through the due diligence process. How soon will they have, due diligence documents to you? Those are some things to keep in mind. All right. Some funds want you to sign a contract, and then they'll remove the assets that you kick off because of due diligence, or things that don't match up, that don't make sense for you. Or a lot of them will wait till you have a final population, a final list. So if you got 6 approved, let's wait till you get finalized on which ones you're going to fund, 1, 2, or 3. Then we'll sign a contract and go from there. Okay. But you want to make sure you're in control of the deal. You're direct to the seller. If you're a broker removed, or 2, 3 brokers removed, it's going to be really hard for you to get this thing under contract. And by the time you get around to funding or doing your due diligence, it may very well be going to somebody else. Okay. And that brings me to number 13. Okay. After you know the timing, the question is why, and this is the number one question that people would probably ask you, experienced note investors, experienced real estate investors: would you buy this deal? If so, what's stopping you from buying it? Now, if you can't answer that question, don't waste your time. Hey, this is a deal. If I had the money, I would buy this myself. Or if I had the bandwidth, I would buy this deal myself. But I just don't have the bandwidth, or I don't have the time, or I'm getting ready to go out of whatever. There can be a variety of reasons that if you would buy the deal, that you wouldn't be able to do it. Hey, I got a ton of other deals I'm working on. I just don't have the bandwidth to add another non-performer. Okay, that's fine. Or I just don't have the time to raise the capital myself for it. Okay, that's a very valid deal. But if the only thing stopping you from buying this deal is that A, you don't have money, that can be relevant. But the second part of that is if you're wholesaling notes and you're trying to build a buyer's list to wholesale, you might as well just tweak your message a little bit to change it up so that you're marketing for capital. Because all the same things that you're doing to market the deal, email blast, Facebook groups, LinkedIn, TikTok, Twitter, whatever, so you're just trying to wholesale it, you can use that same marketing material to help you raise capital by just changing a couple of things. We're looking for a passive investor. We're looking for a funding partner. We're looking to either wholesale it or for a funding partner. You could even add those 2 things in there. Okay. As long as the buyer doesn't see that, right? But that's the thing. Would you buy this deal? If you're not going to buy this deal and you can't tell me why this is a deal, like we go back to earlier on, then don't waste your time. Blast it. Why is this a deal? Take the time to understand why this makes sense and why you would buy this deal. Hey, I would buy this because it's going to be a 15% cash and cash return if they reperform. I would buy this deal because A, it's a foreclosure, but I don't buy in Ohio because it's a little longer process. But it's an ideal deal for somebody living in Ohio who understands it, doesn't mind foreclosing. John Reckons is a past coaching student of mine. He bought a note that was in Ohio. His goal was to get the bar back on track. The bar wouldn't get back on track. He didn't want to foreclose. And he was all worried about foreclosing. I said, well, then just flip the note. You'll still make 10, 15 grand on the deal if you flip it because you know where the deal's going. He's like, oh my God, I didn't think about that. He's happy. He made 15 grand on the deal. Somebody else took the deal off his plate and went through the foreclosure process. It was a deal for them. Okay. And it was good because he could tell the seller, listen, I bought this with the idea they're going to reperforming. They're not going to reperform. I can still sell this to you and it'd be a good deal for you and it'd be a win-win for me. And that's a good thing. Okay. So would you buy this deal, and what's stopping you from buying it? If it's just capital, go out and market. All right. If it's not capital, or it's you don't know the answer to the price, or you don't understand it, then you're going to have an uphill battle when it comes to wholesaling. The best wholesalers I know are people that understand the deal. They know the ins and outs, the pros and cons and stuff like that. But if you don't have pricing on a deal, we had a guy that was trying to sell me some apartment notes, and I couldn't get pricing from him. And he's like, "Oh, I'm going to save these for you." I'm like, "Okay, but what's the price? Are they occupied? Do you have cash?" "Oh, no, they're all vacant now." I'm like, "Okay, then what's the price?" And finally get the price. I'm like, it doesn't make any sense at that price. I'm not going to waste my time. We're not even close to the ballpark. Okay. All right. Now, making an offer is great. And if they counter back, well, hopefully, if you know your math and know what the deal holds, it shouldn't take you long to look at that counter and see if it makes sense or doesn't make sense. Because you should be able to change one number, change it from what your offer was, which calculated your ROI, to putting their number in and see if that ROI still makes sense. If it doesn't make sense, then cancel it or counter back. If it does make sense, then don't sit here and hee and haw about $1,000 or $2,000 or so. Just move on. We had a deal. We made an offer at 8. They came back at 10. They had an AVN for the property. I said, "I'll offer it 9." They're like, counter, like, "Fine, I'll do the 10, and we'll see from there." All right. But that wholesaling is not bad. The thing that you have to keep in mind, everybody, is, like I said, the 13 questions. You got to know these answers to understand if it's a deal. Know the pricing of the deals, number 1. Number 2, who is in control of the deal. 3, are you direct to the seller or another broker? Number 4 is what makes this a deal. Number 5, what are the profit margins of the deal? Number 6, what are the pros, cons of the deal? Number 7, how are you going to make a profit? Number 8, do you have a buyer's list? And by buyer's list, I mean email list. Number 9, how are you going to market the deal? 10, who are the best buyers for this deal? 11 is, where are these buyers at? Are you direct to them? How do you connect with them? 12 is, what is the timing of the deal, the contract, the due diligence, the closing and funding? And 13, would you buy this deal? And if so, what's stopping you from buying it? All relevant questions to ask yourself. All right, ladies and gentlemen. If you have questions, type them in the chat roll if you're watching. I'm glad to answer those questions, help you guys get through whatever you need help with. As always, I want to make sure and reiterate that we do have our upcoming class in Austin here, February 14, 15, 16 to be the first live class we've taught in over a year. I mean, in person. We've taught live classes before. And we're looking forward to having it here. It's normal price is $14.99. If you get signed up, you can save $500 and get in for less than $1,000, and it's good for you plus your partner or spouse. Go to notebuyingfordummies.com if that's outside of your budget range because of the holidays, and get signed up for the WCN crew at $97 a month. It's one of the most important things you can do. It will help you get rocking and rolling. And the thing that you got to keep in mind, ladies and gentlemen, is if you really want to do this business, then take the action. And I'm going to give you a shout out to Albert. Hi, Albert. Hey, Eleanor. Awesome. D'Anthony Dupree. Thank you for coming on there. I know you've been working on some stuff there. I think this is going to help you specifically take your business to the next level. But look, wholesaling notes is not bad. But look, have a little belief, have a little faith in yourself. You're all capable of doing things. If you want your situation to be different in 2025, you have to be doing different activities than you've done this year. Okay. If you haven't made any offers, the first thing you should do is look on making offers. If you haven't gotten a bid closed, then work on getting your first deal closed in the next 90 days. Raising capital, flipping notes. I don't care what it is. The important thing, ladies and gentlemen, is to take advantage of what's available out there, but understand the deal. Don't be one of these idiot joker brokers who just slaps stuff against the wall. It doesn't make any sense. If you're part of the WCN crew, go sign up for that $97 a month. You can scroll down into the base camp and retake the wholesaling notes masterclass that we put together a year or two ago. It's still very, very relevant. All of it's still accurate for you. And it's a good way to get the ball started in the new year. So anyway, guys, if there's not any other questions, comments, concerns, I want to wish you all a very Merry Christmas and Happy New Year. This will be, like I said, this is the last WCN crew call of the year. It's not the last podcast. We'll release a few more podcasts before the year is out. If you are a WCN crew, don't worry about it. You can still book some phone calls with me, email me. Still glad to jump on calls and help you along the way, especially if you're working through some deals before the end of the year. And with that, I want to wish you all a very Merry Christmas, Happy Hanukkah, Happy Kwanzaa, and a very safe and Happy New Year, ladies and gentlemen. But otherwise, go out, take some action, buddy. Good morning, good afternoon, and good evening, everybody. Hey, welcome to this episode of the Note Closures. Scott Carson, jacked to be here with you today. And we've got a very special guest on here today, a friend of mine. Always seem to run into him in great places. Saw him at FinCon again, where we originally met about 4 years ago. This guy was a previous guest on the podcast, and I wanted to bring him back on. If you're like me and you're probably on a lot of different, email newsletters, stuff like that, you've probably seen people pop up, about how to buy a note. Not only just on real estate, but also how to buy a note, or it's a great deal to buy a note on a business. And our guest expert is the number one, I say the most renowned expert when it comes to buying and selling a small business. A friend of ours, he's the author of 2 books that you definitely want to go out and take a look at, if not buy them. And we're making sure you can see. Can you see my screen there? There we go. The first one is Buying versus Starting a Small Business, a guide to keep you from going to broke, which is very, very important. And then 21 Stupid Things People Do When Trying to Buy a Business. Our good buddy David Barnett joined us here. David, how you doing today, buddy?
I'm doing great, Scott. I'm so happy to be here. I love talking about this stuff, and I always have fun when I'm visiting on people's podcasts. So I'm looking forward to today's conversation.
Yeah. Well, you mentioned when we were in Portland just a second ago that you actually talked about the topic today a few years ago at Bill Moncaro's Paper Source Convention, correct?
It was 2018 in Las Vegas, and Bill invited me to come and talk about business notes, how they're created, and are they potentially an investment someone might want to buy? And so I don't want to spill the beans or anything up front here, but I think maybe we should address it in exactly the same order.
I think I think it's great.
Yeah. So let's first start off by talking about a real estate note. So you got a house, it's worth whatever the house is worth in that neighborhood for that size of house, right? It's always based on local markets. And then someone buys that house and they put some kind of down payment usually. And then if the seller holds a note, well, that note is secured by the house and the house holds a certain value. And we're talking about a tangible thing that you can touch. And of course, houses do need maintenance and upkeep and all that kind of stuff, but they hold their value pretty well. And if you ever had to repossess the house, maybe you've got to give it some paint and some love or whatever, but you should be able to resurrect some value out of it. So that's what I think makes note investing on real estate so appealing, because you've got that tangible real asset there that kind of protects your investment. When it comes to businesses, businesses are bought and sold based on the cash flow they produce. So you could have a business which only has $100,000 worth of stuff in it, equipment, machinery, inventory. But because it's a well-run, profitable business, someone might agree to buy that business for $250,000. And the difference between the stuff that's in the business, its value, and what someone agrees to pay for a business is what we call goodwill. Now, that business, as I just said, someone's willing to pay $250,000 for it. If somebody went to a bank and said, I want to buy that business, the banker might make them a loan based on the $250,000 value. And the only reason that the bank is willing to even consider that deal is because there is a guarantee possibly available to the bank in the form of an SBA guarantee. Okay. So that kind of gives the bank an added degree of security that if they don't collect on that note, that Uncle Sam is going to help them out. And so when we have a business note, it's usually because someone did not get all of the money from a bank to go buy the business. And so they've had to come up with some other kind of deal to buy that business, just like we're talking about with real estate, right? So the buyer maybe brought some kind of money down. Let's, again, use this $250,000 business. Maybe they brought in $50,000 of their own money. And we know that there's $100,000 worth of stuff there. So maybe they did get some kind of bank financing, maybe for the larger pieces of equipment. Maybe let's say there's a vehicle there, a delivery truck or something. So the bank gave them a loan on that. And now the bank's got a lien on that truck. And how did the buyer get the balance of the business? Well, the seller probably held a note. And what you'll notice in that scenario is that there's no more collateral. Like the thing that really held value has been pledged to the bank for that loan. And really, the seller note is basically backed up by the goodwill value of the business. It's very ethereal, and there's a very good reason why sellers of small businesses are able to do this. Because for the seller of a small business, they can actually, if they ever needed to, foreclose on that note, and they know how to run the business. So they could take the business back if they weren't receiving payments, and they could potentially get the business performing again. And so that person is able to hold that note and have some degree of control over the scenario. Smart sellers who end up doing this, they also need to act like bankers. So they'll ask for things like monthly, P&L. They'll want maybe the bank statements. They'll ask for things that allow them to keep an eye on what's going on in the business so that they can maybe try to foresee if trouble's coming. I always coach people that are doing these deals that as a seller, really sellers don't want to ever have to foreclose on these businesses. They want their money. I always tell sellers, when you get into this scenario, you are signing up for a business coaching role because you're going to have to make yourself available to that buyer. And when you see things happening in the business that you know are going to lead to trouble, you have to pick up the phone and call them and say, look, I've seen this one before. Here's what's happening, or talk to me about that receivable that's getting later and later. And you're going to advise these people to help keep them on track. This is actually one of the big reasons why people who buy a business may want to have a seller note, because they know that it ties the seller into their success and makes them available over the long term. So that's how these seller notes get created. Would they make a good investment? I always ask people who might buy one in a secondary market, would you be able to step in and run that business if you had to try to salvage the value in that note? And then I guess it really comes down to, what degree of discount maybe you're able to negotiate on the note, et cetera. What kinds of things have you seen people do?
Well, I think it's funny because I see people coming to me because they think the yield's going to be great. And I always tell them, my advice has always been, number one rule is don't buy a note on something you don't want to end up owning or operating, like you mentioned out there for you. And if you had to foreclose, is it going to be worth your time to do that? So that's one question I have for you. To foreclose on a business, is it a different time frame than, say, like we have here in the States, where it's a judicial process or non-judicial process, where non-judicial is kind of faster to foreclose versus a judicial, which can take 6 to 12 months or longer? So can you answer that question first, David?
I can't. Well, I can give you some examples of what I've seen, but I can't really answer the question because I'm not an attorney.
Sure.
But here's the number one thing is the note subordinate to another lien holder? So if there is, for example, an SBA loan in place, I've known other people who've done lending in the US who've told me that if you're in second place behind an SBA lien, that you really don't have a lot of power or control. You have subordinated all of your rights as a creditor, basically, and they drive the bus. What some attorneys have told me is that it depends on what your paperwork says, because your paperwork is going to say what the circumstances of default are and what the timelines even could be. It's all negotiated up front. In a good scenario between a business buyer and someone who is holding a note on that business, there should be a good degree of communication. And like I said, you want reporting in place. So the normal holder of the note, of course, is the seller of the business. And that person, like I described before, should be keeping a close eye on what's going on in the business. Someone who comes in a secondary fashion and buys that note, if they are also an expert in that industry, they might be able to step into that person's shoes and be able to interpret the information being given to them and know what's going on. That would be kind of rare. And, maybe if it was a business that was extremely standard, like all Subway franchises are pretty much alike, right? But two roofing businesses can be very different. Even though they're in the same sort of industry, they can be run in a different way. They can rely upon different, centers of influence to be referring business to them. They can be relying on different models. One of them could have employees. The other could be using subcontractors. Like business is something that can be very unique. People can whip up any kind of solution they can, and if it will be accepted by the market, then they're in business, right? You're off and running. And so there's a lot of unknowns, and it is not going to be as formulaic as a process maybe that you've put in place for investing in real estate notes, where you know the rules according to the state that you're in, and you kind of, if you've been through the dance once, you kind of know how it's going to go again and again.
That makes a lot of sense there for folks out there. So definitely double checking and checking title, I guess you could say, to research as far as what kind of liens or other loans are in place. Like you said, SBA or bank loans, and if your loan is subordinate to those. What about any type of non-compete clause with the owner who's selling you the property? What can stop them from just saying, "Hey, I'm going to get rid of all my problems with this one, move on over to something else and start the business again, be your competitor"?
Well, it's a great point, and usually the buyers are concerned about a seller competing with them if they feel that that's a risk, and then they'll usually ask the sellers to get into some kind of non-compete agreement. And this again can vary by jurisdiction. In general, from the conversations I've had with attorneys, the non-compete agreement has to relate to a couple of things. It's got to relate, number one, to the actual marketplace. So if you own a noodle stand in a neighborhood, you can't ask for a non-compete forbidding the seller from opening a restaurant in the state, because your market is not the state. Your market is the neighborhood, right? So it's got to relate to where the business actually happens, and the time has got to relate to the amount of time that it would take for the goodwill to transfer. So if you are like a wholesale distributor, it would be reasonable to ask for several years of non-compete so that you can really forge a new relationship with the people that are your customers. If it's more of a transactional kind of business, that might not be as reasonable a time frame. And the reasonableness, I guess, is what gets tested if it were ever going to go to court, which again opens another whole conversation, which is simply this. It doesn't matter what agreements say. Agreements just open the door to be able to go to court and to pay a retainer to an attorney to go represent your interests. And as most people know, if you open the door to going down that legal pathway, you're opening the door to a multi-year solution that's going to cost tens of thousands of dollars. And if the seller of the business did go and open a competing business and they did manage to attract most of the customers, well, what would happen? The buyer would end up probably failing in business. They wouldn't have money for their lawyers. You would stop receiving payments on the note that you bought. Do you want to keep investing to go pursue that guy? Like that, once the door is open to a legal kind of solution, it just ends up costing more and more and more money. Uh, I've often heard it said that those kinds of solutions are really only there for big companies, people with a lot of money. You're looking for a workable solution. Like the reason that I love deal structures that include a good degree of seller financing for buyers of businesses is because you're creating an incentive for the seller not to do these kinds of things. Because often those seller notes will have an offset clause saying that if you break our agreement not to compete, or if there's a material misrepresentation that we discover after the fact that you lied to me about something before the deal, I can offset my damages against what I owe you. That opens the door to another thing. If you buy one of these notes that has an offset clause that the buyer then exercises, guess what? The size of your note starts to get cut down. And I don't know how you would navigate around that. I guess you'd have to realize the danger when you did your due diligence on the note and maybe discount it even further against that kind of possibility. I'm a little bit familiar with the different sorts of strategies people apply in the note world. I think that if I was ever, faced with this opportunity to invest in a business note, probably what I might consider would be some sort of partial, like to buy the next 12 or 18 payments or something like that. Because you can look at a business, and if you're familiar with business and financial statements, and you could look at what's going on in that business, you could probably make a pretty good determination if they're solid enough to last for the next year or year and a half. That might give you the confidence to do that partial purchase. But, who knows what's going to happen to a business in 3, 5, 10 years. And
that was be my next question. Would you consider something that's been around for 12 months, or would you prefer obviously something that's been around for 5 years when you're structuring, obviously these notes, as you say, you want to be involved with it, but when you're doing your due diligence, I don't think you want something that just opened up like 2 months ago. You obviously want something that's got some sort of business acumen and history behind it too, right?
Well, I don't know if a business that's only been over for 2 months could be sold to someone if somebody
Sure.
would buy that, I guess maybe if someone became ill all of a sudden, maybe that kind of scenario could arise. The you know, the concept of seasoning, right? In the world of real estate, there's a concept of seasoning. If the payments have been made for a certain length of time, then we become more certain that it's going to continue to be made. What you're testing there in the world of seasoning a note is you're testing the debtor's personal organization and desire to pay their debts, right? Like when you see 12 months of on-time payments, you're like, there's a character who goes to work every day, manages their budget, and makes it a priority to make sure that their home note is paid, right? And you're testing the resolve of that individual. That person could still lose their job, right? In which case, the seasoning then all of a sudden loses its qualification, because now the person just doesn't have the income. In the world of small business, you can have a very profitable, solid small business for decades, and then something completely outside of everybody's control could change. You could have a regulatory change. You could have, a new competitor move in across the street. I've seen restaurants that have been open forever fail because a city spent 6 months replacing water and sewer right in front of the restaurant, and people can't get access to the location. Lately, I've been talking to a lot of people who manufacture stuff out of steel and aluminum who complain that their number one cost just went up by 50%. Like nobody in business has the ability to foresee or control everything. And so one of these, sort of black swan kind of things that happens to someone could very easily derail the business. And so that track record, while it's comforting, it doesn't change the risk profile. There was a central banker back in the 1950s. His name was John Exter, and he came up with something called Exter's inverse pyramid of liquidity. And it's an upside down triangle. And at the bottom point, he put, and this is supposed to represent the various assets people can own. And his idea was that in a time of financial unrest, so some kind of crisis, people would want to trade their assets for more liquid assets. And so at the very bottom point, he put gold, because in those days, the US dollar was backed by gold. And then he put treasury, like notes, actual paper money above that. Then he put T-bills, and then, treasury, longer term notes. And then he got into like public equities, public debt, all that other kind of stuff. And then he just went up and up, and real estate's in there, and investment real estate's in there, and commercial properties in there. At the very top of his pyramid is privately controlled small business. And he put it as the most risky and least liquid asset that there is, just because in order for you to sell a business, you've often got to find someone who not only wants it, but is able to run it and happens to be in the same place that the business is available. With the internet and stuff, there's more fluidity around that, where businesses are kind of existing online and people are working more remotely, but they are still the least liquid and riskiest asset class that someone can invest in. And I'm always reminding people of that. I'm always reminding people owning a business can be great because you've got a lot of operational leverage in addition to financial leverage that can really make them profitable and wonderful when everything is firing on all cylinders and they're profitable. But when things turn south, they can turn south fast. And all you have to do is ask anyone who's been in business for 30 or 40 years, and they'll tell you stories either of their own, brush with potential disaster, or they'll tell you the stories of other people they've known who were around for a long time, and then just a bunch of things happened all at once that put them under, unfortunately. And so it's risky. Unlike, a house, you got a problem person there who's not paying their note. Well, you get rid of them, you repaint the thing, get it ready for sale, or there's 101 different ways to get out of it. I guess you're the expert on that, but you're left with that tangible house, and at least you can insure it, right? If it were to burn down or something. And with a business, I love to use the example of a pizzeria. You can have a loved pizzeria in a neighborhood that people love to go to, and you can buy that thing and change the sauce recipe and just turn everybody off. And just like that, you've destroyed the value of the business. And it's hard to recover from that kind of thing.
So definitely, that, as you say, risky. If you don't know the business, got to know it, be prepared to step into it. when businesses that are providing cash flow, obviously, there's usually a multiplier attached to it as well, right? 4 times, 5 times cash flow, stuff like that. Where are you seeing things these days, and how important is that in your due diligence in seeing if the borrower or the business owner is likely to pay on that note on a regular basis?
Well, the business has to cash flow. So, there's different what we call notional levels of cash flow, and the smallest businesses are sold on multiples of what's called seller's discretionary earnings. And most small businesses sell for between 2 and 2.5 times that number. When they get bigger, they sell for multiples of EBITDA. And then you can get numbers with a higher multiple, like 3, 4, even 5, depending on the industry and the type of business. But you're usually talking about businesses with cash flows in excess of $700,000 when you start to talk about that bucket. So they're significantly bigger. They usually have more in the way of like middle managers, supervisors, like a quote unquote real business machine, versus the smallest businesses, which are basically conducted by their owners. Like
Mom and pops.
I always use the example of an orchestra and the conductor, right? Like that conductor is making sure everyone's playing their instruments together. And if something happens to that person, or if they're distracted, the music won't be nice. And that's the cash flow, right? And so the cash flow has to be there. If somebody overpays for a business, and it happens all the time, it's one of the biggest risks that there is in buying a business. What ends up happening is people forget certain things. So I mentioned that they sell for these notional levels of cash flow. Seller's discretionary earnings is one of them, and it's the most common. And we get to seller's discretionary earnings by taking the net income of the company, and then we add back interest, taxes, depreciation, amortization, and the owner's salary. And then you end up with a number. Maybe it's 300 grand. And that's the way business brokers will advertise the business. They'll say this business produces $300,000 of seller's discretionary earnings. People will get into a deal to buy that business thinking that they will at some point have 300,000 in their hand, and you never will. And the reason is because if you operate the business successfully and profitably, you will have to pay interest on your loan. You'll have to pay taxes to Uncle Sam. You will have to take home money to feed your family. That's a salary. And the equipment and machinery slowly wears out over time, and it's going to have to be replaced. And that's what depreciation represents. Accountants show you things wearing out with depreciation. So those things are real expenses. They've got to be paid. But we value businesses based on that seller's discretionary earnings just because it's so hard to compare one business to another. It's really been the only tool that we have to be able to say, like, amongst restaurants, what do they typically sell for? And when you get back to that SDE level, you can see side by side that they're all trading in the same range, which for small restaurants is less than 2x SDE. Again, because amongst the risky businesses, restaurants are even riskier. It's a tough business.
Yeah, that definitely is a tough business. We see that here in Austin. Definitely, it's the surprise. A lot of restaurants are going out of business, but you also have a lot of food trucks that are starting to pop back up, and even those are struggling in a lot of cases to stay open on a regular basis.
And those are like the promise of a food truck to a restaurateur is that it's a much lower investment, right? A lot less to lay out to get your equipment, like the truck and everything. You're not paying for a room for people to sit in. You're not paying waitresses and waiters. Like it's supposed to be a more efficient thing, but at the end of the day, if you can't sell enough meals, the numbers are just not going to work.
Mm-hmm. Yeah, not going to work at all. We've got you would think Texas barbecue would be one of the easiest things besides Mexican food. I had one of my private investors tell me, "Oh yeah, I invest in Mexican foods because you can't lose money in Mexican foods." And he proceeded to close 2 of them during COVID and stuff like that. But there's a well-known case of the best barbecue spot here in town. Well, it went out of business. Guy ended up owing $2 to $3 million in unpaid vendors, food, rent, all that stuff because he just couldn't capitalize enough. So I think part of the due diligence is seeing how much business acumen the actual operators have too, right? Besides just being able to be a good cook or a good manager, right?
Well, yeah, and so the requirement to report information to the note holder is created at the outset when the deal is made. And so if the seller of the business was not wise enough to put in the requirements for a lot of this stuff. It's really hard for you as an investor to go talk to the buyer and say, I want to add all of this reporting requirements to you. I want to give you all this extra work just so I can cash out this other guy. Right. And, and then you would have to know enough about the restaurant trade to be able to look at those numbers and realize if something was going wrong or not. And here's the biggest one. And this is the biggest shocker to people who've not been into business. Scott, did you know that financial statements are made by putting ink onto paper?
Yes. Okay. Yes.
Okay. And so when somebody hands you, and then maybe it's a PDF these days, but when somebody hands you that thing, all you know that you're holding is a piece of paper with ink on it.
Mm-hmm.
Like most of the times when people get numbers from accountants, they assume that they're looking at something real. Here at my firm, we help people work on these deals. We help people buy and sell businesses. We start from the assumption that they're full of errors.
Right.
That the numbers are just wrong. And it's not necessarily because someone's trying to commit fraud in any way, but it's because most of the time bookkeeping is done in small businesses by amateurs. And so, like if you've ever walked into a building supply store and some teenager is putting in your order onto a computer and prints out a bill, and they're like, oh, we made a mistake, I'll just do it again. Well, guess what? They probably didn't blank out the first one properly. And at the end of the day, someone's going to be figuring out why their sales are $100 more than what the till collection is. And, and then if nobody has time, they're just going to round it off into some kind of over short account, and the books are going to be off. And this is normal in the world of small business. And if there's enough money in the bank account to pay the bills, these errors often accumulate over time, and the reporting data just isn't accurate. One of the this actually just came up the other day. Someone was looking for help to look at a business, and the accounts receivable were huge. And so, like, this was $1 million a year business, and the accounts receivable were $300,000. And that is 90 days of sales. And usually you expect people to pay you in 30. And so when we asked the seller, what is your policy on payment? They were like, well, when we finish a job, people have 30 days to pay, and we pretty much collect from everyone. So where's the discrepancy here? Why was the balance sheet showing so much in receivables when the seller was telling us that everyone pays in 30 days? Well, here's what was happening. He would sign a contract. It was a window door place. So he would sign a contract with you to install some windows in your house, and he would collect a deposit at the time when they took the measurements. And technically what he should have been doing is he should have been recording the deposit as a liability to his company. And then when the windows arrived and he installed them, then he should have recorded it as a sale at that moment and applied the deposit against it, and then given you the invoice for the balance, which you'd pay in 30 days. What he was doing instead is he was recording it as a sale the day you signed the contract. And then he was putting your deposit as the first payment. And then while he waited for the windows to come from the factory and then waited for his crews to install them, which could be 60 days, then he would install them and give you the bill for the final amount. But it was sitting on his balance sheet as a receivable when it was not, in fact, a receivable. So other people had looked at this business and they were all saying, we don't understand how we can get the operating capital to finance the receivables. And we were able to figure out pretty quickly there's no operating capital required because the receivables aren't real. And this kind of thing happens all the time in small business. It doesn't get caught by people like CPAs because that firm at the end of the year, they're going to file a tax return, which is accurate for tax purposes. They're going to pay the taxes they owe. No one's ever going to come and say you are reporting when the sale occurs. But when you're analyzing the business to make an investment, these kinds of things are important. So, I mean, that's the kind of stuff we do with people.
No, it makes a lot of sense there because you always know things that the books can't be cooked in one way or another if it's just a mom and pop operating, or maybe intentionally. What pops to mind is I don't know if you heard about a guy by the name of Barry Minkow who went to jail for running a Ponzi scheme as like an 18-year-old kid on a cleaning system called ZZZ Best, where he was fake creating invoices for commercial cleaning on projects and saying insurance is paying them. And he actually took the company public with no inventory, no sales and stuff like that. There's a show called Con Men out there. Now the guy's doing due diligence on apartment syndications and fraud taking place in that aspect of things these days.
There's a great book out. I interviewed the author on my YouTube channel, and he wrote a book about this guy who had a stereo shop chain in New York City and pulled some of the same tricks. I, when people want to be fraudulent, there's no limit to their creativity. I actually had someone tell me that they had a friend that wanted to sell their laundromat and would go there every day after work to put $60 worth of quarters in his own machines. Right. And it was to juice the numbers to make it look like there were more sales being recorded than really there were. And when you're dealing with potentially someone who's acting in that way, it's hard to catch them. Like you really have to know the industry. Back in my business broker days, I was trying to sell a pizzeria, and different people, we prepare a package called a business profile, which kind of talks about the business and what the numbers are and everything. And this guy came in. He was experienced in the pizza business, had his own shop for 20 years, was married to a college professor. So he sold his shop when she got a new job at the local college here. And so he was looking for a new place. And he looked at the numbers, and then he looked at me and he said, all I need to know is what the rent is and how many kilos of cheese I buy every week. And from that one number, kilos of cheese, he knew how many pies were going through that shop. That was the only number he trusted, because he knew the business.
It's a tangible number. You know what I mean?
And so like people that I know in the laundry business will say, you got to look at the water bill. The water bill doesn't lie. That, like, how much water is going through, and you can do the math. You can know how much water is used in each wash cycle, and you can calculate it and then match that to the numbers you see on the sales and see if it makes sense or not.
That's having tangible knowledge of that business. If you're buying the note on that, you don't know that.
Well, and this just heightens the danger.
Sure,
right?
Sure, definitely. So, what you tell them, folks out there, buyer beware. Do your due diligence. May not be the best thing to invest. Might be one of the more stupidest things.
It's, business can be a game changer for a lot of people. It's also very risky. And that's the message I try to get across to people. And it's just, if you're going to get into business, you have to build a base of knowledge and understanding and know what you're getting into. And there's all kinds of people out there who are kind of cheerleaders on the internet who are saying, burn the ships, go full forward, no plan Bs, all that kind of stuff. But in the real world, the people who survive at this stuff are ones who very much have plan Bs. They understand exactly where they stand. They know what could go wrong and how they would deal with it before that thing happens. And they're cautious and they're careful, right? If you lunge full force forward all the time and you leverage everything to the max and you're just going full speed, any little bump in the economy can derail you. And we see that every time we have a downturn. And we haven't seen a downturn in quite some time. I think we might have one coming up here soon, but it'll be interesting to see what happens.
How much has AI affected your business? I know it's obviously affecting businesses across the country, but where are you seeing the biggest impact, either positive or negative, David?
It's interesting because what is happening over the last 10 years is we've got more and more people that are coming into this world of small businesses, and they're trying to do deals and buy businesses from the internet. Like they're trying to do everything from behind a screen. And as these AI tools come in, they're trying to apply these AI tools to manipulating data and better managing things that they're finding on the internet. But, when a lot of the information that is available is full of errors, it doesn't matter how easily or quickly you manipulate it. You're still going to get crappy outputs. And most, 80% of the businesses that go up for sale on a website like BizBuySell don't sell. And anecdotally, from the deals we work on, 80% of businesses that change hands do not ever get to a business broker or get on those websites. They're deals that are being made between people that meet each other and know each other and work on a deal and have a closing. So, whenever I meet someone who says I'm frustrated because of what I find on these online business for sale websites, I always say, like, you're looking at 20% of the market, and 80% of what's there we already know is crap that won't sell. So that means it's probably not worth buying. And what's happening is people are niching themselves into a bad space with not a lot of opportunity because they're not getting out in the world and actually doing business, right? And that's what I always encourage people to do is AI is really important in something like due diligence. You can feed mountains of paperwork into an AI, and you can get all kinds of reports on any patterns that it notices or ideas it has based on what you feed it. And it's making an impact in those spaces. But actually finding the deals and talking to people and getting someone to agree to terms in a business deal that work for you and them, it's all done face to face. It's done over the phone. It's done by actually building relationships. And so, AI is exciting, but it's those deal making skills and those relationship building skills that I think are still very important for people. And more and more I'm hearing people say, if AI is taking over all of the mindless, monotonous jobs, we all better double down on being human. And building relationships is extremely human.
So true. It's so true with that. And I don't think you're having an AI bot that's going to fix your air conditioning or your unclog your plumbing or some other things out there too that are.
It will. It'll just order you a new one. You'll just get it. You'll just get a delivery at your front step. Here you go.
Now, you mentioned something. Yeah, there's a lot of stuff on social media, especially I know a guy by the name of Roland Frazier. You probably heard of him. Stuff out there. Learned a lot of the marketing from him back in the day. But it's the same thing. Oh, we're going to go to a workshop and we're going to teach you how to buy your first business and stuff like that. That's not a lot of in-person contact with actual business owners. Like you said, only 20% of those online or business sold with the online stuff, like you mentioned, huh?
Yeah. And so think about this. If someone has, say, a Ford dealership, who is the most likely buyer of a Ford dealership?
Another Ford dealership, right?
Another Ford dealer. And those people all know each other from their conferences and their meetings and things like that. And so there's these natural networks of people that exist in the world of business. And so when I'm working with someone who wants to buy a business, one of the first things I recommend is that you actually create a target of what kind of business you want to buy, what industry, what size, et cetera. And then you have to get yourself into that network. So you've got to actually meet people that own businesses. You want to meet the people who sell to those companies. You want to meet all the people in the ecosystem. You want to become an associate member of their trade group, maybe go to their conference. Like, you want to make inroads into that community and make it known that you're looking for a deal in that industry. Because the top 5 reasons that people sell a business, none of them are cashing out. The top 5, because we talked about how low they sell for as a multiple of cash flow. So the biggest reasons people sell a small business is burnout, boredom, and fatigue, divorce, poor health, the need to relocate, and retirement. Retirement is the only one that people plan for. The other 4 are just things that happen in life. And so if you meet somebody and you say, I want to buy your business, and they say, I'm not interested in selling, that's fine. You just have to wait. Because if one of those things happens, you can get a phone call. And the people that I work with, the buyers I work with, they'll do like letter campaigns. And I'm sure, people that buy real estate and stuff do this too. They'll do these letter campaigns and stuff, and they'll hear from a few people. But then over the course of the next 2 years, they'll hear from more and more people who got those original letters. And it's just these circumstances come up, and all of a sudden people are now interested. They want to have a conversation. And if you are a business owner and you know someone who wants to buy your business, it's easier to call that person back and have a conversation than it is to, engage with a business broker and start that whole thing. And that the business broker is going to end up charging you a fee of some kind. And so, people are thinking it's faster and easier maybe, and won't cost me as much if I just deal with a buyer. It's hard to make a business deal. It doesn't always work out, quickly or easily or anything like that. But this is what happens in the marketplace is you get these people that are doing direct private outreach, and they're getting a lot of the deals. And especially if you're a buyer that has some kind of track record, if you've managed a certain kind of business for years and years, it's going to be easier for sellers to see that you're going to be qualified as a buyer. And that seller is going to be more likely then to maybe do some seller financing for you because they know that you're experienced and you know what you're doing.
Yeah, exactly. That's, yeah, I totally agree. The seller financing side of that makes a lot of sense, and it's done a lot that way. It's just that, hey, you probably don't want to be in the secondary market for a seller finance note on a business.
Yeah, it would be risky. Like if somebody said to me, I'm going to sell this business and I want you to buy the note, if I was involved in the creation of the note, well, I'd also have to be an expert in that business. So it would be tough. Honestly, it would be tough. Yeah. Like I said, I think that the only real opportunity I would personally look at would be some kind of partial, like buy 12 or 18 payments. Just you can have a much more confidence in what's going to happen over the short term than trying to stretch your crystal ball out years.
Right. There's a guy out of Dallas, Tom Henderson, still around. Probably was at the event in Vegas with Bill Mancaro. Talk
I
about
met Tom. Yeah.
Yeah, I'll give you 10 for 12. I'll give you 10 for 12.
Oh, what did he call that? The perpetual partial?
Yeah, exactly. Every year I'll give you 10 for 12, but like it says, it minimizes the risk and you're going to make a 20% return on your money.
Yeah.
That way. It's not a bad way to think of it, but he's not going and buying, oh yeah, I'll give you 60 months or 120 months, stuff like that. Just doesn't, 10 for 12 on that might be a good way to check it, test it out and see if you want to do a deeper dive, if it makes sense for you. So
yeah,
good stuff, David. What's the best way for our listeners out there to reach out to you, connect with you, and follow what you're doing? Obviously, they need to go buy both of these books first and foremost.
Yeah,
I've got both of them here.
If you look up David C. Barnett on Amazon, I've got 10 books now. They're all about buying and selling small businesses, small business investing. But if you're just interested in this space, if you want to learn about business deals, about how people buy businesses or get them ready for sale, all that kind of stuff, just type David C. Barnett small business into any podcast player or YouTube, and I'll come right up to the top. My YouTube channel just celebrated 11 years. We've got 800 videos and audio tracks on the podcast
Congrats,
feed.
man.
So there's tons of content there for anyone who's interested in learning about this stuff.
When are you going to upload all that to like an AI bot so it clones yourself?
We are working on a lot of that kind of thing. I've got a group coaching program that's been going since 2018, and we just recently got everything transcribed. And we are now creating a query bot where you can ask it questions and it will bring up snippets of conversation from the group that touch on those things. So the people in the group are testing it right now, but it's interesting. Like, yeah, I mean, there's definite value in some of this AI stuff, especially when you're asking it to do things that are really well suited to computers, like managing large volumes of information. Like computers are great at that. And much faster, of course, obviously, than us. We used to create a list of topics for each one of our meetings, and we had a book that was like a user companion, and people used to control F it in Acrobat, right? And to find where people were having these conversations. And we're still doing it, but we're probably going to be getting rid of it soon in favor of just using that AI.
So we created an AI clone with all our 2,000 videos, podcast episodes, classes, and then even me appearing on 400 other podcasts. Upload that all into Delphi, and it's a pretty interesting clone in text or audio back to people asking questions. The big caveat is I had to go in and delete a lot of the old stuff and make sure, because you want to upload the newest stuff first because it's the most accurate. The older stuff, obviously, we know changes over time as things happen. So I had to go back and I had to re-upload stuff differently with newer stuff first. But it's been a huge asset in taking FAQs and asking a lot of questions for folks, typing out stuff. Might be something to think about for you on that.
Yeah, it's a great idea.
Awesome. Well, David, as always, thank you so much. I know you've got a busy schedule ahead of you. Once again, guys, the books are A Guide to Keep You from Going Broke, Buying versus Starting a Small Business. And the other one is 21 Stupid Things People Do When Trying to Buy a Business. Maybe we need to put in there 10 stupid things you do when you're buying a business note. That'd be the next one as well. So go out, take some action, everybody. Thank you again, David, and we'll see you at the top.
Thanks, Scott.
Thank you. Bye. Hey, real estate investors, this is Scott Carson. I'm known across the country as a note guy. For the past 20 years, I've been buying distressed assets, primarily non-performing notes on residential and commercial properties. And if you've ever wanted to learn how to dive in to start buying non-performing notes from banks, hedge funds, or other investors like yourself, And there's no greater place than to get the nuts and bolts, the A to Z, the 1 through 99 place to get started is our virtual note buying workshop. We've been teaching this class since 2010 on how to find, fund, flip non-performing notes, how to get banks to call you with deals that you can cherry pick. And no, you don't need millions. No, you don't need a lot of experience to start looking at non-performing deals. We get lists of notes from banks, hedge funds on a regular basis, not 1 or 2 or 3 or 4, but hundreds of deals that we can evaluate and cherry pick. Whether we're looking for performing notes or non-performing notes that we can get reperforming, or non-performing notes you can foreclose and take back, whatever your niche or whatever you would like to focus on, we can help make it happen at the virtual note buying workshop. It's a 3-day class. Our next one is April 18th to the 20th. It's actually online live via Zoom. You get signed up by going to notebuyingfordummies.com. That's notebuyingfordummies.com. Day 1 is all about how to find these assets. How do you find asset managers? How do you find lists of people to reach out to that you don't have to spend thousands of dollars on postcards or letters that you waste money on? We don't do that. Day 2 is all about raising capital and marketing and how to create a business that feeds itself, that you can do part-time, 10 hours a week, 5 hours a week, depending on what your focus is. We'll show you a game plan to achieve deal flow coming in on autopilot versus you having to send a ton of money. And also, we'll show you how to raise capital like nobody else does. And then day 3 is all about the flip. How do we structure deals? How do we evaluate a tape to find the deals from the duds? All right. We'll show you what vendors to use. We'll give you a 200+ page manual, contracts, sample forms, all the stuff that you need to be a lean, mean note buying machine when you get wrapped up. Now, yes, this is live April 18th through the 20th online via Zoom. Get signed up today. We'll send you the replays of the previous online workshop so you can start learning, start evaluating material, and get rock and rolling. And if for some reason you don't like our class, we have a 100% money back guarantee involved with it. If at the end of the first day you don't like what we talk about, you don't think it's impactful, just let me know. We'll refund back your tuition, no questions asked. We don't want your money. We want you to become a note buyer. We want you to become a lien lord. All right. Like I said, if you're tired of dealing with toilet sinks and trash outs, you don't want to deal with renters, then becoming a note investor is the path for you. Everybody evolves into a note investor at some point, but there are plenty of opportunities out there. There are millions of non-performing notes that you can cherry pick. No, it's not all junk. It can be small value all the way up to $1 million homes or $1 million apartments for you. So much opportunity is taking place right now in the chaotic market that we see. And who's going to come out on top? Note investors will. So take the time, get signed up today, April 18th to 20th. Go to notebuyingfordummies.com or go to our website, weclosenotes.com, and sign up for the virtual workshop there. As always, get signed up today. We run discounts all the time. The cost of tuition is you plus your partner or spouse. So get signed up today at notebuyingfordummies.com, and we'll see you at the top. Good morning, good afternoon, and good evening, everybody. Hey, welcome to this episode of the Note Closer Show. I'm excited to be here with you today. Good to see some folks on there. Hey, Fernando. Hey, Judy. Hey, Cord, and other folks out there getting ready to jump on here this morning. Today's episode, I want to share some stuff that I learned over this weekend. But first, I got to give a big shout out to Phil. Phil Brodeur, one of our coaching students north of the border up in Canada, sent me his hat, nice on his logo, and I've had it for a couple weeks, and I just forgot to wear it on here. But thank you to Colossus for sending it to me. I really appreciate it, Phil. It's nice. I like blue. It goes with a lot of stuff, so kudos. Thank you for sending me the hat. But anyway, this past weekend, I went to Dallas, and I attended Laughlin and Associates Magnify Your Wealth Summit. Now, you guys know we've had Aaron Young, Brent Biscay, and his team on before to talk about asset protection, creating LLCs, stuff like that. And the event is, like I said, it's Magnify Your Wealth. It's designed to help you grow your wealth and protect your wealth, which is it's important that you're creating to protect it, right? And so a lot of it's all about asset protection, the Rockefeller strategy, setting up trust, making sure of course, he had some other interesting speakers. He had Elizabeth Trust, who we'll have on to talk about trust and some of the Rockefeller strategy, stuff like that. Her partner, Kevin Day, we had on a couple of years ago. And so it's great to connect with her. I think you'll really enjoy that presentation when she comes on talking about some of the different ways to protect assets, because that's always one of the big things. We ran to Ron Fossum, who talks about taxes and paying less in taxes, is one of our #1 podcasts out there, connected with him. We'll have him back on the show as well. And then we also ran into a couple other new folks that we hadn't heard. We heard a guy talking about XRP, Jake Claver from that neck of the woods. That was interesting to learn a little about that. We probably won't have him on talk about crypto because that's just not our show. It's just not our niche, but it was an interesting session. One thing I really did take away from, and this is one thing I want to put out there because if it really is an aha nugget for me, I need it for you guys to understand the aha nugget. All right. And they had a speaker, Corey Long. I've never met Corey before. And he talks about a lot with leveraging AI in your business stuff. And I thought this was one of the most valuable sessions of the entire weekend. I was blown away on Friday about this. And if you know, I get blown away from something, it is something that I think you need to take a look at. I got to give a big shout out to Brian and Lisa Dills, who were coaching students that were there. Just drove over from where they're at in Tarrant County and attended a couple days there too. I think they were all weekend. I had to take off Saturday to go look at the property in Waco. But Corey is with Y Rock, which is CORY spelled back consulting group. They're out of Dallas. They do a lot with marketing for businesses of all types. And it was great. He was talking about how if you're follows like the Russell Brunsons and the Alex Fermozis and stuff like that, how they get into the aspect of funnels, having a funnel and a CRM system and all this big stuff with landing pages and things like that and pay-per-clicks and using Google Analytics and Google Ads and all that stuff. That's all basically changed. All right. Because, and I've noticed this, website traffic is down over 50% in the last 6 months. Website traffic has dropped down. People that have been paying for Facebook ads have had to really increase their budget for get people to click on stuff. Facebook group engagement is down dramatically, like 90%. And what it's come down to is AI is affecting a lot of this stuff. Okay. And I'd be willing to bet you guys probably haven't recognized the change. You probably may have noticed it, but haven't realized how it's changed some things. And what has happened is that, especially with Google, since most of them are jumping on Google and searching on Google, right? is that we're no longer getting, if you go in and search for something, best restaurant, between Waco and Austin or something like that, or whatever you're searching for, Google, their AI is now answering that question for you with an AI response, more so than just giving you the best websites to click to. Anybody recognizing this? Like you're literally getting an answer from the AI ahead of times. And what's happening is less and less people are scrolling down to click through things because it's using AI to give you the best tips, the best recommendations. And people are literally going off that because it's right there. It's top of the fold, as they say on the website. Okay. Now, that's not really anything new, shocking. But what Corey said is something that each and every one of you on here, whether you're watching this live or watching the replay or listening to this, you need to take in consideration of how you, your business are coming up in the search aspect of it as far as when AI comes around to pulling your data. Now, and this is what's so great about it. Everybody is basically at square one. You have the ability, if you were to be a coffee house, like Mojo Coffee down the street here, local place that we like to go to. I actually have Mojo Coffee beans this morning. I hate Starbucks. But Mojo has the opportunity, if they're leveraging things right, to really dominate Starbucks locally, or dominate Starbucks or, Pete's, okay? Because if they leverage how they're using their, and I'm going to say real estate in a different term than buying a home, stuff like that. The most valuable real estate when it comes to search and AI search, okay, isn't the paid for click ads. Okay, yes, it's having a good email list. Your CRM is still important, but what it comes out to is they are relying, AI is heavily relying on the written word. They're looking for fresh ideas, fresh content, and then also audio and video stuff. Now, I'm not going to sit here and tell you guys got to go out and start videos. That's one thing I think everybody should do, but I don't expect you guys to go do it. Some of you will, some of you won't, but that's okay. What I want to talk about, though, is some things that you guys can use that are hesitant to getting on video or getting on because you have an accent or you don't have the time, don't know what to say in front of the camera, or scared that your makeup's not going to look good. All right. This is not meant to scare you. Is what happens is that Google and Bing and search are starting to create profiles, search profiles of you. Now, if you haven't done this, like Colin, this is something that you probably find valuable, is going into actually Google and searching your name and see what pops up on your profile as far as who Colin, Whitnack is, who Fernando Cavill is, who John Burns is, who Boyd Pops is, who Nisham Mosley is. Because that's one of the first things they're looking is to identify that stuff. Now, I found that pretty valuable. Now, what was even more valuable at the event is Corey gave a couple examples of what they did. One being Ron Fossum, okay, who's there. I've had him on the podcast, like I mentioned before. The guy knows his stuff, okay? Well, he did a speaker profile searching for Ron Fossum and shared it with the audience, and guess what popped up on there? I was blown away, but what popped up was my YouTube video and my podcast episode of when we had Ron on 2+ years ago. It was literally front and center there at the top, along with the blog article that we did for the website. Okay. Now, I'm not going to sit here and tell you that you got to go create blogs and all that stuff there, but you should. Okay. And there's an easy way to do this that you don't have to spend a lot of time. It's not going to cost you a lot of energy. You can use AI to help you out with a few tweaks in posting some things. Now, what we have done and some things that I'm changing, and I'm sharing my changes with you guys so that you see focal point. Our website, weclosenotes.com, it is a behemoth. It has got thousands of pages, not only on articles and blogs and stuff we do, but other pages that we have in it. It's behemoth. And one of the things that we did earlier on was that we would take every episode we did and we created a fully transcribed blog that works well with SEO. Well, you know what? All those blogs have done well for our website. It's our #1 website, our #1 YouTube ranking, all that good stuff. Now, I'm not telling you have to compete with me. That's not what I'm getting at here, okay? Because you don't have to compete with me. What I want you guys to realize is that 99.9% of the real estate investors out there, the note investors, the people attending conferences and stuff like that, aren't going to do this aspect of going and actually embracing this and using a couple tools that I'm going to share with you and activities that you guys can do in 10 to 15 minutes once a week to really help you become AI searchable. Because the greatest, like I said, the greatest real estate now that AI is looking at, which means Bing and Google and Yahoo, whatever, all the search engines and all the AI search engines are looking for is content. Word and audio, video, audio, and writing. Okay. Now, if you don't want to do videos, that's fine. Don't do videos. But you can do you can do audio. You can also do the written word, which is the easiest aspect of things, by just creating blogs on different topics that you share to your website. Pretty easy to do, and or share somewhere else. Now, one of the best places that they talked about sharing, which is free, okay, is going out and creating a LinkedIn profile for yourself, which all of you should have a LinkedIn profile, but then going there and creating a LinkedIn blog, a newsletter, okay? Now, we started a newsletter a couple years ago. We're under 5,000 subscribers. It's pretty good at posting stuff originally. We fall off, but the point being is we try to go on there and at least try to post once a week, okay? Now, the things that I took away from this that, I'm doing well, and all of you can do this too. You're not in competition with me, right? You don't think that. I want you guys to stand out from the crowd. I want you to drive more investors to you. When people go to search your name, like asset managers do, other investors will do, we want it to pop up and show that you know what the hell you're talking about. And all of you do. That's the great thing. All of you guys that are on here that have been through our classes and our coaching, you guys are smart people. You're not stupid. You might be a little lazy because you don't want to do some marketing in some cases, but I get it. 99% of people don't want to do any stuff. And you maybe have not wanted to do, I don't do a lot of pay-per-click. We did a couple things like that. I like because I'm in a niche, obviously a niche, and sometimes the pay-per-click stuff just doesn't work when you're in such a smaller niche. But you guys aren't necessarily the small little niche that I'm in. You have notes and you're doing other things as well, which is great for you. Nothing wrong with it. But we know one thing. A, you're looking for more deals. B, you're looking to raise more capital. And how do you help that? Well, that helps with getting out there and marketing yourself. Besides going out and networking, which is one of the better ways of doing it, or direct mail marketing to IRA investors, but being, as we should say, AI searchable. Okay? AI searchable. So what do we do? All right. What are the steps that we can do to make ourselves more searchable? Well, the first thing, you all can go over to your profile, over to LinkedIn, and click on your profile. I have mine up here, right? So if you can just click on my profile here, it takes you over to the top of my profile, and then I can scroll down here, and I can have these featured things down here. I have class, a podcast, but I have the number one featured thing here is my newsletter, okay? News and Notes newsletter. And this doesn't cost me anything except a little bit of time, okay? And I have 94 editions, which is just shame on me with over 1,000 episodes. I should have a lot more editions of this stuff. And when I walk away from an event, I was like, I need to put more information into my newsletter. I've been sloughing off on it. And it's pretty simple to do because I've really created a newsletter with the articles, the podcast episodes, and the transcriptions that I use from the blogs or the videos to create a blog. I should just throw it on here as a newsletter. It's simple enough to do. Besides not only throwing it back on my website for SEO search and AI SEO search, but the LinkedIn also pulls it up. So if you guys don't want to update a big website, you should be posting something on here. Now, I don't want to create more work for you. That's not my goal here at all. Okay? I want to show you a way to do it. So going and creating a LinkedIn newsletter is very, very simple to do. All of you can go to your profile, and like if you're going to go click to your home, and you can click on write an article, that'll take you there. And then you go over here and hit manage and hit newsletter. Okay? And create a newsletter. It's as simple as that. You have to have your profile being open. I also think you've got to have the the paid version of this to do. Otherwise, you can just post articles, which are fine, or create a newsletter or whatever like that. Not simple to do, but literally all I do with Week Close Notes newsletter, if we click on here, create a new edition, all I do is upload an image, create a title for it, and then I copy paste in what I'm saying, which doesn't have to be too long, okay? So my process, so to give you a bit of an idea. So when I record a podcast episode like I'm recording this morning, right now, we could use this example. What's my process? Well, I'm on Zoom. As soon as I finish with Zoom, log off with Zoom, it's going to give me in about 30 minutes, it's going to give me the audio and the video, right? Well, I'll take the audio, and if you have Zoom, you can set up a setting where Zoom will automatically create a fully transcribed transcription for it. There's plenty of transcription services out there. TurboScribe's like $120 a year. Restream will do it, but a lot of places will automatically allow you to transcribe as part of their process, which is really great. So I do a full transcription, and then I go over into Chatbot, which is where I like to go, to Chatbot. Because Chatbot will pull OpenAI 4.0, 5.0 is pretty good, and then Google Gemini, right? So what I like to do, if I just click over here on some of my conversations, I literally will just say in here, I'll take the transcription, okay? And you'll see here, like I did a video yesterday because of all the news with the Trump 50-year mortgage. I said, let me take advantage of all the SEO searches going on. People searching for that, and why not? So I took the transcription, which is a 37-minute video, PDF, I uploaded to it, said, hey, please take the attached transcript of the most recent podcast episode of the Nichols Show and create a podcast description under 4,000 characters that I can use as a blog, including an attractive introduction and conclusion along with 5 detailed bullet points for the content. Make sure to make it SEO rich and written for real estate investors with my humor. Also come up with 3 SEO rich titles. Make sure to use my sense of humor. So there it came. It came up with 3 SEO rich titles: the 50-year mortgage, housing affordability, Trump's 50-year mortgage, unlock equity, which is not bad, okay? And then, of course, it took my the transcription, and created this, 3,500, this was 4,000 character blog, which is great. It was a little too long. It started cutting things off, so I went back and changed it. Hey, can you make this to 3,000 characters? So I didn't cuff stuff up on my Apple iTunes stuff. Okay. So I did the same thing, 3,000 characters. It's a well-written blog and stuff like that, which was great. And then I went back over here to LinkedIn and I just basically copied and pasted. Let me go back to my episodes here. Oh, where's that? Maybe, hang on, let me go back to my home. Doesn't always show the most recent one here for some weird reason. Okay, let me go down here. Show all up posts. Now, the great thing about LinkedIn, a LinkedIn newsletter, is A, it's free. Okay. And here we go. Here's my. Now, the great thing about the newsletter is free, but when people are following you on LinkedIn, it automatically, if they subscribe to your newsletter, it goes, not only will it go into their feed when you post something, but it will not only go on their feed, it will actually go to their email address account associated with their LinkedIn profile. So I've got 4,845 subscribers. Not all of them I'm connected to on LinkedIn. I was looking at that. About 30%, give or take, I'm actually not following connected. They just subscribe to my newsletter, which is great because A, not only seen on my feed, on their feed, that it's going into, like I said, it's going into their actual email database. If we looked at this stuff, and let's look at the analytics. So let me look at the annex view post. I could boost if I wanted to. Here we go. Analytics. And like I said, this went out about 6 o'clock. Not the ideal time to go out on a newsletter, but I wanted to get it out to take advantage of today. So 158 impressions, 109 members reached. It's had 1,300 article views and 2,876 email sends, a 33% email open rate. That then itself right there, ladies and gentlemen, is phenomenal. Anything get over a 10 to 15% open rate, it's pretty good. All right. And I've had 2 people actually connect this morning on my calendar link to book a phone call with me to talk about real estate investing. Okay. But the most important thing is what AI is going to do. AI is going to go to, if I throw this on my website, they're going to go to my website and pull that information. And they're going to LinkedIn and pull that information so it now shows up as an AI search, as an AI source, basically. Okay. Now, I know you guys like, man, you did a presentation. You ain't got to do a presentation. Okay. Yes, I put 20 slides together on a Sunday afternoon. I recorded it. It took me longer to do the slides and come up with the calculations on the difference between a 15, a 30, a 40, and a 50. This one was a little more complicated because of that stuff. Most of the time, all you're going to need to do is if we go over to chatbot app, like what I like to do, and this is what you all can do. This is the power of using this ChatGPT 5.0 to go in here. And if you guys can see what I did is something that all of you should be doing. Can you, and this is what my prompt is, word for word, can you create a list of note investing topics that real estate investors will find informative that I can use in a 52-week newsletter? Okay. Please have the topics rich in SEO and line up with what investors may be searching for based on the month of the year. So we want this to be year in, 12-month relevant. Please have the topics in order from week 1 through 52. So that's what I did. Now, AI is lazy. ChatGPT is lazy. So I typed this in here, and here's a 52 month-by-month newsletter plan focused on note investing aligned to typical investor search intent and seasonality. Each topic is phrased for SEO. So it gives me January weeks 1 through 4, planning, strategy, market outlook. Okay, 4. And then went through to March the 10th week and stopped. Well, I had to prompt it again. Please continue with the rest of March to the end of December. So I had to do that a couple of times to get through all 52 weeks, okay, of having topics, okay? And then as I got through actually got to 38, I started looking at some of these things. I think these are a little too primary for note investors. Let me change this up. And I said, please come up with 52 different topics for a real estate investing newsletter that targets new and existing real estate investors who are looking for deals and have money to invest, but have the content tailored to being focused on investing in performing and non-performing notes. So I got a little bit better with my prompts. And then it came up with more tailored content that I would think would do well for new and existing real estate investors looking for opportunities. And you guys can copy this whole same thing and tweak it. Now, the great thing, now it gave me 52 weeks. Once again, I had to prompt it to keep doing stuff, but it came up with tax season stuff, summer stuff, beginning of the year, the holidays, all that good stuff, okay? And then I also went back and said, okay, let's do something a little bit more generic. Please come up with topics for a 52-week newsletter based on the most searched questions about real estate investing, okay? And there you go. So then it came up with 52. I had to prompt it again to get all the way through 52. But there you have topics now of the most frequently asked questions that are a little bit more generic. Now, let's talk about this. Now, people always ask me, like, well, Scott, what's the best link for a blog? All right. You know, what's a newsletter blog look like? And I went and Googled that, and you can see what I'm talking about here. AI, because it has all here. What is the ideal length of a real estate blog post? The ideal length for a real estate blog post is often between 1,000 and 2,500 words. Okay. That's about 2,000 to, 4,000 characters. Okay. And you can see as longer, it's between 1,000 and 2,500 words, as longer posts tend to perform better for search engine optimization, providing in-depth content that can rank higher and drive traffic. However, the exact length depends on the topic and your audience. So focus on quality, relevance, and reader engagement over a specific word count. For certain types of content, such as short tutorials or neighborhood guides, a shorter length might be more appropriate, okay? So search intent, content type, okay? How to guides and ultimate guides aim for 25 to 4,000 words. Listicles like your top 5 deals or top 10 reasons for doing something. The same thing. Pillar posts, longer stuff like that, maybe case study, stuff like that should be 3,000, 4,000 words, okay? So audience engagement, a 300-word post that is helpful and well-written is better than a 2,000-word post. So what you could do is you could do your longer form content, throw it on your website, or throw it on your LinkedIn news article, and then do a shorter post and use that as a teaser on your Facebook, your LinkedIn, your email database, your drip marketing to your content to get people to click over to go read the longer one. You're reading 1,000, 2,000. Hey, click on the link to check out the longer stuff. Okay, but that's the thing. Look at what other people are doing. You can go to LinkedIn, see what people are doing, posting there. Stay current. Keep the tone casual. Use local keywords if you're buying locally, and add visuals. And you could literally go over here. Same thing if we go to Chatbook. If we go back here, I just typed in. Go back to Chatbot here, and I clicked on. What did I say? Oh, create an image. Let me see here. Let's see if it was. Well, I guess description. There we go. So I just went in there to image creation. I said, can you create an image of President Donald Trump holding a 50-year mortgage in the Oval Office of the White House? And that's exactly the image that it gave me. Simple, clean, pretty easy to use. And I use that as my thumbnail for, thumbnail for the image, the podcast episode, stuff like that. And I use the same blog that I created across the board. LinkedIn, email, podcast. I should have switched it up a little bit, but it was Sunday afternoon. I was ready to be done with it. Get what I'm saying? And that's the thing, is that now is being searched. It's now getting people to open it. AI is going to use that. Are you going to be AI searchable right off the bat? No, you're not right off the bat going to be that. All right. But we could do something here really fast. Let's go here and do search. Let's type in AI mode. Let's type in, whoops. Let's make sure I get your last name. So yeah, there we go. Let's see what pops up. Who is Colin? I used him because he's a realtor up. There we go. Now what's great, look at the stuff over here on the right side. That's good. You got your LinkedIn plus 5 sites that it's pulling from. And your homes.com. And we get it show all. And there you go. That's not so bad, right? That's pretty good. And that's a great little speaking page, I guess you could say. AI search page. And you all could do the same thing. All right. Now that's kind of what you're looking for. And the more stuff you put out there, And Colin, this is something you very easily give back to your, your AI or your virtual assistant. Okay. Let's see here. I'll go back to my, okay. So let's do this 52. Let's type in. So we've got 52 topics that you guys could do. So let's do, can you come up with a 1,000 word SEO rich blog or number 52? And there you go. Can you add a catchy conclusion paragraph that points people to making an appointment with me? Start investing in the new year. Because you want to kind of leave it, you don't want to leave it hanging like that. You should add a little paragraph to the back end of it. Okay. There you go. That's pretty good. If you're ready to turn smart strategy into real results, if you're planning to start or scale your real estate investing in the new year, let's map your exit options, financing, and deal flow to today's market. Book a quick call with me and we'll build a customized game plan to target the right assets, protect downside, and maximize returns from day one. Your best deal of the year starts with the right plan. Schedule an appointment now. That's a great thing. And the reason I'm picking on Colin's been a realtor for years. He's looking to raise capital. He's got a database already, but he's been hesitant to kind of do that outreach. You're putting your pitch together. You got a great website, stuff like that. I really picked on you because this is something that kind of start that process. You ain't gonna wait 52 weeks. Okay. That's not what you want to do, but it's that weekly touch base with your LinkedIn, Facebook. You can copy paste this over to Facebook too, and your email, your CRM to your database. 80% of sales comes after the fifth contact, the fifth touch. A little article on the different types of ways to invest in real estate in 2026 would be a great hit for your audience looking to get started as a real estate investor, looking to raise, looking to put your lazy asses to work. There's a lot of things that you can do with this list to customize and tailor. And like I always say, your most valuable resource that you guys have is your email database, your CRM. Yes, Facebook, LinkedIn is great. If you guys don't have a list or CRM, then you do have to rely on Facebook. You do have to rely on LinkedIn to help you prime that proverbial pump. And that's okay. It's okay to do that. Part of it is, and that's why I like so much about the LinkedIn newsletters, is LinkedIn will still give a good chunk of your connections will see your stuff, but the LinkedIn newsletter goes directly into their email. All right. No opt out. Once they subscribe, they're going to get an email sent to them and go from there. And I think that's literally low hanging fruit for you. And like I said, the most valuable stuff that you guys can do is having that email campaign. Maybe it doesn't have to be a little article like this, but pick out 1 or twice a month to do something like that. But you should be doing something weekly. One should be some sort of news, something valuable to them. One could be if you're going to local REIA clubs, invite your local market out to your local REIA club. If you're going to an event, like if you went to Magnify Your Wealth this weekend, or if you went to Note Expo, or you went to the Western Secondary Marketing Conference, or you went to your local foreclosure auction on the first Tuesday here in Texas, or wherever it is. Those are all great little things. It could be one email that goes out to your database. Hey guys, we went to the local foreclosure thing, and here's 1 or 2, 3 things we learned. Simple. And then ask a past case study or deal. Pretty simple for you guys to create if you've done the deals or you're working on a deal. But this is how you're going to stand out. Now, you don't have to spend a ton of money, if any money at all, with these free, pretty much free resources. LinkedIn premium membership, I think, helps. If you want to use chat bot GPT, or like what I use, there's a little bit of cost to get the better 5.0 version of it. Still worth it. You still use the free version for the most part. But these tools don't take long to create. 15, 20 minutes to create it, copy, paste it, and put a little, change on it, create an infographic in Gemini Image Creator, and you guys are off and running and creating it, putting your own little spin on it. That's the most important thing, is yes, are you regurgitating a lot of AI content already? Yes, you are. But you put that little spin on it, that little change in what you would say something that only takes a minute or two to adjust it. It's the whole idea of getting eyeballs on your stuff and getting people to start recognizing you start being that search, being part of the search solution to people through AI sources. Okay. I've got a buddy of mine, Mike Hambright, who's an investor up out of Dallas. He's trying to interview as many real estate investors as possible, which is great for him, I think. Runs investor fuel, stuff like that. But I think he needs to be focused at least half his content on his knowledge base. He's bringing other people on, and that's great at giving content, but it's giving away his knowledge base and what he's focused on. This is why we always try to stay strictly to the note niche for the most part. Yes, we'll bring on some folks, like our next episode is going to be my buddy Mike Swinson, who's a short-term rental guy out of Minneapolis. I mean, not Minneapolis, St. Paul area in Minnesota, doing some stuff. He's got some great tools and strategies for you. But for the most part, that's why we stick straight to the note niche. What's going to affect you? What's going to help you? What's going to help you attract more more in funding? And that's what it is. They're going to search for you if you're talking to investors. Who is Colin Winnick? Who is Fernanda? Who is John Burns? And that will help out there. It's not meant to intimidate. If you're feeling like your little hiding hole's tightened up on, oh, I don't want to do this, realize, I guarantee most of you are going to be investors longer, have been investors longer than a year for the most part. If you're new to it, guess what? This is a great way for you to build that foundation. Easy, cheap, inexpensive, but it has exponential impact using AI resources because everybody's going there. As I said before, AI search isn't showing the website's rankings. It's not showing. If we go back here to the same thing I was showing you a second ago. Yeah, search, it's this content here they're looking for stuff. It takes a while to get down to these articles down here. Now, will it help you to have different things? Yeah, sure will. Okay. These are the things that you want to use, and this is why you can compete with these huge, the bigger pockets, the Zillows, the stuff like that out there. You'd be silly not to do. You use this to help you grow your engagement, grow your followership, grow your money partners, and actually act as a resource for people when they're searching or you're talking to that, hey, just go Google me on Google. Who is Scott Carson? Who is John Burns? Who's Boyd Pops? Who's Stephanie Goodman? To help you really start kicking ass where others are really sloughing off. And not many people are doing this. And this is why I honestly thought this was one of the most valuable sessions that I learned this past weekend in Dallas. It was so I'm not gonna lie, I had a broner. I was pretty excited about it. Going up and talking to Corey, and we dominate our niche. So we have the #1 podcast and we're YouTube, but all that leads to us really being one of the biggest searched aspect of things because we really are generating more content than other folks out there. And you ain't got to do it daily. Like I said, 15, 20 minutes a week. You put it on your calendar. You do it Monday morning. You share it Tuesday. Boom. That's the best way to do it. Research it Monday, post it on Tuesday, email it out Tuesday to your audience or post on your socials. It'll drive better. Monday's a little slow, but Tuesday, Wednesday, Thursdays are the best. And obviously Friday, people research stuff, but let's put it at Tuesday. And so I just want you guys, I was really excited about this. I know it's not your traditional, like following up with the note deals or breaking down case studies. We'll do more of that next week in a couple of deals that we're looking at. But I just wanted to tell you, here's one of the greatest things that you guys can do. And I was blown away. And I was cracking up because there's a lot of business owners in the crowd. They're like, not real estate investors necessarily to say, but they were like, some of them were like, oh, how, there was a dental office. There was a cardiac surgeon there. There was other people that do other things. You get a lot of retired folks there too. But it just adds that you guys, these cutting edge tools, you don't have to be afraid of AI. Use AI, embrace AI to really help take your business, your fundraising, your deal sources to the next level so that, when asset managers are searching for you, when you're using like Octopus CRM to connect, they're searching with you, they're going to go to your profile, they'll see these articles, they'll see what's going on here, Rory, and that's how you add credibility and create credibility, not only to your profile, but to your connections by doing this. And this is how you get the word out. When I started years ago, back in 2010, when I started creating content, shooting on this little flip cam and then posting to Facebook and posting it to LinkedIn, posting other things about what I was doing and creating a blog. You can use a free blog. You can use Medium too as another version of a blog service for you. I was using Help Pages at the time. That helped me. It attracted more people than I knew what to do with when I started off with. And that's the problem that I want you all to have. It's a good problem. I just shared my expertise, shared my journey, and I planned on it. Like I said, I started a blog 100K in 100 days. And by day 52, I couldn't keep up with the blog because I was so busy. And that's a beautiful thing. I want you guys to be busy with more note deals, more case studies and stuff like that, getting the word out what you're doing so that people are coming to you versus you having to go out and find them as well. I mean, you're still always going to do that going out to asset managers, but there's a lot of times you can monetize your message and your expertise to really drive home a lot of great stuff for you. All right. So any questions, any comments, any concerns anybody want to raise before we let you go for the day here? Once again, thanks for jumping on here, Zoom guys, and hopefully this was valuable for you. Not meant to intimidate, not meant to scare. I just really love the fact that you guys can take advantage of what's going on, because it's things have changed, right? I remember when I thought I made it as a marketer, I was very fortunate. I had a guy, Roland Frazier, one of the smartest people really when it comes to marketing I worked with for a couple of years, and learned from him and learned some of my amazing marketing skills from him that I've had to hone because marketing has changed over time, right? Changed a lot in 15 to 20 years. So when I see something new that I know will have impact, if you do it and stick with it and keep rocking and rolling with it, this isn't going to take you going back to school for 10 years or 4 years. Literally, 15, 30 minutes once a week, guys. This will have impact. Heck, you could sit down on a weekend and write out your whole month in an hour or two, or create it and then schedule it to go live on LinkedIn, to schedule it to go live at specific times, scheduling the email blast to go live if you're using a CRM. But making sure if you've got a website, a landing page, I would go on there, and if you can add a page to your blog or create a blog on that website, or you're putting just some quick blurbs on there, so it drives people to your LinkedIn profile, or shows people and let you know what the hell you're talking about, then do so. All right, do so, because otherwise you're going to see, if you're not doing anything, you're going to see any type of activity you've had to a website come down to a trickle and get basically pulled in other directions, because AI is pulling all this information. If you're not giving information up, it's going to be next to impossible for you to get anybody to come back to you. All right. But you all can start it today, embrace it. It's showing that you know what the hell you're talking about. You're an expert, and all of you really are experts. Even if you're working still full-time in another career, you're experts in moving from full-time work to part-time or becoming a full-time investor. And everybody loves that story. And people want to be with doers. And you're going to get better at it. You're going to create, and AI is going to understand what you're saying more and be able to include in your a little bit of comedy, your words and stuff like that, to make it more about you. And that's what we really need, is we need more folks like you guys creating great stuff out there, because there's a lot of people looking for stuff, but they don't know where to turn, and they can trust you. All right. There's no questions, no comments, concerns. As always, thank you guys for being on here. If you have any questions, feel free to talk with scottcarson.com. Very surprised, especially over the weekend. I did end up getting a couple more bids on those Texas assets, but they were higher than I expected to be, because my play on a lot of them is going to be to bid on them. The reason we came in there, the idea is, we were at higher than expected, but the goal is like, okay, if we can foreclose quickly, can we still make a little bit of profit in here in Texas in under 90 days? If we can do that and they don't sell, we stand to make a lot of money on the back end, taking the REOs back. But on the short term, 60 to 90 days, if it does sell at the foreclosure auction and we get paid off in full, it's going to be a decent return for my money partners. For the short term, I'll make a little bit of money, but the big stuff is in that back end if it doesn't sell. So we're going to work to, in due diligence right now, reviewing payoffs, servicing, and stuff like that, and looking at where they're at the legal side and how long it's going to take us to foreclose. Because the right now on the Texas ones, I would have to file the foreclosures 21 days prior to the first Tuesday of December. And I'm probably not going to make that mark here in November, because it's due diligence through the rest of the month. But that means a January first part of January or first part of February foreclosure, and then going from there. And then rehab and selling, if it doesn't sell at the auction, that means trying to be listed by March, April, if not sooner, and trying to get it sold. So luckily, most of these assets are pretty clean. Nothing too heavy on the clean out crew for what I can tell from looking at interior BPOs, interior inspections, stuff like that they provided. So we'll keep you in line with more stuff that's coming out. Look for some of those case studies as a great learning aspect of things, and we'll be documenting a lot of stuff along the way for you guys as well. So any other questions, comments, concerns? And if not, have a great rest of your week. And like I said, don't be a stranger. I know someone will see you throughout the week with your coaching calls, but otherwise, go out there, take some action, everybody, and we'll see you at the top. Hey, good morning, good afternoon, and good evening, investors. This is Scott Carson. I hope you are doing well today. We've got a very special offering on a deal that we're working on currently right now. So if you're listening to this podcast and it's still December of 2025, this is a deal that you could put your lazy asses to work on as a passive investing or funding partner for this deal in Georgetown, Texas that we're working through. Now, this deal is one of 48 reverse mortgages that we had come to us from one of our hedge fund. We made offers in about 15. We got countered on 15. We worked this back in, and through due diligence and everything, we finally settled on this one deal and another one in San Antonio that we'll be discussing later on. But this is the one that I think is the juicier of the two deals that I wanted to bring it up and give you guys an opportunity. Like I said, put your IRA to work, put some passive investments to work. And this isn't a long-term deal. This is a shorter term, probably around a 6-month or less deal. We're even figuring in if it takes a year to do this, great, it takes a year. But we honestly foresee it being a 90-day foreclosure process and or an additional 90 days to fix and sell the property based on current conservative numbers by our local realtors. Now, this is a nice looking little property. It's not the biggest property in Georgetown. Texas. Georgetown is just north of Austin and Round Rock. Basically the Williamson County. This is a reverse mortgage where the borrower's already passed away a couple years back. It's a HUD loan. HUD's already taken control of the property. And I've actually been out and seen the property once or twice. There's a photo from about 2 weeks ago when I drove by the property, walked around it, did an exterior video. Property's in really good shape. We do have an interior inspection report. We were not able to get in the property, but it does just need some general updates. Clean, a little paint, no structural damage. The roof looks good. And based on the values and what we see in today's on market and where it's located, this is a great little deal to get rocking and rolling. So go through the numbers. So we're currently have already gone through the due diligence. We've got realtor CMAs. We got the full loan collateral file from the seller, which is a hedge fund. We're waiting on one document to come from HUD to the seller that then we can then go to proceed to close on. But that may take a week or two. Like I said, we do have an interior inspection report, title update. It's with a servicing company right now. And legal has not started on it. There's not been any legal. So when we buy this note, we would have to start the foreclosure process. So we've got a local attorney ready to rock and roll on that. Just communicate with him today, actually, as I record this. So it's a very clean file. Property's in good shape. Like I said, I've got a 360-degree view of me walking around the property that we've recorded, and be glad to share it with you as well. But like I said, it's a great little starter home on a great area just down the street from great schools there in Georgetown, Texas. And I'll disclose the address to those that are interested in more on. But like I said, it's a not a biggest house, 3-bedroom, 2-bath, 1,348 square foot in the 78628 zip code. It's on the west side of 35 in Georgetown. It was built back in 1985. One or two owners. Like I said, technically the owner now is deceased, and the heirs have already cleaned the property up. The heirs are not fighting the foreclosure on this. It has a current legal balance just updated about a week ago from this servicer of $185,000. A current fair market value of about $297 to $329. My realtor was able to come up with that kind of range, which is not surprising depending on that square footage and depending on what kind of rehab and stuff like that is done to it. But we're going to conservatively say $297. Okay, so there's about $112,000 difference between what's owed on it and then the low end of the fair market value. We can pick up this note at a purchase price of $170K. That's already been approved. There are $5,600 in back taxes owed right now. And what we would do is look at this basically being a 90-day foreclosure. Once from the time that we fund, 90 days to foreclose, and then Days on market, about 75 days, average days on market in the Georgetown market. We're going to say 90 days. So basically a 6-month deal from start to finish on what we expect, adding that we're sitting at a pretty good spot. Even if the value is above 330 or 340 or 350 based on different numbers we pulled at different times, 329 is the high. But based on what we're talking about tonight, we're going to go conservative with that, okay? And like I said before, we've also got interior inspection reports. There's no structural damage. There's no leakage, no water leak, stuff like that. Yes, the appliances are a little outdated. Yes, it needs a good coat of paint. Yes, the yard has some trees that need to be trimmed, and a lot of leaves need to be raked as well too, but it's in really good shape. Just a little TLC because it's been vacant for 2 years. Anyway, so we're looking for funding of $176,000. That's going to fund the actual note purchase and the back taxes, and that should also cover the foreclosure costs. We're also looking at, we'll probably, if we have to cover a little bit more of the foreclosure costs, we will do that. But there's 2 predominantly exit strategies with this deal. One, since this is a first lien position, we would be foreclosing, and based on, the legal balance being about 190 if we pay the taxes off ahead of time. It might sell at the auction in 90 days. That might be the very first thing it sells at the full legal balance of the auction, because there's like I said, over 100 grand in equity between the balance and what our bid would be, and then the value of the property. The second is if it doesn't sell at the auction, then we take it back as a real estate owned or as a foreclosure. Once we do that, there's no eviction because the borrower's already out of it. We'd immediately go into changing the locks and starting the rehab immediately to get this marketable for a fast sale by March. All right. Or as soon as June, if it takes us starting the foreclosure in January, getting it through it by March, and then a June sale date. But we're willing to pay an investor 10% on the money invested. So 10% on that $176,000. It's basically, it's a 90-day foreclosure process. That's $4,400. If it does take us an additional, 180 days, that's an $8,100 in interest paid to our investment partner. Okay. Now, if we do a foreclosure and take it back and fix it up, there are a couple different things that we're willing to do. But literally, just if it's worst case, if it takes us 6 months to foreclose on that, that's $8,800. It should not take that at all in Texas, but I put that number up there just so you know. Okay. Now, first strategy, which may happen, we have to be prepared for this, is it sells at the auction. And like I said, if we fund the note plus the taxes, that's a $176,000 investment. That's a 56% of roughly that fair market value. Now, the legal balance, if we advance the taxes, would bump from 185 to 191. If you minus the $176,000 that we borrowed, that's technically a net profit of 156 between what's paid off and what we borrowed. If we pay the $4,400 to our investor, it takes 90 days. That's a net profit to us of about $10,000. If it does take 6 months, that's a net profit about $7,000, somewhere between $6,000 and $7,000 for us, which is okay. We would rather have this thing be done in 90 days, but that's still a phenomenal 10% return for something in and out relatively fast, right? That's the first thing. Okay, not excited. Making 10K to foreclosure auction is better than nothing because it's Texas, it's fast. Maybe it could be as soon as 60 days. What I'm willing to guarantee is if it does take sooner than 60 days to take the foreclosure and it does sell at auction in less than 90 days, I will guarantee 90-day interest payments. So basically a 3-month prepayment penalty if it sells that way, okay? So you make a little bit better than 10% or 12% we do it in 60 days. The attorneys we have done a lot of foreclosures here. They're one of the best attorneys here in Central Texas, so we're not too sad about that. Just got to go through some, not really jump through any hoops, but just basically get the death certificate and other things, which are very easy to get, and then file the notice of default. As long as we do it 21 days prior to the first Tuesday of the month, if we close by December, we could be filing it for a February foreclosure date. So something to keep in mind about that. Anyway, if it doesn't sell at auction, which we hope it doesn't, that's the actual where the profit comes into it and makes it a really great deal. This is an auction sale. It's okay. You make some quick return and move on. There's worse things to do. In and out of another deal. But if it doesn't sell at the auction, that's, like I said before, that's where the profit lies. So if we take it back as an REO, we would ask the investor to fund an additional 20 grand. That's basically the note plus the taxes plus 20K in rehab costs. That's really about all it really needs in that. And that's still at a 66% of the low fair market value of the 297. So you're still at below 70% of value in an REO. We would secure your investment, obviously, with a first lien on the property. All right. And if you take the numbers, basic numbers, if we take away 10% of the 297, which is what our list sales price would be, All right. 290, it's basically $30,000. So now we have a net of 267 after closing costs and commissions. We take away the 196 that we would, is what we borrowed at that point, which is the 176 plus the 20. And then we add our money cost for 1 year. If it took 1 year, and like I said, if it's going to go to a REO sale, I'm willing to do a 1 year prepayment penalty at that point. So you get a full 19K in your money costs. That could potentially put your ROI up closer to 20% on a 10% interest only deal with 1 year prepayment. So then you figure our net costs are 215. That gives us roughly about a $52,000 profit on the 267 net sales price, which is not bad. If it sells for more, obviously it's a higher price point. But this is a potential deal to make 10% or greater on your money. Like I said, we're looking at two strategies. One could be just the 176. If it sells at that weight, great, you're making 10%. If it doesn't sell at the auction, then we take it back. And then if it does take a year to sell, which I doubt it would based on the market conditions right now, even with other areas dragging, it would still be a 1%, 1 year prepayment penalty on that. So if it's done less than a year and you make it above 10% return. Like I said, it'd be a first lien. There's no other liens on the property. By paying the taxes off, we avoid a tax foreclosure. Then we just get in, get out, get this thing listed, cleaned up, maybe a fresh coat of paint on the inside, some new appliances, and get rocking. A lot of that stuff, very familiar to do. We use a vendor called CertaPro here in Central Texas. It's clean, painted up multiple properties on this. I think most of the property inside is laminate, which is in good shape. If there is a little bit of carpet, that's pretty inexpensive to put in there. And just a fresh coat of paint and carpet and appliances, really just a lipstick on this thing. So that's what we're looking to do. Would love to, if you're interested, love to talk to you about it. Like I said, we're looking for sometime in December, probably around the 15th, 16th for funding. So it may take a little bit longer. It may take a little bit less. But if you're interested, we can use your self-directed IRA. Like I said, we're willing to give you a 1% interest on an REO flip, whether it takes 6 months or a year. And if you're interested in finding out more information, getting the full due diligence package on this stuff and seeing exactly what we're doing, the full address comps, our exterior inspection, the interior inspection report provided by HUD, feel free to reach out to me directly at talkwithscottcarson.com. That's talkwithscottcarson.com. They'll come take my calendar, or just send me a text message at 512-585-3810. That's 512-585-3810. And or email me at scott@weclosenotes.com. But I would love to talk with you. This is a great little deal to put, if you got under 200K in an IRA and you want to put something together that's a year or less, this is a potential deal for you. So, like I said, reach out to me. I look forward to talking to you, answering your questions, and potentially doing more deals in 2026 with you. And let's talk. Let's make some money together, everybody. Thanks for your time. Have a great day, and we'll see you at the top. Good morning, good afternoon, and good evening, everybody. Hey, welcome to this episode of the Note Closure Show. As always, Scott Carson, excited to be here today. Definitely jacked up for today's special episode with a very special guest. I know that we've been talking about a different niche in the note investing class, talking about reverse mortgages. And that's led to a lot of folks asking us about how do you work probate leads, or how do you find probate deals for similar types of potential opportunities. So we're very excited. We've got a specialist who just focuses, well, he's also an active real estate investor in a couple of ways, but he has developed a business strictly around probate leads. Who am I talking about? Talking about the head honcho, the chief bottle washer over at US Leads List. That's Micah Nichols. Michael, how's it going today, bud?
Great. Thanks so much for having me.
No problem, man. So how did you get into this niche of leads that not a lot of people understand or target a lot of the case? I mean, let me rephrase that. They're not targeting that like foreclosure list or stuff like that. It's a little bit more of a niche, isn't it?
Absolutely. Yeah, I got started actually not by developing a business. I purchased the business. And so about 4 years ago, the former owners looking to cash in their chips, move on to the beach. That's from what I hear exactly what they did. Sold me the company and I transitioned, took it over, and it was great. They ran a digital business from paper, and so we kind of brought it to the 21st century, and that was our key value out there. But I was already in real estate. It was already kind of integrated with what I was doing, and yeah, basically since then we've just continued to make it better, more data, more accurate data, and just kind of trying to level up and help people make more money.
Exactly. So you live up in Wisconsin, am I right? Correct?
Yeah.
Southwest Wisconsin.
Uh-huh.
Which is always great. I grew up, or not we grew up in South Texas, but originally from Minnesota. So I understand we both got a little ice in our blood. I'm actually a bigger Green Bay Packers fan than I'm a Minnesota Vikings fan. So
Ooh, that must be tough with the family there.
I live in Texas. I'm a Cowboys fan, so that's tougher. I got to at least pick for somebody that can win a playoff game.
That's fair. Well, we could never finish, so that was the bigger problem.
Yeah, that's so true. But so let's talk about, you define what a probate lead is for our audience that don't know what that is, and we can kind of dive in from there.
Absolutely. Yeah. Well, let's actually back up just a little bit more, because what I would say our company, what I think we do better than anyone else, is we align death and real estate ownership, right? And so in most people's headspace, they're like, oh, probate. Well, yes, but no. So, really we're trying to align people who, find people who want to sell and target that and make that a smaller, more condensed list so you can have a more effective marketing budget. And so probate is a good place to hit. The problem with probate is that it's 100% public. As soon as they file that paperwork, everyone and their grandma, anyone who has the gumption to go down and look, can get it. What we're doing, it's before probate starts. So we're looking at the actual death. So we grab, obit, we buy government data. We bring in a bunch of different channels of data, and we line up, okay, if, this person passed away, do they have ownership of real estate? Those are the two pieces we're connecting. And from there, it kind of falls into four main groups. First one is kind of the probate, but usually it's pre-probate when we kind of are generating our data, right away. And then the other group is surviving spouses, trusts, and then the very last one is interfamily transfers before the death. And those last three never go through probate. That doesn't happen. I know there's exceptions, but for the most part, that doesn't happen at all. And so we're putting all those pieces together, trying to help folks talk to a person in kind of that critical moment when they're like, what am I going to do here? Do I need to move on? Am I going to stay? Basically getting the right message to the right person at the right time.
That totally makes sense. And I can understand. In the previous past, before I dove 100% in the notes, we used to actually target the obituaries and send a letter campaign out to them. And we deal with a lot of grieving spouses or family members that end up with a property that necessarily don't know what to do with it, or they don't have the money to rehab it because it's outdated or it's been vacant for a while. And those have been some of the best properties, not only profit-wise, but also in a lot of cases, you're providing a service, helping a family out in a time of stress. A lot of people are left with properties they don't necessarily want to own, or they're out of state in a lot of cases. So it gives an opportunity to provide somebody with cash that they need in a timely fashion, and also a win for us as an investor.
Absolutely. Yeah, and I think you hit the nail on the head. I do other marketing channels in my real estate investment, but for me, my biggest deals are the ones that I'm generating through kind of the probate. They're, have the largest margins, but a lot of times I have to work the hardest to get them. There's more things to go through, more logistics, if there's probate involved. But, the biggest one a lot of times is actually just emotions. It's like connecting with these people, hearing what they actually need, and then solving all of those problems.
Yeah. Can you define the probate, what it means to go through probate, and kind of the time frame for that? I know it's a little bit different, but can you share kind of a ballpark figure for folks?
Yeah, well, very much depends on state to state. Probate laws, literally in every state, they have their own nuance, they have their own timelines, they have their own, logistics, things you can do in one state you can't do in another. But in general, it takes, if someone's quick, they got all their ducks in a row, 3 months. And, for complex probate situations, it literally can go on for years. So it very much depends. And then, too, one of the things where, it's kind of a hidden gem that a lot of people don't talk about is the stuff that should go through probate but isn't. That's, if you can find someone money who has, a legal right to a property and show up and be like, hey, I'm going to help you with this process. I'll find you this money, but, I'm going to be kind of, your guiding light through this process. that's where for me, some of my biggest deals have come from, because that you're delivering so much value in that. They're like, what? I own a house. I legally own a house, but I didn't know. Showing up like that is wonderful for people. Mostly because it's so satisfying in helping them through that process, and you're getting a big win as well.
Now, you mentioned earlier on, before you purchased the company 4 years ago, that was mostly a paper business, and then you took it to digital. Can you describe kind of what that means, the paper business? Are people literally physically having to go down to like the county courthouse and pull these lists, or how does that used to work versus what you're doing now?
More and more, I was referring to how these guys ran their business. So they were in their 70s, and they were, we deal in a digital product. It's
Right.
records, and so they were taking paper orders. They're basically, it was more about how they organized their business, and it worked for them. It worked really well, but it didn't work for how I wanted to run my business, and so that was a transformation I was referring to.
Yeah, I've got some friends, some vendors that run businesses that are kind of like that too. They're very
It's great. You got to respect it, but at the same time, it's just it's not very adaptable to kind of moving needs and being able to do business quickly.
Yeah, that is definitely true. Or if they ever want to sell something, they've got to bring it into the 21st century versus just being on a spreadsheet or Google Doc, right?
Totally.
Now, let's talk a little about your investing. You've referred to it. What's your kind of focus, your nature? What do you like to focus on for your bigger bang for the bottom line? I mean,
yeah, it really very much depends. I would say I'm pretty deal agnostic. I don't actually do any notes, so I can't say that fully on this channel with you. But for me, I've got some commercial stuff. I do wholesaling. I do wholetailing, asset classes. I do land. Like I said, I do commercial, multifamily. I've got. So I'm kind of all over the board. I just love real estate. I like being a part of it. I really very much like the hunting aspect of finding a great deal and then trying to figure out how to monetize it properly. So that's kind of where I sit.
No, it makes sense. And you invest not only in Wisconsin, but what other states are you investing in as well?
I've done so outside of Wisconsin. I'll do wholesales and flips, but I don't. For me, I was doing a lot more last year. When the market was, just booming, it was easy to make money anywhere. And then kind of when interest rates got higher, it turned into more of a buyer's market. I've settled back into what I'm really familiar with, which is, basically Southwest Wisconsin.
Okay. Now, that's a great thing up there. What are some of the intricacies of investing in Wisconsin up there that maybe most people don't know? Just the cold, or is there anything else up there that people have to watch out for?
Yes, seasonality for sure. I mean, the summer real estate market is way different than the winter real estate market. I just had a property flood. I was just talking about this morning. I had a property, a fixture on a toilet broke, and we had term insurance, and I didn't know. I'm telling you guys, my failure. So we had to take this one on the chin. It's going to be $70K reno that we're just going to have to eat, and also it's sitting on our books this whole time too. So,
Ouch.
Yeah, watch out for Wisconsin winter. It sucks.
Yeah, the frozen tundra definitely applies in some cases.
Absolutely. But otherwise, I mean, the market here, it's getting more of an even playing field between kind of buyers and sellers, but especially in Madison, it's very robust. I mean, compared to Florida right now, like they are getting hammered. I was just talking to someone in Nevada and in Reno area, and he's like, man, like we're having a hard time moving our flips, and that hasn't been. I just put a property on the market the other day, had a full price accepted offer with no contingencies in 2 days, and so
Very nice.
That's been interesting, kind of watching that unfold. And thankfully we've got good employers here, good economy is strong, but it doesn't have that huge, kind of rise in appreciation like some of the coastal areas do. And then also the huge drop. And so
You've also got a little higher property taxes too, don't you, compared to a lot of other areas?
God, it hurts. Yeah, absolutely. Not great on that side of things. But you know, if that's what you have to trade for some price stability, you know, I guess, you know, it's I'll take it for now.
You're right. I'm in Texas. We have a high property tax as well.
Yeah.
And it just means you got to be a little smarter on your numbers to make sure that things are taken care of. But it's also, too, I like it because if you got somebody who's paying their taxes on a distressed note, that's usually somebody who's investing quite a bit to try to stay in the property, so it can be an advantage. But it's also something you always got to double check on that property, make sure those taxes are paid. Or facing a tax foreclosure is not a good thing in a lot of cases.
Absolutely not. Yeah, no. I mean,
Now,
unless you're the buyer.
Yeah, exactly. Amen to that. Exactly. That is the truth there. Now, what other services do you guys do? You guys just focus on probate leads, or you focus on a variety of other services that you offer investors as well too?
So, I mean, we do some just basic data aggregation. We skip trace, but for the most part, like that is our honed in niche that we focus on. So, kind of how the business works is like we, you know, talk to someone about, you know, hey, you know, is your area available? That's, you know, basically the first question. So we only sell each list 3 times in any given county across the nation. If there's 3 people there, we won't sell it to you. We'll put you on a wait list and you can get on when someone leaves. And then, you know, tomorrow actually, we basically drop our new list. And so it's like data as a subscription. So you sign up, you get data on the 5th of every month. And then, you know, the next month you get, you know, data on the 5th, and it's always deduplicated from everything in the past. And so you're getting basically new, fresh, relevant data to market to, call, connect with sellers who, you know, want to move their property. And that's kind of the business in a nutshell.
Leads fed to you on the 5th of every month, which is always really nice. And, you know, I've got your website pulled up here. It's usleadlist.com. And we'll also put the link in the description there for you guys to track it. Or you'd be able to click on that link and go directly there without having to remember this, or do it while you're driving or listening to it. And so you've got what's really your most popular counties across the country? You say 68 sold out counties. Is that predominantly in Texas or like Florida, or is it all across the board?
It's all across the board. Mostly big metros sell out first. You know, where, you know, I'm actually just hungry for clients because there's a least competition, and I mean, we just don't sell the data, but the data works better. Like some of my best performing counties are, you know, stuff that are outside of the metro in Wisconsin here, and there's no one else marketing out there. I really believe that, you know, well, actually, I'm closing on an 11 unit 2 counties away, and you know, I think it grosses $6K a month, and I'm buying it for $200,000.
Wow.
Like you just can't get deals like that in big metros. And yeah, it's a little bit of a headache, but you know, my return on investment is going to be, you know, that's basically a home run for me. And that's where I find those deals, is kind of those little small tertiary markets that are just no one's hitting. There's no pressure there. So
do you see a higher hit rate with more data in like retirement communities, kind of like I think of Williamson County, which is a big Sun City by Del Webb with a lot of retired folks up there, or 55 plus communities in Florida? Is that kind of popular where more stuff comes in, or not necessarily?
No, it's spread out. And one thing that, you know, I never really thought that I would know about is just kind of it's really consistent. So like, you know, let's say let's focus on what I know. So Dane County, Wisconsin.
Yep.
Basically every month I get around 120 records. It goes up seasonally. Wintertime, more people pass away. Less people pass away in the summer times. So there's just kind of this wave pattern, and it's relatively consistent. But it follows population. So, you know, just in any given area, a certain amount of people are passing away, and that's, you know, the more people there are, the more leads there are.
Yeah, I'm surprised that I have your website pulled up and I clicked on the Texas counties here, and you've got Comal County, which is down by New Braunfels, is sold out. Galveston County, south of Houston, and Guadalupe County, which is over kind of like New Braunfels, is sold out. But Harris, Travis County, Dallas County, Tarrant County, you know, for Ferris or Nueces County by now, Corpus Christi, those are all available, which kind of surprises me. But it actually excites me. I'm very excited right now because some of the county, like even Travis County or Williamson County here around Central Texas, is still available. And you've got a button up here, get your quote. Kind of how do you price this? Is it a per lead that comes on average, or how's that kind of work, Micah?
Yep. Yeah. So it's per lead. So, if you go to get your quote there on the top, it'll basically take you to a map and you can click on, whatever counties you're interested in, and it will give you a number. And so, I'll spare you kind of the multiplication that this thing does for you automatically. But basically how we charge is it's $1.50 a record if you subscribe. And that it's just an open-ended contract. So you sign up for, let's say Harris County, like you got clicked on there. And there's 200 leads, you're in for $300 for those records, and we skip trace them. We provide the contact information for the person who passed away, their spouse, if we can find them, and then relatives as well. We grab numbers for them, emails, and then we also look for that's funny actually, when I purchased the company. Sorry, let me digress for just a second. Sure. So when I was purchasing the company, the owners are like, we're halfway through due diligence. I'm pretty, I was already set on buying it. And they're like, Micah, there's this thing. It's called the inside list. And we use it to find our own deals. I was like, okay, well, what's that? And they're like, well, we search for people who own more than one property that also passed away. So, basically they're just concentrating the amount of properties that people own, and they're using the same kind of event-based data. And they're like, we've done, literally they transferred hundreds of properties, and we're buying at just ridiculous rates because, when you're dealing with investments at that scale and someone passes away and someone has to basically take over, manage those things, it ends up being a big headache. But if you come to that person at the right time and you can buy a portfolio of properties, then, there's some really serious negotiating power. So anyway, we search for, folks who have, more properties other than just their own. And so we'll kind of compile that and aggregate that for you as well.
That's really, really nice. There's a lot of opportunity there, ladies and gentlemen. Is definitely a way for you to get maybe on the inside track for you. Now, on your skip tracing here, what do you guys do with the skip tracing? What's the cost for that, or what's the how does that work for everybody?
Yeah, it's kind of broken out. We basically sell credits for 1,000 skip traces, because you don't always know how many hits you're going to get when you grab that data. And so, if you're doing volume, we get down to 6 cents per skip trace record. And how we do it, it's a little bit different. We actually use the same program that I was already talking about. So we find the owner, we find the spouse, if there is one, and we also find relatives, and we skip trace all of those people. And so it's definitely a tier up from what most people are normally doing. Normally you have to pay whatever, 5 cents for one numbers and no emails. And so we're doing a lot of data retrieval for that price.
Yeah, that's really affordable, and with the information there, it's very valuable versus having to hunt and peck to find one thing, and you get the entire data dump in one true skip trace, which is really what people should be looking for, because it's never know with no numbers and emails being outdated, having multiple sources for info it's one of the most valuable things out there. That's really, really cool. That's a great price on there. It's definitely a phenomenal thing, and doing it in batches it's definitely, it makes it worth your guys' time too, versus doing the nickel and diming aspect of it. Hey, buy 1,000. It makes it worth everybody's time there for it. Plus, if you're, especially in the note business, we're doing skip tracing. It's usually not one lead. It's literally 20, 30, or even 100 leads a lot of times based on the offers we're making. And it comes in really handy. Do you work with any like mortgage companies or other note investors pulling chunks of skip traces for you right now, or not?
No, not really. I mean, so most of our clients on the skip tracing side, they are, investors. They're just basically, looking for actual property, not notes specifically. But
No,
that information can be kind of pulled up, either way. We could do that side of it as well.
Mm-hmm. Now, with your clients, I know you probably got a mixed bag across the board, or do you see kind of one specific style investor, kind of your avatar that works really well with the probate leads?
There's basically three. I mean, so there's just the, standard investor. They're just looking to purchase, and And then we've got the kind of investor slash agent hybrid. And so they kind of do both. So they'll retail list stuff, or they'll buy it themselves and flip it. And then we also work with just straight agents as well.
Very nice, very nice. What's your outlook for 2025 and beyond? Where do you think it's going?
Man, it's hard to say. It feels like a bubble right now. But the Fed has so much power to change the whole landscape of things. You know, tomorrow they could say, hey, we're going to drop rates to 0 again. And that would turn into just a flurry of contracts where, you know, people couldn't afford to buy stuff. And now they can, because really, when it comes down to it, people measure, you know, monthly payments. That's how they're kind of doing their finances. And so, you know, high price, but, you know, low interest rate makes for an attractive situation. I think we're in for a little bit of pain before the Fed steps in. But, you know, frankly, it's just hard to tell. It's hard.
It totally is.
I wish I had a crystal ball, because, you know, the leverage of that could be monumental.
Right. Now, you've owned the company for 4 years now. Have you seen an increase in probate leads as we have an aging group that's kind of aging out of that or passing away? You do see an increasing trend in leads coming in?
Yeah, yes, actually. That's very observant of you, actually. We basically the last 4 years, our list has grown. Not a lot, but just kind of in increments, where we're looking back a couple of years and like, this is more than what we were doing before. And I think you hit the nail on the head. Just kind of aging population, you know, the boomers specifically, yeah, so we'll see kind of once, you know, if there's an apex in that, and you know, what happens after it. But, you know, there's so many assets, from business to notes to real estate, that are going to come for sale just because of that, you know, that boomer generation.
Now, I don't know. Do you see in your leads too more stuff that's got equity or is paid off versus that are encumbered with mortgages? Do you have any, you know, visibility to that or not?
No, we track it a little bit. You know, you mentioned reverse mortgages earlier. You know, we see some of that, people kind of funding their retirements that way.
Yep.
But in general, I would say most of this stuff has, you know, very high equity.
Very nice.
Would expect.
Yeah, exactly. Any hot pockets of the country that you're seeing more or better deals? Maybe we should save that for off the mic.
Well, it's so funny because, you know, like, I've got a guy in North Carolina, he called me the other day. He's like, you know, every year he's like, you know, pretty much you guys are good for a couple $100,000 in profit. You know, the data that you push me. And then, you know, I talked to him and he's like, man, it's been quiet. And all of a sudden I get this call, and I've got a, you know, I just closed, and I'm going to make 110,000 on one deal. And it's like, you know, it's funny how real estate's like that. I'm sure it's similar with notes. It's like you get someone who just needs to offload it, and you buy this thing for a song, you know, whatever, 30 cents on the dollar. I don't know if that's a real thing, but it must be, right? Yeah, that's what you're hunting for.
Amen to that, brother. I mean, those deals, I mean, we buy a lot of stuff. You know, we used to buy a lot of distressed debt back 10, 15 years ago at, you know, 5-10 cents of the dollar, you know, and take a while for it to foreclose if it was in Florida, stuff like that, and it would appreciate up, so you're buying better. Now, we don't see necessarily that, but yeah, there's still a lot of great deals. We got some offers approved at 50 cents on the dollar just the other day. We closed on, we finally sold out a property that it took 2 years to foreclose on, but we bought it at 30 cents on the dollar and made a song on it. And it's that consistency of, like anything, following up in a lot of cases too is some of our better deals, and people we followed up for 90 to 120 days. And you probably don't know this, but besides your own investing in the stuff there, how critical is that follow-up with probate leads with family members and stuff like that? Should you look at it 30 days, or should you plan it on 90 days, or what do you see out there?
Follow-up's instrumental. I mean, for me, I'm actively scrubbing because it's a moving target. Like, you know, I'll get a list and I'll send mail out right away. I market in a couple different channels, but I'll send mail out right away. And people are calling me like, hey, you want me to connect you with my agent? We're going live next week. And, But, you know, other stuff, like I'm literally mailing for over 2 years. I used to stop mailing at 2 years, and now I just basically scrub off anything that's MLS active or sold, and I just keep on mailing to it, and cold calling is what we also do.
Very nice. That's key there, because I know it 80% of sales made after the 5th contact. If they got a realtor, okay, great there. Let them handle it. Move on to something that's going to get us a better price, at a better better discount for sure than trying to list on the MLS a lot of times.
I mean, I would say, yeah, that's the real magic to any business's follow up. You know, if you've owned a business, you can understand that, you know, people will say something, but, you know, it's hard to get them to take action until they recognize your voice, you're familiar, they know your process, they've got a little bit of a track record. And then all of a sudden, you know, saying that, yes, that it actually is going to move the needle for your business, you know, that doesn't happen until a lot later. And so staying consistent is definitely key to, well, this business, but any business.
Really. Right. Now, people have poo-pooed on direct mail a lot of times. It still works, definitely.
Works for me. I mean, this last year, I did my largest deal ever from, not ever, but I wholesaled the deal. So I assigned it to someone else, but we walked with $250,000 from direct mail in my hometown in Madison, Wisconsin. And so no, it still works. You just got to be consistent.
That's awesome. Well, Micah, we appreciate you coming here on the Note Closure Show and love the service. We look forward to working with you on your services and signing for a county or two to get the ball rolling around here locally. And then also taking you up on using your skip tracing services too out there for you. What's the best way for people to connect with it? Is it going to the website and connecting there and starting that process, or what's the best way?
Yep. Yeah. I think basically just going through the quote process on the website. And then from there, you know, I've got a sales team that can help out. And then ultimately, you know, if you guys convert, you decide this is going to be a great fit for you. You know, we can have kind of a group meeting where I basically go through my whole game plan on how it works, you know, to market to the leads, how to talk to them, how to get the most from the list.
Awesome. So you provide some support to folks besides just giving them the list then, huh?
Yeah, we try, you know, I put my face out there and talk to folks. So no, it's fun. I actually, that's one of my favorite. It's in a couple hours here. I'm going to have that call. So hopefully I'll see some of your listeners on there.
Very nice. And so you do a weekly call, a monthly call with everybody, or?
Weekly.
That's phenomenal, guys. There's not many lead sources that provide that follow up or that kind of coaching along the way. And that's phenomenal. That's a number you can't put into that per lead aspect of, but it adds so much value to keep people and hold their hands across while they're working the process. That's awesome, Micah. That's downright awesome.
Well, hey, I really appreciate you having me on here. It's a pleasure getting to, you know, get some FaceTime with you anyway. But,
yeah.
Thanks so much for having me.
No problem, man. Glad to have you on here. Once again, guys and gals out there, this is something you're looking for. Check it out, usleadslist.com. We'll put the link in the description out there. Give it a try. Give it something check out your county. Check out a county you're investing in. You know, definitely an opportunity to find some discounted deals well below what people pay in retail. And like I said, the magic is in the follow-up. So go out, take some action, and we'll see you at the top. Hey, real estate investors, this is Scott Carson. I'm known across the country as the Note Guy, and I've been an active note investor focused primarily on the niche of non-performing notes, distressed mortgage notes on residential commercial properties for almost 20 years now. My company is WeCloseNotes.com. And I know there's a lot of different things when it comes to the note world. Are you buying performing notes? Are you buying owner finance notes? Are you buying institutional debt like I would focus on? Are you buying first, seconds, contract for deeds? There's a lot of questions. And it can be very confusing about what you can or cannot do. So one of the great things that we've hosted for the last couple of years that we do on just about a regular monthly basis is we host our one-day class called Note Weekend. If you go to noteweekend.com, you can register for a free 3.5-hour class. We'll talk to you and share with you how you find, fund, and flip non-performing notes. And yes, you can buy non-performing notes from banks, hedge funds, and a variety of different hard money lenders out there for your own portfolio. No, you don't have to have millions of dollars to dive into the non-performing note game. We've got students that have bought plenty of deals with 25, 30 grand, getting their ball rolling, using their self-directed IRA, who are tired of dealing with toilets, tenants, trash outs, tired of battling contractors and GCs to get properties rehabbed. We all know the market is changing, And while it may not be like 2008, 9, and 10 again, we do see a lot of distressed debt out there on both the residential and the commercial side. So if you're thinking about diving into the note game, becoming a note investor, a lien lord, as you like to say, versus a landlord, or you just want to figure out what it is about the sexy side of real estate in the note space, well, check it out, noteweekend.com. Doesn't cost you anything. We host it live, usually the first or second Saturday of each month. You can go today, register at the website, noteweekend.com, register for the next live class that we host. You'll get sent a replay of the previous class so you can start learning about the note business today. No questions asked, no credit card needed. This is a great way for you to dip your toes in the water and see if it's warm, because I guarantee going through our one-day class, you want to dive into the deep end and become a note investor. So check it out, noteweekend.com. You can also go to our website, weclosenotes.com. Check out our podcast, check out our #1 YouTube channel. We are here to help support you. Whether you're an experienced investor or you're brand new to investing, Note Weekend is a great place for you to get the ball rolling. People often say we cover more in our 3-hour class than most people cover in their 3-day class. So check it out. Love to have you be part of our Note family, but get signed up today at noteweekend.com. Thanks and have a great day. Hey, real estate investors. My name is Scott Carson. I'm known across the country as the Note Guy. And for over 20 years, I've been an active real estate investor focused on buying distressed real estate, distressed notes, distressed mortgages, and foreclosures, and working with other investors who are either brand new or experienced to put their money to work in amazing deals. And one of the greatest tools of wealth building that we have here in the United States is a self-directed IRA. That's right, a self-directed individual retirement account that you can put to work in buying real estate, in buying notes, or lending money to other real estate investors to make above average returns. And our preferred IRA company is American IRA. Right here, guys, they do an amazing job. Customer service second to none. They're out of North Carolina, and Kyle, Janice, the whole team over there are there to support you and help answer your questions when it comes to your investing needs. Now, if you're leaving a job, you've got a 401k or an IRA from a previous company, you can't use that to buy notes or real estate. Now, yes, you can buy it and be self-directed in the funds of the company, but you don't have the opportunity, if you're with a Schwab or Fidelity, to go put that your hard-earned money to work to buy your rental property, to buy a performing note, to buy cash flow, to help you get ahead of your retirement, your kids' education, helping your spouse retire, your parents retire. Self-directed IRAs, like I said, are one of the greatest resources for you to put the power of compound interest to work to help you get to that end goal, what it might be. Maybe it's living more, higher on the hog, or just taking it easy. But if you need a self-directed IRA company, American IRA is the #1 self-directed IRA company with the best customer service, there to help you take advantage of the different loops where you can grow tax-free or to tax-deferred wealth, depending on what you and how you structure it. They can even set up self-directed HSAs, health savings accounts, educational IRAs for your kids, your grandkids, your cousins. All right. SEP IRAs, solo 401ks, besides just your traditional or Roth IRA. Check them out at AmericanIRA.com. Tell them that Scott Carson sent you. You will not be disappointed. You have a wide variety of self-directed IRA companies, but they're not all created equal. If you're looking for great customer service to help answer your questions, to hold your hand through buying a property or buying a note with your IRA, then check it out, AmericanIRA.com. Tell them that Scott sent you, and they'll take good care of you. Good morning, good afternoon, and good evening, everybody. Hey, hope you are having a great day. I'm excited to be here with this episode. So much I've wanted to, it's been so long, I've wanted to have this guy on. It's funny that we have been in each other's orbit, missed out at FinCon, missed another event. We were already connected online, and people are talking about him, me to him, and vice versa. And it's funny, we ran into each other in Boston at another event. A mutual friend of ours hosted an event there, and I was like, And I get home from FinCon, or get home from my trip to Minnesota before I went to Boston. Here's his book sitting here. But the great thing, guys, this is such something you're going to want to take notes on. You're going to want to pull out that piece of pen and paper, go back and watch this video if you're listening, or go back and listen to this a couple of times, because I guarantee this episode will probably have the biggest impact to your bottom line than any other episodes. Now, if you're not buying real estate or stuff like that's completely fine. This episode is for anybody out there who's struggling. As I like to say, or I should say what he likes to say, if you're broke, busted, and disgusted, maybe you've heard of that documentary on CNBC, Maybe you've heard him speak 2 times as a TEDx speaker. Maybe you've bought one of his 4-time Amazon bestsellers. He's the founder of the Shred Method and a financial educator at heart. He's got a huge, huge impact, and he's changing Americans' lives on a daily basis. Who am I talking about? I'm talking about the man, the myth, the Shred Method legend, Mr. Adam Carroll, joining us on here today. Adam, how you doing, buddy?
What an amazing intro, Scott. I'm going to have you record my alarm clock music in the morning. Get me fired up to get out of bed.
They're going to be like, it's going to be a great day. It's going to be a great day. Jumping out of bed like Zig there for you. Well, I appreciate that. I'm also available for birthdays, anniversaries, and bar mitzvahs, or quinceañeras if it's what.
Hey, Opa. Bring him to
Opa, there you
weddings.
go.
Bring him to weddings. No, it's awesome to be here, man. And I cannot believe that you and I, if we went through our Rolodex or our LinkedIn profiles, I'm sure even if we pull up LinkedIn, we probably have hundreds and hundreds of people in common. So
yeah, I think I saw like 1,500 common connections when I was sitting there. And I'm like, well, that means it's good people find good people. You know what I mean?
Totally. We probably went to different high schools together.
Yeah, I'm in Texas and you're in a different spot there. If you're in Iowa, Davenport, Iowa, is that right?
Des Moines,
Iowa. That's right.
Yes.
That's right.
Yes.
Des Moines there for you. But let's talk. Let's talk about. I don't want to get into your origins, so we can talk about that later on. But
yeah,
the thing that's I think is the most impactful, besides being the author of the Build a Bigger Life manifestation here, this is a great book. Everybody should go out and read it. Couldn't put it down from start to finish. It's also about 150 pages, which I like. 100, actually longer than 113, which is nice.
There you go. You know why? There's a little secret behind that, Scott.
Yeah, because people have 8-second attention spans like that.
That's right. The average college graduate reads 0.9 books a year. So I wrote 0.7 of a book that anyone can read. You see how that works?
That's exactly right there for you. It's a guide to becoming the architect of your own life. And that's one thing right now. And just looking at world and people I talk to, especially being in distressed debt and distressed real estate, I see people that are so struggling with things to get by. And I love what you're doing. And so, let's talk about that a little bit more. Cool. So how you're really making an impact to people's lives.
Yeah. I want to start by saying that whole idea of being an architect of your own life came about because I would talk to people all the time who are like, I don't love the life I'm in, or the metaphor I would use is they were living in a home that someone else built for them and it wasn't for them. It was for someone else. Right. And I think we can all relate to it to a certain extent that at some point you wake up and you go, this does not work. What I'm doing right now is not working for me. And to be an architect of your own life is designing a life that works for you. For me, it was all about how do I go take calculated risks, but not be risky. And if you take the right calculated risks, you can create financial freedom in relatively short order. But most people don't know that very formal process to get there, and that's what I teach them.
Yeah, that's number one, that's due to the lack of financial literacy we have in the United States here.
Totally.
I went to college. I had a football scholarship. I wanted to study business, got into finance, and always have loved numbers and stuff like that. And that's helped me more than anything else I can think of. But not everybody's going to go get a business degree, take finance classes to understand the basics of how money works and amortization tables and all that good stuff to save you stuff, right?
Totally. We use the A word and people's eyes glaze over. That's the problem. Like, amort is what? I don't even want to know. What's my payment? That's what people want to know, Scott. What's my payment?
Well, they want to know what their payment is because that's where they're budgeted. We all know such a budgeted mindset. What's my monthly payment going to be? But then they love to brag about the rate. My rate so low. You know what I mean? And I'm like, well, your rate doesn't mean shit because you can't buy anything with your rate.
That's so true. When I was delivering at that event that we were both at in Boston, and I was going through and I was saying, hey, congratulations if you have a 3.5% rate. That's good for you. But it's not the cheapest money you'll ever get. And you were nodding. You understood what I was saying. And a lot of people in there, it was like I showed the caveman fire when I was going through some of that content. But here's why. And it goes to your point about there's a lack of financial education. We are, as a society, we are engineered in a certain way to live up to our income. And I always say when I present that we don't have an income problem. Most people don't. They have a payment problem. And the reason they have a payment problem is because they started assigning all the things they wanted a price per month that they could afford. And before they knew it, they had blown through all of the spare money they had. And now all they can do is afford what they have, but just barely. And if you want to change that, you've probably got a number of things you've bought that are they're decreasing in value, right? These are deflationary assets. And the challenge is that we have to get ahead of the game by creating more discretionary income. We got to have more money at the end of our month. And so that's what I like to teach people is how do we do that in a way where you're playing really strong offense and really strong defense at the same time? And then that extra that you have at the end of the month, what you do with it really matters. And we're going to show you where to put that in a very efficient manner.
Yeah, that's the thing. I'm always amazed. Like I had to buy a new truck a year ago, just about a year and a half ago. I'd had my Dodge Ram paid off, 50,000 miles, owned the truck for 10 years, still drove fine.
Yeah.
My monthly payment was about $450, I think is what it was there for you. Cause I bought it it was a brand new pickup I rolled off, which was a stupid thing, but I got it at the end of the year with a good discount. So that was okay. Interest rate wasn't bad. But going back in and looking at new vehicles, a new truck being $80,000 or $125,000 for an SUV and stuff like that. Not even just a Tesla, but like I was like, no, I'm buying a used vehicle here and I'm gonna haggle for this thing. It took me about a week to find one that I liked, but I got the right price, stuff like that. But it's just a friend of mine was bragging, oh yeah, my SUV, I paid it off, $823 a month now. And I'm just like, what? That's crazy for that kind of stuff.
I just had the exact same conversation with a friend of mine, $1,080 a month. It's a house. It's certainly more than my first house payment. So
that's exactly what my first house payment was, right? $1,000 for a 3-bedroom, 2-bath, $135,000 house in Round Rock. I'm like, oh, but that's people. And I think that's one of the big things. That's one of the downfalls, I think, with all the social media and the keeping up with the Joneses. I got to have a brand new car. I can't drive my Pinto around Pintos aren't around anymore, but you get what I'm saying. Can't drive it till the wheels fall off.
Yep.
Because I'm not going to be as cool, or the image I have of myself.
Right.
That's like you said before, and that's not building up something that works well for you long term at all.
Yep. Yeah, precisely. I think you and I probably have something in common, and I'm guessing your listeners probably do too. And that is this idea that at some point in time, we want to never work for anyone. Do you know what I mean by that?
Yes, sir. Amen to that. Yep.
And it's like some people, that looks like retiring from a job and having enough money set aside in savings they can live forever. Or live on the money for as long as they live. For others, it means I want to be done at 45 or 50 or 55 or 30, depending on how early you start. That idea of never working for anyone requires that people think differently and actually do things a little bit differently than the common, ordinary, average Joe, right? And I'm just curious for you, where or when did that occur for you?
I would say, I think one of the biggest things was reading Rich Dad, Poor Dad, but more so the Millionaire Next Door. When it comes out in there, like we talk about trucks. The average millionaire next door drives a late model Ford F-150 white pickup truck. That's beyond, it's been paid off. They bought it used. They drove it. They're not that focused. I will also say a lot of it goes into my upbringing. My parents were entrepreneurs. We owned the local hardware store for years.
Oh, nice.
Growing up in there, knowing everybody, oh, you're an entrepreneur, you own the hardware store, you must be rolling in cash. And you're not rolling in cash. We weren't we weren't poor. We had food on the table, but we weren't wealthy by any means.
Yeah.
And then my first ever loan I did, Adam, was actually for my parents refinancing their mortgage out of an 18% interest rate.
Whoa.
They'd lived in it for 15 years, never refinanced.
Jeez.
We rolled in all their credit card debt, rolled in all their other consumer debt in there, and cut their monthly payments by over 50%. And my dad shed a tear at the closing table.
Wow.
And that's where I fell in love with the numbers more so than anything else. I can remember that, hearing my dad choking up on the phone with me and saying, we never thought we'd be able to do this, and it's changed our life. That's a number one moment that goes down for sure.
This, so first of all, thank you for sharing the story, because I can imagine that would be a very formative memory for someone to hear your dad tear up over a financial transaction of some kind. And effectively, it's about using finance to change their life, in one way, shape, or form. That's probably, I mean, not probably, that is the reason that I continue to do what I do with Shred, is the stories that I hear of people who will say, we recast our mortgage 18 months in and we saved $800 a month, and now we can fill in the blank, pay for braces, write a check for college, whatever it may be, right? And those kinds of stories, they just keep me going. It's fuel in the tank. I want to change everybody's financial picture to where they are lean, they are liquid, and they can do whatever they want whenever they want.
Because that's true freedom. Or
That's
if you
true
watch
freedom.
the movie The Gambler, John Goodman, he says that's FU money.
Yes. Yes.
So let's talk about a little about how you create and what the Shred method is for folks
Yeah.
out there. What is it in a nutshell for folks to get into it? And I know we're going to do a deeper dive into it, but
Totally.
for those out there to listen, what does that mean?
The Shred method is a unique cash flow technique that optimizes your income so that it is used in the most efficient use possible. And the subtext there on this, Scott, is that most people's income is not efficient. And what I mean by that is when we get paid, most people, they drop their paycheck into checking and their checking account balloons for a couple of days, right? We feel really good when there's extra, quote unquote, extra in our account. But for the most part, if you have money sitting in checking or savings, it is the same thing for us psychologically as letting your car idle in the driveway all day long so you can go to the store at 5 p.m. There's no reason to do it. It's an inefficient use of the vehicle, of gas. It's hard on the engine, hard on the environment, et cetera, et cetera. But this is how most people treat their finances. And so what Shred does is it takes all of the inputs, like your income, your expenses, your debts, and then it says based on those and how much income is coming in and when, it will tell you when to make lump sum payments against some of those debts to knock them out in record time. And the amazing thing is our average shredder, Scott, can be done, mortgage included, in 4.7 years.
Hang on a second. You're going to have to restate that. What's the average shredder? Because I think that's definitely somebody's got to pay attention to that. Did you say mortgage, other things, credit card debt at 28%, car loans, past student loans, all that stuff in 4.5 years?
4.7 years. 4.7 years. Now
you
that's
like that
the
0.7, don't you? 0.7 books and 0.7.
I like the 0.7. We do have some that are 7 or 8. They might have a couple of properties or a bigger student loan. But the bottom line is that we can change somebody's life in 12 to 24 months when we teach them some of the strategies about eliminating some of those debts and payments, and then really tackling some of the mortgage and getting to a point where maybe our goal isn't to pay the whole thing off, but how do we get to a point where over 50% of our payment every single month is going towards principal? And then there is this little known secret known as recasting, that you can recast your mortgage and minimize your payment to the ridiculous. Like, as an example, we live in a beautiful 5,000 square foot home in Des Moines, Iowa, which would be like $12 million in Los Angeles or New York.
Or in Austin, Texas, you'd be living on Lake Travis next to Michael Dell for sure. Yeah,
exactly. It's much more reasonable here. But our house payment was $335 a month through some of these strategies. I can't get an apartment in a college town for $335 a month. And this creates freedom and flexibility and opportunity and, our ability to invest in things that most people can't invest in, which is pretty awesome.
So let's take this back a little bit. Recasting. Let's explain what that is to folks out there. I know what it is, but let's explain to the layman out there. What's that mean?
So let's assume that you bought a $400,000 home and you got a mortgage for said home for $400,000. And the payment on that would be roughly $2,800, maybe $2,900, right? And so when you did the loan, you were like, I can swing just about $3,000 on my mortgage payment. And you may even have an extra $1,000 to $1,500 a month that's discretionary income. Sometimes you use it to dine out, might be for clothing for the kids or whatever, right? But it's $1,500. we would show you how within about 24 months, we could probably knock somewhere between 50 and 75 grand off the balance of your mortgage, taking you from 400 down to 325. And at that point in time, we could call the mortgage company and say, when we started, we owed 400. Now, 12 months later, we owe 325, or let's say an even round 300. Okay. And you would say to the lender, what I'd like to do is find out, can I recast my mortgage? What would be my new payment at 300,000 with 29 years left on this 30-year fixed mortgage with the same interest rate? And they'll do their quick calc and they'll go, well, it was 2,900. Now it's 2,400, 2,500, whatever it is. So we're going to shave $400 or $500 off right off the bat. We do this 2 or 3 times, and now you're in the house you love. You'll probably stay there for as long as you want, but maybe you can get your house payment down to $1,500 or $1,000 a month. It didn't take you very long, maybe 24 or 36 months. And this is the kicker, Scott, you still have access to all of the equity you created when you did that. So if you want to go drop 25 or 50 grand in a real estate investment, that's what we're going to go do. So the central premise of that strategy for us is that most people's homes, they treat as their biggest liability. Mm-hmm. And the way I look at my home, it is the single greatest asset building tool I will ever have. And that's what I'm trying to relate to people, is that I want you to look at your home different. This is not just this big expensive nut you got to crack every month. If you do it strategically, this could be the central point of all of your investing moving forward.
It totally can be. And I agree 100%. Most people, it's the liability or the biggest asset they're ever going to buy most of the times. And it can be an even bigger asset if you learn these strategies. So recasting, you talked about some things. Now they taking it from a 30-year to a 20-year mortgage on that, changing the interest rate. Let's talk about the specifics of recasting a lot of times so folks out there don't get confused.
So if all we're doing is we're making lump sum payments, what effectively we're doing is accelerating the amortization table. So we could take it down to 20 years or 15 or 7 or whatever the number is. And by the way, the shred method is powered by a software that's written on some complex algorithms. So if you said, I want to be done in this amount of time, the system will tell you how much it would take in order to do that, right? But the gist of a recast is, while we are accelerating the amortization table, when we recast, we actually said, no, I want the full 29 or 28 years remaining, but I want my payment to be as small as it can possibly be. And this is where, does the name Manish Pabrai ring a bell for you at all?
It does, yes.
This guy is. So I saw him interviewed on a podcast, and he was talking about the best business owners de-risk their entire operation. And when I look at an average consumer or a family of 4 or 5, and they're living right up to the line, and let's say there's 2 W-2 wage earners, and maybe they have a little bit extra, or they're trying a side hustle, or they're investing in real estate or what have you, but largely all of it's leveraged. So they don't have a lot of equity in the house. They're paying monthly payments on cars. They're trying to dollar cost average into the stock market, hopefully, probably just 401k and not much more than that. That is a risky situation, in my opinion.
That's why 85% of Americans are one accident missed paycheck away from being in default, for sure.
Exactly. And the same reason my wife and I have this argument all the time, why most people's deductible on their insurance is $500. And it causes their insurance premium to go up because they can't afford it. What if something happens? Can we swing 500 or 1,000 or 2,000 if our deductible's higher? So, one of the reasons that I want to share this with people is we're going to move into a very precarious financial time, in my opinion, for most people. It will be rampant opportunity for guys like you and me. But for most people, there's going to be a lot of touch and go moments in the next 12 to 24 months. And I think what we need to be doing is eliminating some of the risk in our environment, so that when the time comes, we are liquid, we are prepared, and we've got some dry powder that we can go out and take advantage of some of those opportunities that we're finding.
Well, that's a big thing. Lean, mean real estate buying machines, or whatever it might be. But even if it's just leveraging, being smarter, the recasting, and that's the thing. It's always amazing when people go buy a house, they look at their their TIL, their truth in lending document tells them exactly how much, if they just made the normal PI payment every month for 30 years, how much they're going to end up spending, usually twice that in interest over that
Yep.
time frame.
Yep.
And using that method to reduce, start applying more to principal to get that less interest paid off. You can have dramatic. That's why I say paying one is they say pay one extra mortgage payment a year, you'll knock 7.5 years off your mortgage. So if you do in a much smarter way, you can actually cut that in half, if not 4.7 years.
Right. Right. And I think what's missing in that, when people share that, which I wholeheartedly agree with, some people don't make the connection that, okay, if I do that, but now all my equity is locked in the house, I haven't invested or what have you. When we attach the power of a shred account, which could be a home equity line of credit, a business line of credit, a personal line of credit, cash value line of credit, a securities back line of credit, when we attach that to it, what we're also doing is saying, yeah, I put a bunch of money in my house. The equity is sitting there. I still have access to it. And I have access to it almost like a two-way street. Money comes in, money comes out, money comes in, money comes out. If I know how to use that super strategically, I can win both games. I can play the bank's game and win, and I can go out and invest and win at the same time.
Yeah, that's the thing. I always joke the banks always win. The banks know all the power of leverage and might as well become a bank. That's why I like the note business.
Totally.
That's one of the most valuable things. There's these tools and strategies that the banks use to leverage. As you said, you're putting it in a checking savings account, you're making 1% maybe.
Yeah.
What's the bank doing? They're going out and lending that at 7 to 14 to 28% of credit cards,
Totally.
or 32% of credit cards. So you can use these same tools to invest yourself and pull your equity out to put it to work for you. Because that's the thing I always say. It's like it's great you got equity, and you need to do it versus when you want to get around to do it. Because if you're out of a job or you're laid off, a bank's not going to lend you money.
That's
right.
right.
As you're working, take advantage of put these things in places so that you've got that when you want to leave, when you want to say I'm unemployed because I want to be unemployed, you're sitting in a much better spot.
I'll give you a great example of that. I just literally right before I jumped on with you, I was on with a potential client. They own their home free and clear, which good for them. They were both cops. I think one of them was injured in the line of duty and got a settlement. And that was the reason they got the house paid off. The house is worth, get this, $1.5 million. They owe nothing against it. And they're very, very particular and careful about that. Our house is our home. It's our castle. We don't want to risk this. And I said, I totally get that. And that thing only appreciates about 3 to 5% per year. So do you want to be able to take a few chips off the table a little bit at a time and start putting that to work for you? Because that would, in my mind, make you even safer, not less safe. But it is a mindset shift, right?
It's totally mindset, but by doing simple math, let's just do the simple math. 1.5, let's just say 5% appreciation. Yep. That means it goes up by 75 grand. It's worth $1.575 million.
Yeah.
But if you pulled a $500,000 line of credit off it and got a 10% return, you're doing better on that aspect right there alone, or buying an asset at a depreciation or at a discount, distressed real estate.
Yep.
You're getting not only more equity, but a better cash flow basis off it right there.
Totally. And we look at, I know you and I, you do notes investing. I tend to do a lot of syndication investing. And so when I put some amount away, it might be 50 or 100 grand at a time into a syndication, but I know that within 4 or 5 years when that thing dispositions, it's probably going to be 4x what we put into it. And so if we're turning 50 into 200 every 5 years, and we just keep doing it and ladder those opportunities, it's almost like setting up dominoes. And then as they start to knock down, they get bigger and bigger and bigger. But all of this requires that we think a little bit differently than what we're currently doing. And you probably heard me say this at the event at QLS in Boston, but our lives are perfectly engineered for the results we're currently getting. And you could plug anything in there, our money, our relationship with our spouses, our relationship with our kids, all of it's perfectly engineered for the results we're currently getting. If we want different, we got to do different. We got to look at doing things different.
I say if you're doing $15 an hour activities, you're gonna have a $15 an hour bank account.
Yeah. Yeah.
But that's it. Is we're all and that's why I always say people, you can't you have to people have to stop buying into the victim mentality. Oh, woe is me. We are all exactly where we're at today because of the decisions that we have made financially, career wise, income wise, family wise, spouse wise, because the decisions we made along the time. Now you can obviously change most of that relatively pretty easy if you have a different mentality and start doing different activities, right?
Yep, exactly.
What's the easiest thing that most that you see when your conversations or the shred method? One simple thing that they can start doing, most folks could start doing almost immediately right now that would have impact.
I'm going to give you two because I think one of them is just kind of like, this is table stakes. Everyone needs to do it. But if you have equity in your home and you are not using it in any way, shape, or form, the very, very first thing you need to do is go apply for a home equity line of credit. And for no other reason than what you just mentioned, which is if you were to lose your job or if there's some income stream that stops for whatever reason, the bank won't then grant you the line of credit. And this is the dichotomy of banking is that when you need it, they won't give it to you. And when you don't need it, they will give it to you. So best to have it when you don't need it, right? So number one, go get a home equity line of credit. Doesn't need to be crazy high, but go get a $20,000 or $30,000 line if you've got the access to it. That's number one. Number two is this idea that I shared a little bit that when people have quote unquote extra, what it creates is this like, oh, I'm good. I'm going to spend a little bit of money. I'm going to walk into Target and shop all the end caps kind of thing. Or I'm going to go into Costco and buy a bounce house.
We're coming up on Christmas season, the holiday season here. That's not that's a very likely aspect of things in a lot of cases, right?
And almost sacrilegious for me even to say it. But but here's the thing. What Shred forces you to do is to become even more intentional with your money. The reason that people are like, whatever, I have extra, is their mindset is, I have a 30-year fixed mortgage. It doesn't matter when I pay it off because I'll never pay it off. And I started flipping the script on that going, I grew up in a household where I heard, we'll always have car payments and we'll always have mortgage payments and we'll always have a credit card payment. And I started questioning, what would it be like if we didn't? And then we, lived without credit cards for a very long time, paid off our cars and drove with no car payments for a very long time. And then one day I thought, well, what if I just pay my house off this year? What would that feel like? And through Shred and what I'd learned, we knocked a house down, paid $280,000 off in about 3 years, lived completely mortgage free for about a year and a half, which was glorious. And then rates dipped and I was like, well, let's borrow 250 or 300 against the house and go drop it into syndications, knowing that this will probably be worth $1 million in a couple of years.
Mm-hmm.
And now we just do that over and over and over again and teach other people how to do the same.
I love it. I love it. I love it. I love it. Speaking my language there, Adam. Well, you should be speaking. That's the thing, is speaking everybody's language out there. Because if you are struggling to get by, like a lot of folks are, and you're curious, most Americans, if you've owned a home the last couple of years, you've seen appreciation go up. In some markets, you've seen a little bit of a dip, but you've seen more appreciation with homes being more unaffordable for folks out there.
Yep.
This mentality is something to help you take the switch. Quit listening to all the doom and gloom out there. There's plenty of it. Yeah. But this is the opportunity for you guys and the strategies to help you turn that doom and gloom into some sunrise, sunshine and sunlight coming into your day.
You're spot on. I mean, the amount of doom and gloom that's out there, if you were listening every single day and seeping in it. I mean, I don't think it's Lester Holt anymore, but Lester Holt used to get on the 5 o'clock news or 5:30 news and he'd say, good evening. And then he'd spend 30 minutes telling you why it wasn't,
Yeah. That's every news anchor, it seems, these days. It doesn't matter what it is.
Exactly. But here's what I'll say, Scott. Though homes seem to be more and more unaffordable, and I would argue that I don't think my home has doubled in value. I think the dollar has decreased in value. If you can create a spread between what you make and what you spend, and you do very intentionally strategic things with that money, you can create financial freedom for yourself and future generations in 5 years. Mm-hmm. And within 10 years, you could be completely financially free, creating more financial freedom for multiple generations more than you could ever, you could ever fathom. It goes back to this idea that it usually takes 2 generations to create a Rockefeller type fortune. And you got to decide, are you generation 1 or are you generation 2? And most of us, I'm guessing, listening to your show, are probably Gen 1. We are the ones who will begin creating it. And then we have to teach our kids what to do so they continue it.
That's the important thing, because it takes 2 generations to create and less than 1 to lose it a lot of times too.
Exactly.
Right?
That's exactly right.
When it's your own money, you're much more curious about. When it's somebody else's money, you're not as excited about it or not as safe with it. Now, how does the shred method differentiate from like a debt stacking or a debt snowball aspect of things?
We effectively use a debt snowball methodology or math behind it, but it's powered by the fact that your income is running through the line of credit. And so the problem with the debt snowball, just using that as a standalone, is that the debt snowball works in the fact that, I paid this debt off and now I roll whatever my minimum payment was up into the next higher payment, and the payments get bigger and bigger and bigger. However, if you're doing the snowball and you're not using a line of credit, if an accident happens or if there's an emergency expense somewhere, the rails come off a snowball real quick. And that's where people go, I was doing so good and now I'm not. Now it takes me 90 days or 120 days to get back in the groove. Well, with Shred, what happens is, because the system is telling you what to do, and yeah, you have a $2,000 car repair bill. Well, the system would say, stroke a check out of your line of credit, keep running the income through it. It feels like a little bit of a hiccup, and then you go right back to shredding again. So the power of using a line of credit and your home equity is that value is sitting there in your home. It's accessible to you. And if the mindset is, I'm still making progress, I'm still going forward, I slowed down just a little bit, but I'm still in forward motion, then I never really stop. Whereas with a snowball, something happens, you're like, slam into a wall, and now you're done for a little bit of time. Mm-hmm. So technically the term is velocity banking. And that's how it's been referred to. It's also called an Australian mortgage because there was an Australian bank that introduced this concept years and years and years ago. They had what was called a sweep account. So all of your income went into the sweep account, and at the end of the month, or before payday, whatever was left in that sweep would go against the mortgage. And so your sweep account was essentially a line of credit. And they tried to bring it to the States in the early 2000s, and it kind of flopped in about 2 years. And today we're just using a different tool, but it's a tool that virtually everyone has access to.
Mm-hmm. Well, that's the thing. You have access to it. And if you're recasting your loan, in a lot of ways, you're not losing that low interest rate that you've got out there. Yeah, right. Your interest rate on a line of credit, and it's a floating rate. It's not a fixed rate. So the mortgage payment or the monthly payment is less than it would normally be. Yep. So it gives you that flexibility to work those two against each other to pay the main one down there faster.
Totally. And you know this from your work. It may not be as logical for others, but there is a big difference between amortized debt over 30 years. Like the reason your mortgage is 4% is over 30 years time. That is what the interest rate would be. If you start making a bunch of lump sum payments, the effective APR will go down every time you make that payment, right? So when people say, this is the cheapest money I'll ever get, I'm like, well, technically not. I could show you how it could be less if you wanted to do that, but let's use it strategically. I'm not saying we got to pay it all the way to zero, but is there a way that we could do this in a little bit more efficient manner?
Well, that's the thing. You're working smarter, not harder.
Mm-hmm.
You're using the tools that you have and taking advantage of those tools to come out smelling a whole lot better off. Because that's why I say equity's great sitting there, but if it's appreciating at 4 or 5%, great.
Yep.
Awesome. But it's not doing you any good when you can be making 10, 12 or greater on what you're doing. And that's the biggest wealth building tool to eliminate the debt aspect of it for you as well.
Totally.
And that line of credit money is going to be cheaper than, paying on a credit card these
100%.
days too.
100%. And the way we use it is because income is cycling through the line. Maybe you have a $20,000 home equity line of credit that we're leveraging this against, but the average daily balance might sit somewhere between 6,000 and 8,000, right? So on that, would you be willing to pay $40 a month in interest on the ability to borrow $4,000 or $5,000 at a time, which might save you more like $20,000 in interest? That's math I do all day long.
Amen to that. Numbers
Yeah.
do not lie. That's what I love about them. They do not lie. There's no emotion in them. They don't lie in a lot of cases, but the results can be very emotional.
Yes.
Now, what's the best way for our listeners out there to learn more about the shred method and you? What's the best way would you like for our folks to go to?
The single best way, Scott, is to go to theshredmethod.com. And on the site, there is a savings calculator. So you can literally plug your numbers in. We do them at kind of a high level raw number. But if you want to get really granular, the best way is to book a 20-minute call with our team. And we will literally go through your numbers and show you in black and white. Here's how much you could save. Here's what this looks like. And then we'll start talking strategy with you. But it could not be more simple, particularly for your listeners if they go and they apply for a HELOC right away. And I will say on our YouTube channel, go to the Shred Method on YouTube. There's a ton of videos out there about the perfect HELOC to get and what to look for, what to ask, those kinds of things. So if someone is intrigued, you could go down a rabbit hole, but I will put this disclaimer out, Scott.
Yeah.
People have called me Morpheus because I'm giving you either the red pill or the blue pill. And if you take the red pill, you cannot unsee it. You will see the matrix everywhere you go. And if you take the blue pill, you'll wake up tomorrow and continue paying your mortgage payment just as normal. But take the red pill. It's quite a ride. And at the end of it, it's financial freedom.
It's definitely something to be said about being the architect of your own life, or being still continuing to be plugged into the matrix. Unplug yourself from the matrix, open your eyes to the opportunities available out there, and definitely check out that. We'll put the links to the YouTube channel and the shredmethod.com is there for you. You've also got a community of folks that are shredders that are doing this on a regular basis, right?
Hundreds and hundreds of people so far. We're pushing 1,000. We'll hit 1,000 next year for sure. But we've had hundreds of people and nearly 100 people have paid their home off entirely.
Wow.
So the amount of interest saved is I believe we're in the either tens or hundreds of millions. Just from how much debt has been paid down or paid off already. But our community is so robust. They'll jump on calls twice a month and cheer each other on and celebrate the wins, big and small. It's pretty awesome.
That's awesome. Love it. Can we have you, would you be willing to come back on to do a more of a detailed, we went through a lot of detail here, but more like, go through the software, go in a step-by-step basis with some, okay. Awesome.
I'd be happy to. Yeah. And awesome. I think that hearing about it is one thing. You can kind of theoreticize it all and internalize what we're saying. But when you see the numbers, you go, oh, I wish someone would have showed me this 5 years ago, or 25 years ago in some people's case.
Exactly. But that's the way to change. If you're not like you said, not like an architect, and there's a lot of folks out there unhappy with their jobs, they're unhappy with their careers, they're unhappy with their current situation. This is one way to make the change there and get you out of a bad situation into a better situation and start, like you said, being the architect of your life.
Yeah, absolutely.
Yeah. Once again, guys, go out, get the book, The Build a Better Life Manifestation. Great book there, guys. Like you said, it's only 70% of a regular book there for you to go do. But go watch that. Check out his YouTube channel there, the shredmethod.com, the website there for you. We'll have Adam back on to do a deep dive on a video going through the numbers so you guys can see it for yourself because numbers don't lie. I love it that you're listening and watch this, but that will have a huge impact to you as well there. So Adam, once again, thank you so much for coming on the show, bud. And
thank you, Scott.
Hey man, you got your sweaters on already up there in Iowa. In Des Moines.
It's cold. I got a basement studio here, man. It's freezing. So yeah, I'm double shirting it today.
So it was still 80. It was 80 some odd degrees this weekend here in Austin.
Oh,
it dropped down to 65, and everybody was wearing like parkas and UGG boots the other day. And I just laughed because I was like, "That's short weather up in that neck of the woods."
that absolutely would be short weather. People would show up in tank tops.
Exactly. Being originally from Minnesota, I grew up in South Texas, but I like the cold, and even up there, it was saying it was unseasonably warm there for the fall and stuff like that for you. So
we're ready.
All right, guys.
It's time.
Yeah, I think everybody's ready for winter. Well, let's make it a productive winter. winner. And if you guys are looking to do something different in 2026, this would be the greatest thing that you guys could do, not only for yourself, but your family and what you want to leave to your family, your future family or kids, stuff like that. Check out the Shred Method and go take some action. That's a big thing. Don't sit on the sidelines. Go take some action. And we'll. Good morning, good afternoon, and good evening, everybody. Hey, welcome to this episode of the podcast. You are in for a treat. And you guys don't know this, but you probably are, one of the great things that we're focused on this series of guests on is helping you overcome those hurdles. And a lot of folks, obviously, as we roll into the new year and we're coming to the end of 2025, but most people have set New Year's resolutions to start diving into the world of real estate investing, dabbling in or starting to be more serious about it. And one of the biggest hurdles I get, especially the last few days, is people they just want to wholesale. And I always ask, well, why do you just want to wholesale? Well, I don't have any money. Well, today's episode is about helping you buy real estate, how to dive in the world of creative financing, how to raise private money, or how to work with private money investors out there. And we've got an expert who's been doing it for just a few years. She calls Georgetown, Texas home, which is just north of us here. But if you're anywhere in the country besides the Lone Star State, you're going to find value. You definitely want to take some notes from today's special guest. Now, she does a variety of things, fix and flips, does some short-term, long-term rentals, a little bit of wholesaling, doing some private lending more so in the next year. Who am I talking about? I'm talking about the Georgetown real estate investment legend, Miss Lisa Ferris, joining us today here. Lisa, how are you doing today, girl?
I'm doing great. Thanks for having me on.
No problem. Now, you do have something we're really excited about as well that's coming out here. We'll get to it in a second, but I want folks to pay special attention. You've got a book coming out, right?
I do.
You want to tell us a little bit about the book and what's so valuable about it, and then we'll dive into more of the meat and potatoes of stuff here.
Okay. The book is about how to find and fund any deal, and basically it's without a cent out of your pocket, because that's the way I've purchased all of my properties is 100% seller financing or private money lending. I just have had so many people talk to me about how do I do it, and that's why I decided to go ahead and write the book to kind of bring to light how easy it is to invest in real estate without any money.
Yeah, and the book is labeled, I've got it up here on the video. If you're listening to the podcast, you'll want to go grab a copy of this. How to find and fund any real estate deal. How to buy real estate without using your own cash or credit. Very valuable. One of probably, that's the thing that people don't realize, that there's so many different opportunities besides just going to a bank and getting a loan, right?
Right. And that's the thing. That's the only way I knew how to do it. And then people are just astounded by that, and I'm like, wow, okay, I think I need to tell my story and tell people how to go ahead and do this.
Yeah. Now, how'd you learn about creative financing? Did you have a mentor? Did you go through YouTube University? You network with people? How'd you kind of develop your craft?
I was broke.
Oh, there you go. Were you sick and tired of being sick and tired, as they say?
Exactly. Well, I've been a realtor for 20 years, and when I was about 10 years in, I had a lady that wanted me to list her POS house, and I really didn't want to. She'd let her kids tear it apart and still live there. And I said, well, this is the most you're going to get for it. And then I said it needs new countertops, floors, and listed the long line of things she needed to be able to sell it. And so she said, would you help me do that? And so as a dumb realtor, I'm like, okay, I'm going to GC your whole renovation for you and still make $3,000. And it just kept gnawing at me. So one day I just said, will you sell it to me? And she said, sure. And I was like, whoa, how am I going to buy this house? I don't have any money. And so I just asked her, I said, would you take payments on it until I can sell it? And she said, sure. And I was like, wow, I'm buying a house. And that one I did wind up flipping or wholesaling anyway, made $17,000 in 3 hours. So I was kind of excited about that and got into it. But to answer your question, what really got me leaning that way, $1,000 Ron LeGrand course.
I'm from the Ron LeGrand investing tree as well. Nothing like as Ron quotes, the smell of shit and piss is the smell of money. You know what I mean? And I don't think there's a better cantankerous educator out there who's probably taught more people across the United States. We used to go to a lot of his events as a mortgage banker back in the day. So it's funny.
Okay.
Yeah.
Yeah. And I'm constantly taking education, but he was my first one that really, I guess the light bulb went off after I went through that class, and gave me the confidence to at least try to make offers and speak to people.
Hmm. Now, you being a realtor, do you think that it helps you or does it hinder you sometimes?
Well, I'll be honest with you. As a realtor in the early days, I had no idea about any of this. And I feel like a lot of realtors don't. They're very clueless until they're not and they figure it out. For me, it's been helpful because I know the markets. I know that 2 blocks over, I'm never going to buy any property there. But, in this area, I definitely will. I know my areas. I know my prices. So when I talk to people, I can just run my numbers real quick in my head and make an offer on the spot. So I do think it's helpful. As far as investors wanting to get their license, I don't know. I think it goes both ways. Do what you're comfortable with.
Amen to that. Now, do you like to focus just there in Georgetown and Central Texas, or do you invest in other parts of the country or state?
We focus a lot in Bell County, Belton Temple, north of Georgetown. We do have one in Sun City right now. We do Central Texas other than Austin. We do not invest in Austin. That's a tough market, and we just don't want to get involved in it. So we've got some in Taylor and Temple and Fort Hood and in those areas.
Well, those areas are growing like crazy. I mean,
They are.
Belton is just, we've got friends that live right across from University of Mary Hardin Baylor, and it's just grown like leaps and bounds and stuff. Like Taylor's growing big. I mean, you look at all these communities are growing leaps and bounds. Good schools, and it's an hour outside of Austin, so it's worth the commute in a lot of cases. You're on the north side compared to because you get a lot more bang for your buck than you would living in here in Austin.
Definitely, yeah. And the properties are easier to find too. And you're right, they are growing. A lot of people are coming to those areas, so it makes it a good investment.
Hmm. Now, what's your kind of bread and butter? I know you've done a couple different things, but as of right now, kind of what is your favorite flavor, or I should favorite flavor? You say that three
That's a
times.
mouthful. Yeah, we like fix and flips right now. Kind of brings in bigger chunks of change, and we enjoy that. We've got the short term and the midterm, and now a co-living, which actually is an unwanted rental. We just couldn't sell it, so I said, okay, put some furniture in it. Let's do a co-living and see how that goes. But fix and flips are the best for us right now. The market's tough. It's hard to find good deals, but just like in 2008, when the going got tough, a lot of people got out of it. And we're looking at that here pretty soon, where a lot of people are going to have to go get a real job, and the diehards are going to be the only ones buying the properties.
Hmm. Especially those that know how to market. You
Yes,
have to really understand the marketing side of the business. Anybody can make money in a market that's going through the roof like we've seen for years, but when you start some adjustments to it, like we see, yeah, you definitely got to learn how to market. What's your kind of favorite niches to target? Probates, foreclosure lists, absentee. What's kind of your favorite aspect of leads for your business?
I get my leads from everywhere. I don't really target a niche. I get a lot of referrals because, as we spoke earlier, I've been a realtor for almost 20 years. So I get a lot of people that call me, past clients, realtors, people that see my marketing. I am all over Facebook. So a lot of it just comes to me as referrals, or, they just thought of me. So we did target probates for a little bit. I think that's a really good one, or tax liens is another good one. And right now we've got 4 flips. So once we get those going, I think we'll have to revisit that and figure out which niche we're going to target again.
Yeah, it totally makes sense there. Now, when you approach somebody, when you see a deal, are you approaching folks especially like a listing that's been around for a while, when it comes to getting owner financing or getting them to sell it to you on terms? What's kind of your strategy for that and approach to people that are distressed or can't sell a property?
Well, a lot of times, the issue, if they're on the market and they have a realtor, that is a really hard thing for me to deal with, because a lot of times the realtor isn't educated. so they kind of become the cog in the wheel, I guess is what you would call it. And you almost have to try to educate them, but they feel like it's a scam. And I had I have a gentleman that had he had purchased like 15 rental properties from me, and then came back years later and said, okay, I'm a tired landlord, I want to sell them. And I explained the seller finance concept to him. And so he has sold every property with seller financing. He's loving it. Well, one of them that we did, the broker stepped in and told her realtor that it was a scam, that we were scamming them. And it was horrible. The realtor left that brokerage, quit, and she was helping her daughter buy this house. They came back later after she was no longer with the broker and said, we really want to buy this house and purchase. But that's what's really hard about the ones that are on the market. The ones that are not on the market, it's easier to educate them and explain. And I typically go in with 3 or 4 different ways that they can liquidate their house, how they can get rid of it, and kind of let them work through what would be the best process for them, or the less painful process for them. I just try to be an educator and listen to what they need.
It almost sounds like an ethics complaint needs to be filed against that broker. It's saying it's illegal or scam. That's horrible.
I know. Yeah, it was horrible.
Just ignorance is a lot out there. If it's not inside that box, it's got to be illegal or a scam. You know what I mean? Now you tease us up with 3 different ways you like to structure. What are those 3 different ways to help somebody sell a house on owner finance?
Well, you always give them a higher offer price, and then you give them a payment amount, never interest rate, nothing like that. And it depends on if you're taking it over subject to as well. So there's a lot of different ways. It really depends. I mean, is it a distressed house? Of course, that's a different way to look at it. Is it a pristine, on the market, no equity house? You address that in a different way as well. But the seller finance, just trying to get in with this little money down. I know they need to have some money to move on, and in some cases they're so upside down that they're not going to have money to walk away with it. But you just try to structure it where it's a win-win, where I can sleep well at night, they're happy, or as happy as they can be, and everybody feels like they've won something.
And I love what you said there, a little higher price than they're offering, and then you sell the payment, not the interest rate.
Correct.
Because that's what a lot of people, but we get so bogged down. Oh, the interest rate, that's not a market. Well, I'm paying you. I'm covering what I are responsible for each month. I'm giving you a little bit more. And what kind of terms are you looking to hold those for 10 years, 5 years, 30 years? What kind of terms on the owner financing side?
I like to do them long term. I've got a couple that are 30-year notes, which is awesome. I love that. I don't like balloons. If it's beyond 5 or 7 years, I'm okay with that. But when it's shorter term, I don't really want to deal with it, because I don't know what the market's going to do. Or that's where a lot of people are hurting right now, is they took loans and it came due, and now they're hurting, scrambling, trying to do a DSCR loan or whatever. And that's where a lot of investors are hurting right now. So the longer term, the better. And you can also offer better terms if they'll do it longer as well, to entice them to do it longer.
Yeah, definitely. And it's not going to stop them from going out and buying another house if they sell a house on owner financing too.
Correct.
We just had Alan Chesker on a couple episodes talking about some of the different way he's doing subs and reps and structuring deals correctly here in Texas, where a lot of people get it wrong. But you also do a lot with private capital, private money. What's your kind of tips without giving away the secret sauce on raising capital and structuring your private investor deals?
Just ask. That's I kid you not. I'll tell you my first deal, and this is in the book. This is my first deal, other than my seller finance that I just did. I had a lady had a listing with me, a good friend of mine. She was my photographer. That's how I started to work with her. Bought and sold several properties with her. She had a house across from UMHB that she was selling. It was paid off. So I knew she was coming into some money. And I had another house under contract for $65,000 in Temple. On the same day, I was due to close on the same day that she was closing on hers. And my partner at the time and I said, oh, well, we could withdraw cash from our credit cards and this and this and this, and we could make it happen. And I said, no, I'm going to talk to, her name's Linnell, good friend. I took Linnell to McDonald's.
Why didn't you dine them there on the Happy Meal, aren't you?
That's right. Treated her to McDonald's, and I just talked to her and I said, would you consider partnering with me on this house as my lender? And I don't say partnering with anybody because they take ownership of the property and want to design it. And I'm like, no, you're the lender. You stay in that lane. But with her, it was my first time asking. And I asked her and she said yes. So that was my first thing. And it's always very nerve-wracking. But what I've come to learn is I'm not asking and I'm not begging for money. I'm offering an opportunity to somebody to make their money start working for them. And that's how I present everything is I have an opportunity to put your money to work. And they'll say, tell me more, or they'll just change the subject. And I know they're not the least bit interested.
Mm-hmm. And that's the thing. A lot of folks out there don't know the opportunities available to them. They think they've got to have a ton of money, you know. Where are you seeing like your dollar amounts coming? 25, 50, 100 grand, 100 plus? Where are you kind of seeing on an average basis for you across the board?
I'm usually right around 200,000-300,000. It's very easy to get if you have a good deal. And that's what I put together, a nice report that looks very good. Several months ago, I had 2 deals and I was scrambling to get financing for it, and I could not get financing for it. And I talked to a real good mentor friend of mine, and he was like, relook at the numbers. And so I did, relooked at them. Neither one of them were deals. So I never did get funding for them. So, you know, if you have a good deal, the money is the easiest part.
Yeah, that's hard though. Sometimes I always joke that, especially newer investors, they fall in love with what I call OTSC syndrome. Oh, that's so cute, you know, and they get emotionally attached to the property. I'm like, no, let the numbers speak for itself in a lot of cases, right? And obviously, you know, market's a little chaotic right now with values and days on market, stuff like that. What's the best way that you found to kind of, okay, let's make sure these numbers work best and go from there?
Well, I use Rehab Valuator. That's my program. I love it, and it doesn't lie. Numbers do not lie. And I have a quick, you know, my quick and easy, I call it quick and dirty numbers to run them real quick. And it's usually pretty accurate, but once you get in there, it's dialed down to the penny, you know, whether it's a good deal or not. So I have to trust that. Sometimes we're okay with a little lesser profit because it's an easy flip or whatever. But yeah, seriously. Also, I want to mention my lenders are just regular people. So they don't know anything about lending. They're not hard money lenders. They're not professional private money lenders. So when I give them these reports, they're just like, wow. That must have taken you hours to do, and it took me like 5 to 10 minutes.
Yeah, I agree. Canva is a powerful tool to make things look nice. But that's a great thing, you know, pulling people from just everyday folks. How are you? I mean, is this coming from your network of contacts over the years, or networking to local real estate clubs, or just talking to people in your neighborhood?
I'm very intentional on Facebook. In fact, I've been doing this for about 10 years and talking about it and doing it. And my brother-in-law called me the other day. First time. I don't ask friends or family ever. Okay. But I'm on Facebook talking about, you know, we sometimes have opportunities and we sometimes let other lenders get in on our opportunities. So he called me the other day and he was like, all right, give me your spiel. I said, what spiel are you talking about? So he's like, the money. So I explained it to him, and they're lending to us this week. So it's just being intentional. I am very intentional, but about being on Facebook. In fact, my daughter and I'll go, we run once a week and do the check on the properties and do this and that. And she'll say, hey, you haven't done a video in a while. All right, let me comb my hair and we'll do a video today.
I love that. We're talking marketing, and marketing, I think, is where everything really, whether you're finding deals or raising capital or closing deals, it all starts with the marketing side of things. And so few investors understand that when they get into investing, it's all about the market. I mean, we all get bogged down in the nuts and bolts of the deal and looking at deals. But if you're not marketing that deal, you're not raising capital, you just don't, if you don't put yourself out there, somebody else is, and they're going to get the money and the deals, right?
Right. And I've had people reach out to me and say, hey, Lisa, I'd like to fund your next deal. And I've been following you and I see what you're doing and I like what you're doing. So I'll have to hustle and go get another deal so they can fund it for me. But they see me, and I'm not a salesperson. I'm not, hey, look at me, come, lend me money. I'm just telling them what I'm doing, showing them what I'm doing, showing my before and afters. I just, gave this person an opportunity. Now they, I'm very intentional about what I do.
Mm-hmm. Now, when it gets into the terms that you're offering your private money investors, where do they kind of fall into?
I used to do 1%, 1 point, and then 10%, but with the interest rate going up, I sweetened it a little bit, and it's usually 1 to 2 and 12%. It just really depends. I had one with Linnell early on that we just rock and rolled on the renovation and got it done a lot quicker than we had anticipated. So paid her an extra point. I want my lenders to want to make money, not, oh yeah, we made a few bucks or whatever. I want them to make good money. We make good money and we just keep rolling. So that's how we work.
Mm-hmm. And how often are you using not only for acquisitions, are you also using maybe for a little bit of long-term stuff, or long-term? I'm talking beyond like 12 months.
Yeah, I've got several long-term. I've got 3 that are 30-year notes. One that's about 5 years. So I've got some that are longer term. Most of my lenders, though, are short-term lenders. And I need to get a few more that are open to longer term lending.
And kind of, you said 1 in 11, 1 in 12. Are you doing that same thing for some of your longer term, or is it a lower interest rate?
It's a lot lower interest rate. And I even had one that was a short-term loan. We were having difficulty selling it. So I talked to the lender and asked him if he would lower his interest rate. And we did a wrap loan to an end buyer who now runs it as a midterm rental. So he's in it for 3 more years, and we were able to wrap it and sell it. So he was working with us on that. So that was a good deal.
That's a win-win right there. Definitely win-win right there.
It is.
What are some of the hiccups that maybe people don't think about when they get into doing creative financing and stuff that you've run into?
As far as being the lender or borrowing?
A little bit of both sometimes.
Well, recently, there's been a rash of borrowers just defaulting. It doesn't work. And for me, if I owe somebody, I owe somebody. I've lost $40,000 on a flip, and that came out of my pocket, not my lenders. And you just don't find, well, I'm not going to say you don't find that integrity. I'm finding a lot that don't have that integrity. In fact, we're suing somebody right now for fraud. They basically got another lender, didn't tell them about my loan, and I thought they were borrowing enough to pay us a payment. We wanted $80,000 back, and that was half of ours. They got a $200,000 loan. So nobody knew about each other, and so anyway, it just blew up. But just finding that you have to be really careful. I think I could have done that a lot better, being more on top of it, seeing what he was doing. I think that that's something that you have to do. Don't just lend your money and then just wait and pray. That's just not the way to do it.
Yeah, that's never a good. That's a recipe for problems. You know what I mean? Wait and pray. Versus being active and communicating and stuff like that's one of the most important things. I mean, we've all had deals that have gone south and stuff like that, but the more communication you can do, the better
I'm working with lenders right now that reach out to me and, hey, how's the market? How's it going? And then throughout the process of the renovation, same thing. They were very active, and I was like, okay, I need to be more active and talk to these people and keep up on it more.
How do you set up like a portal or share with them on a regular basis, kind of the updates and stuff like that for them, or is like Podio or Basecamp or something like that?
No, it's just very casual, text or email back and forth. I have one lender that for the draws, she used SiteWire, and I love that as a lender. As the borrower, not so much, but as a lender, I'll definitely use that in the future, because you have to go out there, take a picture at the spot because it's whatever you call geolocated.
Yeah.
Take a picture of the kitchen as it's being done and the repairs that are done, and then they'll release the draw. And I thought that's perfect.
Are you using it a lot with self-directed IRA investors, or is it more just folks using savings and checkings or retirement accounts on their own?
It's a huge, it varies with everybody. We lend out of our 401k. And a lot of people are doing that now. It's such a smart move to do that.
Yeah, definitely. Now you kind of run the Centex Dealmakers group too as well, don't you?
We do. Mark, my husband, and I run Dealmaker Centex, and it's a different type of group because we were lacking something here in Central Texas, and it's either the happy hour, networking hour, or groups that just have no integrity. And I wanted to bring the Dealmaker integrity and training here. So we bring in people from all over the country to train on everything. And it's topics that aren't talked about here. We're a big fix and flip wholesaler area. We brought in Eddie Speed this year. We talk about notes. We talk about even mobile home investing, RV park, everything, just, private money lending, things like that. And it's a great group of people. It's just really, they've become a family, and we have a lot of fun together.
Well, it's a great thing. You're right. Central Texas has lacked a good group that focuses on the folks showing up, not the educators. You know what I mean?
Right.
We can talk about that later on.
Oh, yeah.
That's a big thing. If you're going to run a networking group, a RIA club, focus on what's going to be best for the students there and answering their questions, not just, we're only going to teach about what we do because we're the founders of the group and stuff like that.
Right.
So we've seen a lot of that as well out there. So
we call it the dog and pony show with the big table in the back. That's what we call those.
So true. So true on that. Where do you've written the book. What was the biggest aha thing that came out from you writing the book?
That's a good one. Let me think about that. I guess just realizing that people didn't know that you could do that. And even the small sentence that I said earlier is I've got an opportunity for you to put your money to work. I tell people that, and they're like, oh, because they're like, I don't want to beg for money from my network or whatever. The other thing is I get all my money from networking with people, reaching out, being intentional, talking to people. I said, go to these meetups. Like we go to Dealmaker Virginia every year without fail. Before I go there, I identify 3 people that I have not met that are huge and going where I want to go. And I make it intentionally go up, shake their hand, talk to them, and introduce myself. Daniel Clayman was there last time. He was one that I targeted. So I always want to speak to these people, and you just never know about that. My daughter went last time and connected with Jim Ingersoll. He's the one who created Dealmaker. She just bought her first flip, 100% financing, and Jim is her lender.
Oh, nice.
So 28 years old, never done a flip. She works with my husband and I, but it was just at a point where Mark and I were getting married in 2 weeks. We were just closing on our 3rd flip, and she brought a really good deal to me. And I said, no. I said, I cannot, my brain cannot do any more. I just cannot do it. She said, I want it. And I said, I'm not going to JV with you because I'll be all up in it. I'll be telling her what to do. So I said, I'm not going to JV it, and you need to go find your own lender. And she went and found her own lender. And it's just from meeting people, talking to people, making an impression. And that's what it's 100% about, is who you know in your network.
That's so true. Jim's a great guy, by the way. I've known him for years, and it's just phenomenal. That's the thing about networking, getting out. Can't be a wallflower. Got to get out and talk to people, communicate. And I think it's one great thing I think a lot of folks are looking for are local places where they can go press the flesh, just get a chance. So we've done so much stuff online and Zoom and stuff like that, that local events and networking events are so valuable. When does the Centex Dealmaker group meet? Where do they meet
We
at?
meet the second Wednesday of every month in Round Rock at, I'll have to think of the name of the restaurant, but I'm going to call it Cantina. I don't know.
That's okay. You can send it to me. We'll put the link in there.
Okay, that sounds
for
good.
everybody there.
And we're having a good Christmas one. We're having a jingle mingle. So we dress up in your best holiday attire, whatever that looks like. It's a lot of fun.
Oh, that's awesome. It's coming out the week after your book is released then, basically, huh?
Yes, it is.
That's exciting. That's definitely exciting stuff. And there's also, for those who are listening outside of Central Texas, there's also different dealmaker meetings in different cities across Texas as well, too, across the country, right?
Correct. There was one dealmaker 3 years ago, and Jim opened it up. We were the third one to bring it to our city, and now there's over 30. So it's really exciting.
Yeah, it's good seeing a growth aspect of that. It just tells you that people are looking for stuff.
Yes,
you know what I mean?
Exactly.
Now, with your realtor experience and years of an investor out there, what's your crystal ball say about 2026, Lisa?
I don't think it's going to crash. I really don't. I think it's making a correction. I think a lot of us purchased way too high, spent way too much money at a point. It's coming back. It's going to correct. We're going to have to adjust. I think prices aren't going to tank, and I don't think it's going to crash. I really do not. That's my thought, whether it's correct or not. But I just don't have that. Remember 2028, that was horrible. I don't know if you were in the market then. I was a realtor. I became a realtor 2 years before that, listing agent 100%, because I didn't want to drive around flaky buyers. So I had like 6 listings, and they all were unrealistic. And I fired all my listings, and I took around buyers for 3 years, and because the prices were so good and you could sell pretty easily. I don't feel like we're going to be in that again. I think we're going to see some good deals. I think we're going to get some good seller financing deals, but I just don't think that it's going to crash.
No, we're seeing a correction, especially in the Central Texas market. A lot of places are going to go through a correction.
Austin is having a rough time, but it went way too high, I think.
Yeah, my next door neighbor across the street here, basically, he bought at the peak, and his home has dropped about 50 grand, about 10%. Yeah. But he bought it. It took him 2 years to get a property, closing on a property. He kept getting outbid, stuff like that.
Oh.
He's going to be in it for 7 to 10 years. He's not looking to flip it. You know what I mean? He's looking for a house, might get an apartment. So it'll come back, and he'll end up, we all know values basically in Central Texas double every 10 years. So,
it'll come back. Just patience.
Exactly. Will. How do people connect with you to get on your investors list or get on your deal list? Therefore, what's the best way folks to reach out to you?
You can reach me on my email. It's lisa@ljepropertysolutions.com, or look us up online. You can find us all over, or I'm all over Facebook. Lisa J. Ferris. Easy to find.
We'll put that linked into the Facebook account. And then the most important thing, how do folks grab a copy of your book?
I don't have a link to it yet. It is going to be on Amazon. We'll be posting the link for it December the 5th. but you can sign up for information. Just email me or message me, and we'll get you put on a list to sign up for updates on that.
Well, she's going to send me the link here, guys. So we did record this just a couple days earlier. So if you go down into the descriptions on the YouTube and the podcast, the link will be there for you. So we'll get that there. You click on that, go order it, download it. You're going to love it. Lots of great quality information. You got somebody who's got decades of experience, who's been through up and down cycles, and has found I think really the holy grail of investing: buying on terms, creative financing, and how to get deals done. You know, when was the last time you got a traditional bank loan on a property, Lisa?
Probably 20 years ago. I'm telling you, the last 10 years, I've never been asked my credit or how much I had in my checking account. And sometimes it's a good thing, because I might have a cup of coffee, enough to buy a cup of coffee, but
but that's the thing. You're putting your money to work. I think real estate investors all do that. A lot of times we're property rich and cash poor, but it doesn't mean we're not closing deals. We're not letting, I think it's the number one lesson that people need to hear. Don't let what's in your checking, savings, retirement account stop you from going out investing. Go get Lisa's book, go read it, go follow her. There's so many different ways to, make a deal happen without having to go through bank financing. So,
well, thanks for having me on, Scott. I really appreciate it.
No problem. Did a great job, everybody. This is her first podcast. So she did a tremendous job. She was a little nervous about it beforehand, but she did great. Just two people talking real estate investing out there. So good job, Lisa. Once again, everybody, hey, go out, take some action, get a copy of her book, go connect with her. Go make sure you subscribe to the podcast and leave a 5-star review. We love to see that, as always, and go share it with somebody else out there. But go out, most importantly, if you want to take action and you want 2026 to be differently than 2025, go start making deals happen. Go network, get out, quit being a wallflower, quit being an introvert, and go get things done. Become a deal maker, and we'll see you at the top, everybody. Bye.
Bye.
Good morning, good afternoon, and good evening, everybody. Hey, welcome to this episode of the Note Closure Show. As always, Scott Clarkson, excited to be here today. Today's episode might be a little brash, but it's something I've been getting a lot of questions about, especially after some folks have been seeing some of the case studies videos from some of our successful one-on-one coaching students. And this episode is just to talk about our one-on-one coaching and why our one-on-one note coaching is the best in the industry. Now, I know it sounds a little bravado, talking about being the best in the industry, but I'm a big believer the proof is in the pudding. All right. And look, I know there's people out there that have different training programs, and some people tell you that you're too small, that banks won't work with you. But let's just talk about our program, our one-on-one coaching, why it's so awesome and why our students have success, because that should be first and foremost the number one determining factor when it comes to working with a coach. And I don't care if it's note investing, fix and flipping, wholesaling, whatever. Who is actually walking the walk and helping people close deals? That's the first one. And that's why we're all about we close notes. Not we talk notes or we want notes. We close notes. All right. And this goes back to when I got started as a note investor and working out of Bob Leonetti's office, doing mortgages and taking workshops and other educational stuff home at night, because I was exposed to so many amazing teachers, and having Jamie Kayla and Bob Leonetti basically hold my hand and be an apprenticeship with them, learning in the ins out of the note business and learning marketing from Roland Frazier, who's one of the smartest marketing minds out there. I knew I was very lucky. Now, most of us aren't going to be able to take a 4-year apprenticeship to get the ball rolling. I'm a big believer, first and foremost, and this is different from other people. Other people tell you, oh, there's not a lot of notes out there. You got to go through me. I'm a big believer that there are plenty of opportunities out there. There are plenty of notes if you're willing to market, if you're willing to reach out on LinkedIn, email blast, pick up the phone, those things. There's plenty of deals if you're willing to market. A lot of people are not willing to market. They want to be spoon-fed. So you're left with what that educator wants to feed you. And most of the time, what we have seen, 90% of the time, it's been shit. It's been a list that they've already cherry-picked for the good stuff, and they're leaving you to fight over the crumbs or the crappy assets or the stuff like that. Or They're not telling you specifically, because I've seen this. I've seen this from other people where they're selling you something and they're overselling it. They're charging 10, 20, 30, 40 grand above what they're doing. And not only are they making money on the coaching side, they're making a huge amount on the asset side. That's not what we do. When somebody comes aboard our one-on-one coaching program, first and foremost, they're not working with another employee. They're working with me directly. I'm holding your hand. All right. And I'm going to get you deals to pay back what you're paying for the coaching. No, I'm not going to jack up that asset by 10, 20, 30, 40 grand above what I would pay for it. I'm going to get you the rock bottom price because I want you to make money back. Okay. Your investment in my coaching program is having me invest my time into helping you find success. All right. And it's not talk to you for 6 weeks, see you later, sayonara, see you once or twice a year. No. It's designed to help you have me on your team. Some people talk about a power team, but when you have somebody who's closed thousands of deals and helped hundreds and hundreds of other note investors close on their first 1, 2, 3, 20 deals, that's a lot of expertise to have as your safety net, as somebody who's going to help you find deals or keep in mind of tools or resources for you to go make offers on, or other hedge funds or other tapes that come into me that I can feed to you to make offers on. Nobody else does that. Ladies and gentlemen, nobody does that. All right. That's because I have the mentality there's plenty of deal flow going on out there. So the whole finding deals, really the first column in being a note investor is being able to find deals, not just talk notes, but let's get you closing on some notes. Okay. The second aspect of it is helping you raise private capital, helping you avoid mistakes that I've made in my 20-year history to raise capital from private investors, to put you in the right rooms with the right people, or using the right tactics and tools for you to raise capital or to put your capital together, or leveraging with other people's, the pitch decks, the questions, the what to say, what not to say, and helping you hold your hand through that process. What do you say to get investors excited? And the proof is in the pudding with that as well. When you look at our successful coaching students who are closing on notes with other people's money, or they're raising millions in private capital from using the tools that we help provide them, the hand-holding, the forms, the pitch decks, the questionnaires, the customized case studies. Those are all there. Now, some people would say that I'm creating my own competition. I don't feel that way. Never felt that way that I'm creating competition, because you can't replace me. All right. People have imitated some things, but they're just not around long term. And we've been around for almost 20 years actually over 20 years as a real estate investor. And it's hard to believe over 15 years as a note investor. And we helped up hundreds and hundreds and hundreds of people buy notes, whether it's performing stuff or non-performing stuff or reperforming stuff, or using the note systems and the marketing we use to help them find foreclosures or REOs they can take down. We're very, very proud of that. Okay. So finding deals and being direct to bank asset managers, whether they're sending you tapes, they're sending you lists that you don't have to go through somebody else. You're going to get a rock bottom price. Heck, most of the time we're saving our investors even better pricing because we know the sellers directly, or we have a relationship, and we're making those introductions to hedge funds. We're also giving you a list of asset managers for you to reach out to, banks, servicing companies, hedge funds. We want to give you access. Now, that doesn't come free. All right. Helping you raise capital doesn't come free, but we're not sitting here charging an armlet. I've heard people getting charged $50,000 for coaching programs and they've never closed on a deal. All right. And that's unfortunate. We don't have some sort of copper level, silver level, gold, titanium level. That's great. We have one program, one coaching program with me. And here's how it works. All right. Once you've gone through our 3-day course, our Note Buying for Dummies workshop, whether you watched it live or gone through the replays, then you can be a part of our coaching program. And that's 10 weeks of coaching calls. That's weekly coaching calls with yours truly, either morning, afternoon, or even sometimes it's twice a week, depending on what you're bidding on. We're going to find deals for you to bid on. That's the magic of it. We're going to help spend time putting deals in front of you with direct pricing, making direct relationships with our hedge fund managers so that you can make offers and find deals. All right. I just spent the last couple of days with a couple guys up in Dallas. They're doing well. We literally got rock bottom pricing on about 40 assets. I think they're going to make offers on probably 4, where the average is somewhere between $40,000 to $60,000 on those notes to them. Okay. They've also got some other chunks, some performing stuff that's be yielding at a 12 to 14 yield on some of these performing notes. They just have to decide which ones they want to go after with their funds that they have and the funds that they're raising. Okay. All right. So during those 10 weeks, and it's completely customizable for each, because everybody's got different strengths. Some people are more strengths on the deal numbers. Others have more strength on the raising capital. They need to go find deals, vice versa. Some people are starting off brand new, as doing real estate investors. And with that, that's a little bit more hand-holding aspect on the front end. But our goal is to get you making offers in the first 30 days. And we've been very successful, whereas the majority of our one-on-one coaching students are closing on deals in the first 90 days. All right. Sterling James closed on a deal in his first 30 days. It yielded a 28% cash and cash return to him. John and Veronica Gore bought 5 notes in their first 30 days and 20 deals in their first 6 months. Okay. Phil Brodeur closed on about 5 deals in his first 30 to 60 days, closed on about 20 notes, over 6 figures. Cal Ewings closed on about 16, 17 notes in his first year and just closed on his first 6-figure deal 2+ years after coaching. But we're still holding hand. That's one thing, too, that you will not get with other people. You'll be able to have direct communication with me via cell phone, via email, via text. We are here to help you achieve success. And you're not going to get everybody else on the phone. You're not going to be able to have a text message communication with somebody directly to help you determine if this is a deal or a dud. We just had a conversation with another student who's making an offer, and it's too skinny a deal. He's all excited, got a deal accepted, but his offer is still too skinny a deal based on what his money costs are going to be. And that's another thing. Having this idea to avoid you doing bad deals, to avoid going down and buying stuff in places you shouldn't buy. But you know what? Sometimes that's going to happen. Sometimes you're going to have crap happen, and having somebody there to hold your hand and say, okay, let's get through it this way. Let's turn this lemon of a deal into lemonade and help you get across the board. Let's avoid this because of A, B, and C, because I've had that happen, or buy here because of this opportunity. Ladies and gentlemen, we want you to close deals. I want you to be a successful note investor. There's plenty of opportunity. There's not enough of us out there. But I'm also going to give you and shoot it to you straight. I'm not going to sit here and blow smoke up your ass and tell you how awesome you are. I'm going to hold you accountable to getting things done. And yes, there will be homework in this 10 weeks of coaching calls, things that you need to do, things you need to put in place. And then after the 10 weeks, then guess what? You get to come spend 2 days with me one-on-one here in Austin. During the week, during the weekend, we'll work around your schedule to make it work so that you can come in, spend 2 days with me. And really, if you thought 10 weeks is a great time to get rocking on, spend 2 days with yours truly is going to be like drinking from a fire hydrant as well. More assets, more connections, more marketing, more money, ultimately leading you to be able to be a lean, mean note buying machine and making more money. We want you to close deals. We want you to make money. I want you to make back your investment in my coaching program as soon as possible. And that's why we work so hard to find you good deals, help you raise capital, put you in rooms or relationships or conversations with those out there so that you are not beholden to somebody else. You're not trying to bid at a foreclosure auction, but you're getting lists of notes in that you can make offers on that can put double-digit returns and higher into your hip national bank, whether you want to put your IRA to work in making double-digit returns or you're using other people's money to make double-digit returns, not only so that you can make money, but your investors can make money. We are here to help you. Now, our coaching program is a bit of investment, but we are here to help you get those things rock and roll. We have a couple of different options for you. Our one-on-one coaching is $25,000. That's if you want to spread it over payments, it's $25,000. If you want to make payments for a few months, we'll spread the for. If you want to do a pay in full in 30 days, we'll drop that price from 25 down to an even 20,000 for you. It's going to be paid in full in 30 days. If it goes beyond 30 days, then it goes back to the 25. But we're also understand that people are needing opportunities and adjustments right now. So we do have payment plans that are flexible with every budget. All right. We do have opportunities for you to finance this through a third party. And the third party is if you're making more than 40 grand a year, have a 620 FICO or greater, they can split that payment up, that investment up of 25 grand over 24 to 36 months with no prepayment penalty. The interest rate will vary depending on the individual, but there's no payment for the first 30 days. So you can actually already be 4 weeks into our coaching program before you got to make a payment. And if you're going to go that route, we're going to work to find you a note that you can take down that's performing that can pay off that monthly payment. Like I said, no prepayment penalty. So whether it's focusing on an asset you can make quick bucks at a foreclosure, or a performing or non-performing note you can get reperforming, or buying a performing note, it all varies on the individual. But we're here to help you. So like I said, A, you make payment plan, B, pay in full, C, we can go through the third party. 3 different ways. If you're wanting to do this, ladies and gentlemen, we're here to help you. And, you know, we want to be your number one, because we are already the number one recommended coaching in class when it comes to non-performing notes out here. Let's help you take it to that next level. Let's help you close some deals. Let's not help you not talk about being a note investor, but actually becoming a true note investor in 2025. Look, we've got half the year roughly left. It's hard to believe that as I'm recording this, we're coming to the end of June. There's still a lot of opportunity available for you to get diving in. We're seeing more deals on residential or commercial. Commercial is something you're enjoying. We can do that as well. But let's talk. Don't let your fears stop you from taking action. I hear people all the time that wish they'd have done more back in 2010 when we had the Great Recession. Well, it's not going to be as bad, but we're still seeing plenty of opportunities. So take action now. Reach out to me directly at talkwithscottcarson.com. Let's book a phone call. Let's start a conversation. I'll ask you where you're at. It may not be for you. Maybe you just need to do the 3-day class. But if you're very serious about doing this and putting some lazy asses to work, let's talk. All right. Once again, go to talkwithscottcarson.com. That'll take you directly to my calendar, or you can text message me directly at 512-585-3810. Once again, that number is 512-585-3810. Let's have a conversation. Let's see if you're a fit. And let's start take that first steps to get you on that path to success. Thank you for listening. Have a great day, everybody, and we'll see you at the top. Bye. Hey, note investors. So you want to dive into the world of note investing, but know how to get started, or you don't want to pay $30,000, $40,000, $50,000 for a one-on-one coaching program that just completely does not deliver the deals or the funding or the access that you need to take your note business to the next level. That's why we have our one-on-one coaching program. I'm Scott Carson. I've been buying notes for 20 years. I've helped thousands of investors buy their first note direct from banks using either their own funds or other people's money to buy non-performing, reperforming, or performing notes, yielding them an above average return. Now, what's involved with my one-on-one coaching program? It's unlike anybody else's, because guess what? You're working with yours truly, not some paid student, not looking at some recycled list of stuff. Now, what we do is differently than anybody else out there, and that's why we have such a huge success rate with our one-on-one coaching program. What's involved? Well, once you take in our 3-day class, our Note Buying for Dummies workshop, sign up for our coaching. You get 10 weeks of one-on-one coaching calls. These are on Zoom in the morning, the afternoon, the evening. What works best around your work schedule? We accommodate this to help you start looking at stuff. And during those 10 weeks, we focus on finding deals, making offers, getting your website, your social media stuff set up so that you are a lean, mean note buying machine. After spending 10 weeks of Zoom calls with yours truly, that's right, live, not somebody else, we'll spend 2 days one-on-one. And usually people come to Austin, Texas to hang out with us on a Thursday, Friday, or Saturday, Sunday. And those 2 days are focused on whatever you are still lacking and need the most amount of work on. Sometimes it's making offers. Like Larry came in, we made 50 offers that he got 20 approved in a weekend. Other people came in to raise capital. So we helped them find IRA investors to fund their deals so they're able to raise hundreds of thousands, if not millions of dollars for their note deals and other investing stuff. We're also going to give you a list of asset manager contacts for you guys to dive into. That's right. This will be either LinkedIn profiles, emails, phone numbers, names, all for you to start reaching out to people. No, you don't need to buy notes directly from me. We're going to show you how to go to banks and contact them directly. We're also going to make introductions to our top 12 hedge fund managers that send us deals on a weekly or monthly basis. That's right. You go straight to the front of the line. And guess what? There's no 10, 20, or 30,000 upcharge for the deal. You buy direct from the hedge funds because we make the introduction. That's why, why do we do this? Because we know, not we believe, we know there are more than enough deals to go around. And yes, we make most of our money from buying note deals for ourselves. Some people will say, oh, you're creating competition. No, because there's plenty to go around. All right. We're also going to give you a 1-year membership to our WCN membership for 1 year. That's $97 a month usually. That's going to allow for you to continue support weekly coaching calls along with access to our Basecamp group for other things, other tapes, other resources for our coaching students. We're going to help you with raising private capital, putting your pitch deck together, putting sample deals together, or either case studies that we've done, other students have done, or that you're doing, so that you help raise capital or help you find IRA investors in your local market or the markets you're looking to buy in. You're going to also, basically, for you plus your partner, spouse, person you're going through this with, you're going to have VIP access to me. That's right. Whether you need to jump on a quick phone call, a text message, a quick Zoom call to go through tapes or notes that you're making offers on for us to review your bids, or to help answer a question when it comes to loss mitigation, foreclosure, bankruptcy, whatever it might be about a deal you're working through, get VIP access to me most of the time. Come on now, everybody. We're also going to do a 6-month follow-up day after you spend 2 days with me. 6 months later, if you want to, we can do a half day, a full day Zoom follow-up just to see where you're at, what are you dealing with, where you're looking to go. Because within 6 months, you should have already closed on several deals the way that we teach them, because we will help you find your first deal and then some. We've had students who've closed on their first deal in 30 days. We've got others who've closed on 6 deals in their first 35 days. Other people have closed on 100 deals in their first year. We're here to help you, because guess what, ladies and gentlemen? There is plenty of inventory out there. We're not going to focus on owner finance notes. We're going to focus on how to get people calling you with their deals, or how to get banks sending you lists on a regular basis that you can cherry pick and show you how to raise all the capital that you need. Our one-on-one coaching program is the most complete program out there. That's why you have such a high success rate. And it's cheaper than most of the others out there. And we also give you the biggest bang for the buck by helping you make the introductions, looking at the tapes, helping you bid if you're coachable. Now, not everybody's coachable. Not everybody can afford this, but what we can do is we can set up payment plans and different options for you. I encourage you to either book a phone call with me at talkwithscottcarson.com, and we can talk about it, see if you're a fit. Not everybody's a fit, and that's A-okay. But go to talkwithscottcarson.com, book a call on my schedule, and we'll gladly talk about our one-on-one note coaching program to see if you're a fit. One of the very requirements is we do require people to go through our 3-day class, but that whatever you've paid for that 3-day class is applied to the tuition for your one-on-one coaching. And we also have a third-party provider who's willing to finance this and carry financing for 2 to 3 years to help you pay it off. But we're going to work with you until you get your first deal closed. We want to help you make your money back in the first 6 months, if not sooner. So check us out. Pick up the phone. Give me a phone call. Talkwithscottcarson.com. That's talkwithscottcarson.com. Book a call, and let's see if you're fit to take your business next level. Sometimes all we need is just a hand up to take you to the next step, to show you the way. This is not a blow smoke up your tail, give you the crappy tapes left over, or upcharge you $10,000, $15,000, $20,000 per asset. No, we want you to buy direct, and we've always found if you can show a man how to fish, you'll feed him for a lifetime. So let's get started, you being a note investor for the rest of your investing lifetime.